their feet. Demand falls in February, so that's from February, I should say. So those numbers a little bit lighter in Europe. 10-year yields down 4 basis points today. I can tell you in the past 5 days, there has been a continual momentum down in yield on the bond market, down by over 20 basis points at one juncture. Crude is down by 0.25%. So that's the state of play across the assets. One stock to watch, we've touched on it a few times, it is Disney. The shares are under pressure, posting fewer than estimated subscribers on the Disney Plus streaming service. We've already had a conversation, Abby, haven't we, where it seems to be about the parks business also under pressure.
Yeah, that's exactly it, because that parks business really the reliable cash cow, and now there's some concern that growth for the current quarter, because it's basically flat, investors concerned, worried that maybe there's going to be some sort of an issue there. Relative to the stock, you can see that it's really plunging, down 8.5%. Its worst day since last year. At the lows, though, this morning, just moments ago, down 9.3%, the worst day since November of 2022. So investors really concerned again, despite the fact that they did beat profits, there was a small revenue miss. When you put it all together, they raised the fiscal year profit view from 20% growth to 25% growth. The street looking for 0.5%, so a small miss there. To your point again on parks, the growth is expected to moderate. The small subscriber miss for a stock that was up 20 to the earnings report, Manus, up 5%, really suggesting that investors were looking for just a clean quarter and guide across the board. They didn't receive that. This stock now, again, down 8% on the morning. Yeah,
pretty brutal. Abby, thank you very much. Let's turn our attention to the software market. Palantir falling after investors were unimpressed, to say the least, by the company's outlook for its annual sales. The stock has tripled this year into the numbers. That's some context for us, Alex, isn't it?
It is, Manus. Well, unimpressed is definitely an understatement when it comes to this report. The company actually did deliver on earnings, but it didn't deliver on guidance. That likely explains the downswing that we're seeing this morning. Shares down about 11%. That's the worst since November 2022. And the company, co-founded by Peter Thiel, is one of the emblems of the AI frenzy that's helped shares surge more than 200% in the past 12 months and about 15% in the 4 trading sessions leading up to the results. But investors were unimpressed by the outlook for annual sales. It nudged up its annual revenue forecast slightly higher to a range of $2.68 billion to $2.69 billion. That is roughly in line with Wall Street forecasts. This reaction, Manus, is a testament to how high the stakes are for companies to deliver on their AI promises. And it's not just about what companies have shown so far, but what they see for the future. And it's really been a theme this quarter. More than 80% of companies have beat earnings this quarter, but we're getting the worst same-day earnings reaction since the end of 2020, and that is attributed to these disappointing outlooks. William Blair says that Palantir is down because of the sharp deceleration in U.S. commercial revenue growth. That's a focus for investors because of the AI push, Manus.
Okay, well, certainly a double-digit loss on the ticker at the moment. Alex, thank you very much. Turn over to EVs. Now, Lucid revealing wider than expected losses to the start of the year. This is as the company contends with production challenges and an uneven roadmap for demand. Katie, just put the two together. This is a bit of a slap down by over 9% of the open.
Yeah, and you really are seeing that pain reflected in the shares, like you said. Let's get into some of the numbers here, because Lucid, it posted an adjusted loss of about 30 cents per share in the first quarter. Analysts had been expecting a loss of 25 cents a share, so clearly a bigger loss than expected. Revenue of about 173 million. That was above expectations. Clearly, that is not the focus this morning. And like you said, Lucid really trying to overcome production hurdles and at the same time sagging consumer demand for EVs. It recently secured about a $1 billion cash injection from a Saudi investor. So maybe that will continue to or start to bear fruit, because Lucid said that it still expects to make about 9,000 vehicles this year. That is reaffirming their earlier forecast. But you take a look at what Bloomberg Intelligence has to say, and their view is that Lucid's Air sedan could, quote, keep dragging on profits, while production increases planned for this year could hurt margins in the second half. You add it all together, shares down about 8% almost at the moment, lower by about 33% in 2024. Just to give you some context, Manus, that is even more than Tesla's year-to-date loss.
Okay, Katie, thank you very much. Katie Greifeld there. Turning to tech. Apple has been developing a homegrown chip to run AI tools in the data centers. That's according to the Wall Street Journal. Alex Webb is with me now. I mean, they're all trying to come up with a solution where they may not be so inextricably linked to NVIDIA. I'm talking about a lot of these players in the Mag 7. But talk me through what Apple are doing and whether it will come to fruition according to the story.
Yeah, so the Wall Street Journal is reporting that they are working on this product. We don't yet quite know what stage of development it is, whether it actually will ultimately be produced, but it is something, these chips geared towards AI, presumably accelerators. Every big tech company is working on them right now, and Microsoft, Google, Meta, and Amazon even. Now, part of that, one suspects, is that yes, it will help them build chipsets that are finely tuned to their needs, their precise needs, what they want to do. But also, NVIDIA right now, which is really the only game in town, has a huge amount of pricing power. What we've seen over the past 12 months with the huge acceleration in NVIDIA shares is not just that they're selling more chips, but they are selling the chips they can for more money. And so if you are an Apple, you're probably going to be looking for a little bit of pricing power.
Okay, Alex, thank you very much, tracking the Apple chip story. Our next guest, pretty much ahead of the pack, making Apple his top pick. That was late April, and he wrote this, that the company has a rich catalyst path with defensive cash flows, to say the least. Wamsi Mohan joins me now, senior IT hardware analyst over at BofA Securities. Your price target is $230. What goes through my mind as they announced the biggest buyback in the history of American equity? Are they on defense or offense on the payouts and buybacks? Wamsi, good morning.
Good morning. Thanks for having me. Yeah, I think this is sort of par for the course is the way I would phrase it, right? Like if you think about what Apple has been doing, they've been very consistent and opportunistic in their buybacks. Over time, their buyback program has been extremely successful. And it helps, of course, as the stock is up to the right. But when you look at sort of the magnitude of what we're talking about, the $110 billion, right, and Wall Street was largely expecting, we were expecting $90 billion, it just shows the confidence in the cash flows. And this is what we meant by saying there is a defensive moat around the story in terms of continued earnings power and continued cash generation, such that they can keep this level and pace of buybacks, which are just astounding, ongoing. And that confidence in cash flows is really coming because they do have this potential to really tap into a lot of markets that are not on people's horizons today, right? When you think about healthcare market, for instance, or you think about the advertising market, there are just these huge TAM opportunities that are ahead of Apple still, and everyone's very fixated on the quarterly numbers of the iPhone. I think it's time to step back and really take assessment of what are the long-term opportunities for growth, and those are some really huge potential TAMs.
Okay.
And we just, your prior guest was talking about the AI server chip market. That's another potential large market, right? So there are a lot of untapped markets for cash flows.
Well, I mean, what goes through my mind is, of course, are they the good guardians of capital? In other words, returning it in the form of share buyback relative to perhaps the perception is in other Mag 7 stocks that you're squandering it on moonshot ideas. So this is about governance and I would say prudence over capital. When it comes to innovation, Apple, I mean, they create products that we never knew that we ever wanted or needed. We've gone into the Gobi Desert, as it were, of innovation. We're in the desert at the moment. So where do you think their biggest bets will be on the innovation that we don't quite know that we needed yet? You've mentioned health and you've mentioned chips. As you look towards these big reveals later in the year, where do you think the biggest reveal could come?
Yeah, I would sort of look at innovation a little bit differently, right? And yes, I mean, an iPhone 15 versus iPhone 14, incremental for sure, right? But at the same time, when you look at an iPhone 11 versus iPhone 15, that's the order of magnitude improvement in camera quality, in microphone and speakers, in audio and spatial audio. So innovation is well and alive. It's not completely obvious on the surface of it. We think that a lot of the innovation actually is beneath the surface, right? And when you think about that, that's really, it comes down to their silicon innovation. And they've been designing more and more and more chips that are tailored to their needs, whether it be for spatial video, whether it's all the new chips they put in the Vision Pro, right? So there's this silicon innovation, and that takes time. It takes consistency. It takes 4 or 5 year cycles. So what we're talking about at Apple really is a vision into the future where they're currently working on projects that are 5 or 10 years out. That is the level of cadence you need for a company that's churning out, 250 million iPhones a year, right? So when you think about the next step really around innovation, what we think is that generative AI is going to be a huge catalyst. And why is that? It's because, not only do they have leading edge technology in silicon, they're going to embed more and more of that compute density locally. They have the best data on the planet about anyone sitting on device. So it fits Tim Cook's perspective on privacy, where nothing has to leave the device, but at the same time, you're able to really monetize that at 2 levels. One, from giving you a very good hardware experience on device, and secondarily, by enabling developers to really tap into this hardware and then monetizing it at the services layer. So we think this is a multi-step opportunity for in generative AI that's going to be a huge next catalyst for Apple.
Okay, well, I mean, we have the big reveal on the iPad. I don't think that's going to be the transformative moment in sales and volume, but it will be a mini curtain raiser. Can I just square off China? Many people come in here and they go, Wedbush Securities being one of them, Dan Ives going, he's an evangelist, he's a sinophile, the worst is past, and there will be better times ahead. You would also concur and say that the China woes are unfounded, but I would put it to you, we've got the same set of risks in China. The risk parameters in China have not changed, so what gives you the confidence to say that China, the concerns are unfounded?
So I think that we have to put the China concerns in context, right? When you look at China, it is still a ginormous market from a demand opportunity standpoint. You still have a lot of the middle class that is coming up in tier 2, 3, 4 cities where the amount of spending power is increasing. And if you think about Apple actually grew units in mainland China. Not in greater China, but they did in mainland China. And that is despite facing some tougher compares from a year ago and 3 points of currency headwind. So when you dissect all the numbers, the iPhone franchise in China is alive and kicking. Has Huawei taken some share recently? Yes. I mean, Apple has had free reign of the China market for 4 years when the U.S. put restrictions, and clearly Apple capitalized on that. Is there going to be some period of give back? Yes, there can be some period of give back. Does it mean that this is structural? No, we don't think that means it's structural. Apple will continue to innovate. We're not seeing a mix down even in China. Yes, there was some promotional activity, and every company does that at cyclical times of need, and so did they. And so when we put this into context, we think that longer term, this is a big opportunity, continues to be a big opportunity for Apple. We think that, again, like when you have a device that is capable of doing things truly to improve productivity, like the iPhone can when generative AI features are embedded in it, we do think that the China market and China consumers will embrace that. Form factor change has not been something that has happened recently. China consumers love that. We think Apple's going to do a foldable over the next several years, and that's going to drive increased interest in an upgrade cycle too. So it's just that I think people tend to look at it from a very static standpoint, whereas Apple is innovating behind the scenes and coming up with interesting technologies that will capture the fascination, we think, of Chinese consumers, apart from the global consumer base.
Okay, well, you made the call, Wamsi, and the stock certainly has responded after that buyback and the shift in the narrative. Wamsi Mohan over at Bank of America Securities. Breaking news on international paper now. A deal may be in the offing. Abby, what are the details?
Indeed, Manus, we do have breaking news. Reuters reporting that Suzana, the Brazilian biodegradable company, they consider themselves a bioeconomy company, has made a $15 billion takeover offer that equates to $42 per share. So international paper moving up toward those levels. At the high, international paper had been at 41.30 at that point, heading to its best day since March of 2020. Making this news perhaps more serious or more credible is the fact that the shares of Suzano right now down nearly 6%, heading to their worst day since December 13th, 2022, Manus.
Okay, Abby, thank you very much. Breaking news headline there. We bring that to you. Coming up, UBS returns to profit.
Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute.
We discuss the bank's latest earnings release right here on Bloomberg, where context matters.
On season 2 of The Circuit, we're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Me too! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass. That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Earnings season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead just coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been?
Better than what the street was expecting. Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Very good progress on our integration plans, but also it was great to see a very strong return on to profitability, both on a reported basis, but also very strong underlying profits. We also see a good momentum with clients, with inflows across our businesses, and our capital is strong, so allowing us to continue to pursue our capital return plans. Actually, it's a good momentum. You may remember in the fourth quarter, we also had a very strong performance in banking. As we integrate the new colleagues from Credit Suisse on our platform, we start to see the pipeline developing. We are able to execute. And so it's very much aligned with our expectations of improving the mix between our markets business and our banking business in the investment bank.
UBS returns to profit after its rescue of Credit Suisse. The move reversing 2 loss-making quarters thanks to the strong performance in managing wealth and investment banking. Tom Metcalf is with me. So the lean into FX over rates didn't injure them, but the real growth, Amati says, came here in the US and in Asia. Tom, good morning.
Hey, good morning. Yes, very strong quarter for UBS. You can see that in the shares. I think they're up about 9% at the moment. As you say, lots of growth areas, pretty much a clean bill of health. And, profit really trumping those estimates from analysts. I think one thing to keep in mind is some of this is accounting driven relating to this integration of Credit Suisse. So their legacy unit did very well this quarter. That's not necessarily sort of sustainable quarter in, quarter out. But by and large, shareholders will be very happy with this and the sense that UBS is sort of moving ahead, integrating Credit Suisse and finding ways to bring in more clients.
They are indeed, and they're already, the big debate is the amount of extra capital that the regulators, pressured by the government, they're going to make. And he's saying we've already started adding about $20 billion in capital, and it's too soon to jump to conclusions. But of course, everybody salivates, especially on bond desks, about the size of their bonus. We're now at the end, we're midway through second quarter, and it's going to be the traditional, as it were, people at the table: bonds, equities, fixed income, investment bankers. Who's going to get the best bonus, Tom? How's it shaping up?
Yeah, some really interesting data from a report looking very early at 2024 bonuses. And, if I could switch jobs, it looks like I should become a debt underwriter, because they are up something like, or thinking they get bonuses up about a quarter at the high end of things. So very strong performance there. As you say, the bond traders there or thereabouts, 15% or so. One of the things that caught my eye was actually the investment bankers. We're seeing deals come back, but because they're on a bit of a lag, because those deals take a while to actually complete, even though we're getting all these positive headlines, this report, at least from Johnson Associates, is saying their bonuses will be so-so this year.
Okay, Tom, thank you very much. Tom Metcalf there on the very latest thinking for UBS and your bonus. Coming up, sector price action for the morning. Let's get across to Abby.
So a few interesting things going on, Manus. First of all, we have the S&P 500 up slightly, up 0.1%, but that means the S&P 500 is up for a 4th day in a row, the longest winning streak since March 21st, and that's right before we started to see the weakness. So the bulls, the near-term dip buyers, trying to take out the sellers. It hasn't happened yet, but you can also see it's on breadth. Consumer staples up 1%, real estate up 0.9%. A lot of sectors higher today. To the downside, tech and discretionary, but down ever so slightly, down to a greater degree, and I'm not entirely sure what's behind this. The NASDAQ Golden Dragon Index today is down more than, it had been down more than 2%, right now down about 1.9%. This may be after a period of strength, a little bit of selling there for some of those China tech ADRs, Manus.
Okay, Abby, thank you very much. Coming up on the show, market moving events to set your clock by. The Trading Diary on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that.
Force is strong, the Fed is with you. That's the narrative in the market. This is 5 days that changed the bond market's thinking. We're down by 23 basis points. It's the same right the way across the curve. Part of that bond market repricing is transferred into a quasi-floor on the equity market. You get some pretty big moves in the equity market this morning. We're putting in a firmer footing across the board, flat on the NASDAQ. The Russell, again, playing into this narrative that you will potentially get rate cuts. One stock to keep an eye on is Disney. It's not so much the subscriber base. That's where the market first hung its hat on this morning. It's about the reality of what it costs you to go to Disney in the United States of America relative to Asia and relative to France. The stock is down there, as you can see, by over 8%. Let's get you set up for your day ahead. This is what you need to know for your trading diary. We've got the Minneapolis Fed President, Neil Kashkari, joining the team, 11:30 a.m. Eastern Time. And then it is all about the bond auctions. As I say, $58 billion of threes. That's at 1 p.m. They turned up in size for the 6-month and 3-month bills yesterday. Uber earnings on Wednesday. Fed speak, more of it on the same day. Jefferson, Collins, and Cook on Thursday. And finally, the Bank of England, the rate decision, that hits the tape. That was countdown to the open from New York right here on Bloomberg. All the volatility and all the flow. Good morning.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of I guess the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
We are 30 minutes into the U.S. trading day on this Tuesday, May 7th. Here are the top stories we're following. Disney shares sink even as streaming losses narrow, with traders zeroing in on the company's subscriber miss and a weaker than hoped profit outlook. We'll discuss. Apple's iPad refresh will bring you the latest from Apple's Let Loose launch event, where it's expected to reveal new models. We'll cover all the details as they roll in. And going to space with Rocket Lab, which reported earnings last night, we'll speak with CEO Peter Beck about the company's delay to its Neutron rocket's first flight and how to compete with the likes of SpaceX. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets on this Tuesday, and you can see some of the early gains that we woke up to. Well, they're starting to fade now. The S&P 500 trying to hold on to green territory, currently up about 0.1%. Meanwhile, the big tech index, your NASDAQ 100, just dipping into the red right now, pretty much unchanged, but the direction of travel is lower. And then I threw up the small cap index just for fun. You can see small caps actually the relative outperformer today, but by a very thin margin. Currently, the Russell 2000 higher by about 0.3%. We'll see how that shapes up over the next hour. But let's talk about the big story of the day, and that is the sparkle coming off the mouse house. Disney shares slumping despite beating profit estimates and raising guidance. The company reporting fewer subscribers to its Disney Plus streaming service than expected. Disney's CFO saying its price hike isn't to blame.
We took prices up a little bit in the beginning of this year and didn't really see much of an impact. So as to what the future brings, we're obviously very judicious with the way that we price. We want to provide access to as many guests as we possibly can. But we do believe that the great experiences we provide, people are willing to pay for.
And for more, we're joined now by Geetha Ranganathan of Bloomberg Intelligence. And it's a bit of a head scratcher because, streaming losses did narrow. It was a strong quarter overall, but clearly traders finding several things to not like in this report.
Yeah, Katie, partly, yes, streaming, there's a little bit of a choppy outlook for the fiscal third quarter. But I think really the bulk of this negative reaction can be attributed to their outlook for the parks business. Remember, the parks business is the bread and butter of Disney in terms of profitability, brings in about 60% of profit, even though it only accounts for about 35% of revenue. And basically what they said about the parks is that demand might be moderating from those post-COVID highs. And they're basically, what they're guiding to is absolutely no growth in operating income in the fiscal third quarter. And I think that really spooked investors because consensus was expecting almost 12% growth.
And it's a really good reminder for as much as we talk about streaming, like you said, really the bread and butter is the parks business. So, what's the turnaround plan here? Is this a Disney problem or is this really a macroeconomic problem?
I think it could be a little bit of both. So remember, Disney has raised its prices in the parks pretty dramatically. Right after COVID, they were reporting something like a 40% hike in per capita spending. A lot of that can be attributed to those pretty huge price hikes that they took. So this brings into question what is their pricing power in the parks business? A lot of people have kind of said, oh my God, going to a Disney park vacation is really, really pricey. And so that I think is causing a little bit of nervousness. But overall, I think, this again speaks to consumer spending. Is it weakening a little bit is the question. Disney management seems to insist that they're still seeing pretty good demand, but there is still this question of moderation. So that obviously is a cause for some nervousness.
Yeah, and Disney shares currently down about 8% or so, 8.2%. That is the worst day since last May. Geetha Ranganathan of Bloomberg Intelligence, thank you so much. And let's turn now to the broader markets. And here to help take us through it is Ethan Devitt. She is Moneta Chief Investment Officer. And let's talk about earnings season, because we're sort of approaching the tail end here. We're through big tech. Now we're getting to some of the other fun stuff. And it's interesting. I mean, you take a look at the reaction. It feels like obviously the misses have just been punished in this market, but the beats as well, they haven't been rewarded as much. And I'm wondering what that means to your eyes. What takeaway can we take from that?
What we've been looking for in these markets has been breadth, has been investors willing to go beyond the Magnificent Seven and actually show their conviction in other sectors. We've seen some encouraging signs of this, but this kind of fickle behavior around, which could be really a mixed message coming out of Disney, is an indication that investors really are quite jitterish when it comes to holding some of these stocks that are not showing that phenomenal growth that we're seeing from the AI segment. I think the kind of hockey stick growth that is coming from those sectors is actually really affecting growth expectations across the board. Maybe they have been reset, reframed, but it seems like a steady earner like Disney, which really has that brand recognition and the pricing power, as has been evidenced, just isn't getting any credit for it.
So are you saying that, again, that hockey stick growth that we're seeing, it's sort of raised expectations for other sectors as well, even if they're not necessarily connected to that AI theme?
I think it has, because what we've been saying about the Magnificent Seven is that contrary to other times when tech stocks have soared, this really is backed up with real demand, real earnings and revenues, and it's not just pie in the sky kind of expectations. So because of that, I do think that investors have reset what they expect to see from growth. The bar is much higher today. And remember that the other bar that's out there is also the fixed income bar. When you can earn a decent yield, you don't have to dip into equities to get something. You can get that in the fixed income market. So that, again, is another competition that's framing investor expectations.
Yeah, it really feels like it's not just fixed income. It's also just cash is such a worthy competitor right now, no matter what asset class that you're in. But talk to me a little bit more about what it means for this broadening out in the market, in the rally that we've all been waiting for, if you're seeing some of the expectations for some of those other sectors set even higher as a result of what we're seeing in some of those tech growth stocks.
Well, we speak with a lot of active managers who clearly have been having more of a core exposure. They've been looking across the board at other sectors, and they've been scratching their heads at why many of these companies, which are solid cash earners, are just not getting the credit. And we can see that there are pockets of, say, when financials will rally. Financials have had a very strong run recently. We can see that in the bonus numbers you just showed there. But clearly the trading numbers are also quite compelling. So there are pockets when investors do rally, but because generally there's a consideration that there has not been that breadth as before. So we're looking at sentiment. That would be the next leg of a really sustainable bull rally when it starts to broaden out and when it starts to spread beyond large cap into mid cap and small cap. You showed the small cap sector earlier. That's clearly is relatively strong right now, but it's been a long time coming. So we're really looking for that normalization, the spread, remembering that in the whole sphere of global markets, it really is quite imbalanced as well. The US is continuing to dominate.
And what's the catalyst? That's what I always come back to when we're talking about a broadening, both into other sectors, but also into different market cap tiers. You think about those small caps, for example. I mean, is it anything but a rate cut? Is that what we're waiting for?
To be honest, I think you're right. I think it will take something stark like that, because FOMO is alive and well, as we know. But as I said, when you can earn these kind of decent rates on cash, why would investors need to dip in? Maybe it'll be some kind of reckoning when it comes to the big tech stocks, a little bit more moderating of the growth there and expectations. And just we've seen that they can be extremely volatile. We've seen moves in some of the big tech names of around 10% in one day at times. That's not normal for something that would occupy such a large market cap. It is probably more than investors can normally stomach, and it's certainly different from the type of performance you'd see in a solid earner, a defensive stock. So when the appetite for that dims, and equally a rate cut too, I believe would spark a little bit more breadth in equities. That's what we're waiting for.
That's what we're waiting for. And I mean, just looking at markets right now, you take a look at the S&P 500. We've been in a range for a while now. It feels like really since March or so. You take a look at the NASDAQ 100, for example. It feels like the same thing. The VIX is going nowhere. I mean, what's the overall conviction level of this market? Because overall, to my eyes, it just looks tired.
I agree completely with that. Tired, perhaps still uncertain, still jittery. We can see that from the moves today. There is still that kind of surprise around the resilience that has been shown in markets, even the reaction to somewhat really mixed economic data last week. The jobs numbers weren't what we thought. Inflation is still persistent, and the Fed pushed out a rate cut, but is going to be data dependent. All that I'd expect it to be negative for markets. Markets took them in their stride yet again. So that resilience is perhaps getting a little tired itself. And we have to wonder, when will some of this negativity start to get reflected in the numbers?
So we're tired, we're lacking conviction. Let's find some excitement. What is your highest conviction right now, Ethan?
I actually am quite excited by financials right now. It seems a little strange to say that given where we are, but these have been a somewhat unloved sector. We can see from the trading volumes that they're doing well. And when we do have an unlock of interest rates and we start to see some movement there, I think this generally will be quite positive for the banks. We'll see more lending and just a little bit of an easing of the financial conditions. We've already seen some expectations loosen around that about to happen, and some movement happening really based on the expectation of rate cuts in the future. So I think that's going to bode well for the general volume. And as we've seen from the regional banking crisis, a lot of these are quite pockets of weakness, but are not becoming widespread and contaminating the financial sector overall. If anything, the growth of the private credit environment, the problems in the crypto space, that is all, I think, leading to banks being somewhat overlooked and presenting decent value.
All right, Ethan, always great to talk to you. Really appreciate your time. Our big thanks, of course, to Ethan Devitt of Moneta. And meanwhile, we are getting some headlines from Apple's Let Loose event happening right now. Looking through the headlines, Apple announcing a new iPad Air, including its first larger version. It says that the new iPad Air is 50% faster and has an M2 chip. This is the device's first update since 2022. You take a look at Apple shares at the moment, not too much movement, currently higher by about 1% or so pretty quiet. But we're going to continue to track this event and bring you more headlines as we have them. But let's take a look at what's moving underneath the markets now. We're going to do that with Bloomberg's Emily Grafeo. And let's start with Peloton. What a day.
What a day for Peloton. That stock is up about 12% right now after we had a report from CNBC that a number of PE firms are considering a buyout of the fitness company as Peloton works to refinance debt and cut costs. Now, the report cited people familiar with the matter, so we don't know yet which PE firms these would be, but we do know that a buyout would potentially take Peloton private after it's been on a wild ride as a public company over the last few years. I think about that Sex and the City episode that caused the stock to plummet a day after it aired. We also saw the market cap reach nearly $50 billion in January 2021, and now it's at just about $1.5 billion. So at least when you look at Bloomberg Intelligence, their reaction, this buyout would make sense, according to them, just given how much Peloton has gone through. And they also announced last week that the CEO was stepping down. They're trying to cut 15% of jobs. A lot of cost cutting right now.
A lot of cost cutting, and it seems like at least markets are welcoming this potential buyout, take private news. So will certainly be fun to watch. But tell me about energy drinks. Let's talk about what's going on with Celsius.
So these are wildly popular energy drinks, Celsius. The stock, though, right now down about 2%. Quarterly sales reached a record again, wildly popular. I see them everywhere. But they missed estimates. Fourth quarter revenue rose to $356 million, but that was lower than even the lowest consensus estimates tracked by Bloomberg. Overall, though, the sell side doesn't really seem unconcerned about that revenue miss, despite the stock being lower. Stifel said that the sales headwinds included a $20 million impact from the PepsiCo system holding less inventory, and Celsius itself even warned that they expect ongoing inventory fluctuations. So overall, it doesn't seem like the street is that concerned with these moves.
I will also note that you take a look at Celsius shares. I swear to God, I checked this about 5 different times. They're up about 5,400% over the past 5 years. So, I mean, if you held on to Celsius, you're still doing pretty good. Let's talk about Palantir, though, because it seems like this is a case of just high expectations.
Yes, this is another stock, not 5,000%, but it's up about 200% in the last year. And yeah, the bar is high. Like your prior guest was saying, right now for earnings, these companies seem to be beating expectations, and then the stock is falling. So for Palantir, they actually upped their annual revenue forecast slightly slightly higher to a range of $2.68 billion to $2.69 billion. That was versus estimates of just $2.68 billion. They raised their outlook for adjusted operating income, and they also posted a massive quarterly net income growth, $106 million. That was versus $17 million a year ago. So a lot of growth here for this kind of AI play, but the stock now down about 13%.
Yeah, you would not know it by looking at shares this morning, but the bar was quite high. Bloomberg's Emily Grafeo, thank you so much. Now, coming up, Vivid Seats reporting an 18% revenue jump in the first quarter. We'll speak to Stan Chia. He is the CEO of Vivid Seats next. This is Bloomberg.
From our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
A mixed bag for Vivid Seats after reporting first quarter results this morning. The ticketing marketplace saw revenues jump 18% year over year, but net income down 65%. The company also announcing a share buyback program. You add it all together, you can see shares currently higher by about 4%. Joining us now, I'm pleased to say we have Stan Chia, Vivid Seats CEO. And of course, Vivid Seats is a full-service ticketing marketplace offering tickets for sports, concerts, and other live events. And Stan, I'm taking a look at the earnings release, and you say that you expect to see sustained double-digit growth on both the top and bottom line for years to come. What gives you that sort of confidence looking years into the future?
Hey, Katie. Thanks for having me this morning. Look, I think we're coming off the backs of a year, in 2023, we drove, almost 25% top and bottom line growth, ending the year at $3.9 billion in GOV, $142 million in adjusted EBITDA. And look, I think you saw the strong results we posted this quarter with over $1 billion in GOV and $39 million in adjusted EBITDA. We continue to remain really excited about the secular strength we see in the industry. We see consumers really, I think, prioritizing their spend in this category. We feel really bullish as well. And the investments that we've made into our leading platform with industry-defining elements like the only loyalty program that exists in the business, a wonderful engagement platform in both our Vivid Picks product as well as Game Center. And then, I think we remain excited about the ability to deploy our balance sheet for acquisitions that also drive meaningful growth, whether, you look at our international expansion with our acquisition of WaveDash last year, or moving more strongly into markets like Vegas with our Vegas.com acquisition.
Let's talk a little bit more about Vegas.com. You acquired it for about $240 million in November. How has the integration been going so far?
Yeah, we were really excited about that acquisition when we closed on that deal, about 5 months ago. And if anything, I think we're more excited than we have been. When you look at the premise of the tailwinds in Vegas, we just had a Super Bowl there. If you look at our earnings release today, we also announced that we're going to be partnering with AEG on the inaugural Crown Basketball Challenge in Vegas next year. And so when you look at the ability to drive both our national platform, Vivid Seats, with now a domain authoritative platform in the region of Vegas, we're really excited about those things coming together. When you look at then the ability to take, visitors who go to Vegas and then ultimately remarket them into Vivid Seats when they go home, that's something that neither platform could do independently. And now the combination of those two allow us the ability to drive, I think, great benefit for the business, but ultimately also great value for customers as they buy on Vegas.com and go home and earn rewards on VividSeats.com.
And so when you think about Vegas.com and some of the other acquisitions that you mentioned, how much of that and how much you're expecting to see out of those acquisitions, how much of that is actually baked into the full year guidance at this point?
Yeah, I think when you look at our full year has reflected, I think, both the acquisition of Vegas as well as WaveDash, given that they were done last year. I think on a forward-looking basis, we are certainly excited about organic growth in the platform, in the industry, and continue to remain really bullish on the category.
And so let's talk about some of the different events that you cover. I mean, concerts, sports, comedy, Broadway shows, et cetera. Where are you seeing the most growth right now? And how does that break down when you're looking at both the low and the high end of these markets?
Yeah, I think the beauty of it is, live events just span so many different categories. As you mentioned, sports, concert, theater, comedy. And we've seen just strong engagement across the board. When you look at our business, we're about 60% concert and theater and 40% sports. And when you look at, the strength in sports, the overall industry is probably closer to 60% sports. So when you look at, where there is growth and where there's tailwind, we look at concerts as a great example of one where, I think artists continue to look to go out on tour. You continue to see capacity in venues, most notably the large stadiums, that house football games with lots of opportunity to host more. So we're bullish on that. When you look at some of the more emerging categories, we're really excited, as a moment in history where, I think women's sports is really taking off with the NCAA tournament, with the Caitlin Clark effect, on our own platform as we look at, Caitlin Clark and the Indiana Fever. I think once she joined the team, we've seen, ticket prices as a good barometer for demand, jump almost 200% to where they've been in the past. And when you look at other emerging sports as well, Messi Mania is definitely here with, I think MLS regular season seeing that same almost 200% jump in demand reflected by ticket pricing. So we're really excited. I think the category in general across all of these elements continues to display strength and ultimately reflect, I think, consumer appetite for this category.
Well, you went exactly where I wanted to go, and that is to Caitlin Clark, because we're talking about the WNBA. It's a league that historically hasn't done that well, and it sounds like you're saying that we're already seeing the Caitlin Clark effect, and the season hasn't started.
That's right. I think we're seeing, I think when you have amazing talent and I think the interest that's out there, we're seeing the demand come through for consumers wanting to see some of their heroes just up close live. And that live action of being at the event is clearly irreplaceable. And we're seeing that come through in all the demand signals that we have.
Well, it'll be definitely very interesting to see whether that's sustainable, whether, that momentum continues to build as the season goes on. But let's also talk about the international expansion that you mentioned, your plans to do that. Why is now the right time?
Yeah. Look, I think when you look at live events, it's not just a domestic level of interest. I think if you look at other industry sources, others who participate, I think you'll see there's strong double-digit growth coming for other platforms that already participate internationally. When you look at our own foray there into what we started last year with our acquisition of the leading Japanese marketplace, tons of interest there. So when we look at our ability to compete there with the proposition of what our platform offers, loyalty, engagement, also best customer service and ticketing as recognized by Newsweek, we think that combination of our offering is unique and will allow us to compete really well internationally. And so we're looking at this as a great combination of a platform that resonates with consumers and sellers, as well as the industry also taking off internationally, being just a great time to go in.
And of course, we have to talk about one of the big things happening in your industry, and that's what's going on with Live Nation and the antitrust investigation. I'm curious to hear your thoughts. I mean, is your view that Ticketmaster is a monopoly, and are you hoping for a breakup?
Yeah, look, I think we're really focused on our business, right? And I think when you look at what that means in the broader landscape, we believe strongly in a fair landscape for all to compete to win, I think consumers and sellers across the board with great propositions. When you look at what we do, I think we believe in transparency. We believe in, wonderful things like I'll go back to our rewards program with a buy 10, get one free, or almost effectively, you can think about that as 10%. I think you look across the platforms, I don't see another platform offering 10% back to consumers, that they can tangibly use on subsequent purchases. And so, we believe really strongly in having a great level playing field and ultimately driving wonderful value for consumers.
All right, Stan, really enjoyed this conversation. Appreciate the time on a busy day. Our thanks to Stan Chia, Vivid Seats CEO. And it's time now for Social Climbers. A look at the stocks making waves on social media this morning. And first up, we have Lucid reporting a worse than expected loss in the first quarter. The EV maker, of course, is contending with production challenges and uneven demand for its high-end vehicles. Next, Boeing's historic Starliner space capsule. It was scrubbed last night because of a technical issue. The company says that the next potential launch could come as early as Friday. The pause is yet another hurdle for the company as it looks to compete with SpaceX, which has dominated private spaceflight for years. And finally, let the takeout wars begin. Instacart will now offer restaurant delivery services thanks to a new partnership with Uber Eats. The duo will take on the top U.S. food delivery app DoorDash. Teaming up will allow Uber to tap Instacart's suburban customer base, and Instacart will be able to offer more value to subscribers paying for a monthly membership. You can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Coming up, the big business of space and what it will take to beat SpaceX. We'll talk to Peter Beck, Rocket Lab CEO and founder, next.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
They're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Rocket Lab USA stock having a rough start to 2024 as it pushes back the launch of its Neutron rocket to mid-2025. Joining us now with more is Bloomberg's Abigail Doolittle.
Indeed, it has been a bit of a rough start for Rocket Lab. You can see here shares down.
According to the IIF, global debt to GDP ratio on the rise after 3 quarters of declines.
Encouragingly, they beat earnings, but sales missed for the second quarter revenue guide. The low end a little bit lighter than what the street had been expecting.
And global debt climbs by $1.3 trillion to record high $315 trillion in 2024.
Astronix, the one outlier to the upside. So really going along generally with this space. As for a bright spot in that first quarter, that is revenue growth. It grew 69% in the first quarter for Rocket Lab. You can see that, and really up in a big way from the previous recent quarters. And then finally, Katie, this is a really cool terminal in the Bloomberg terminal. If we take a look at this chart, these are the number of objects in space back in 2023, nearly 2,700. In yellow, this is the American share, almost 2,200. And then down here, we also have the China and UK. So we can really see that the greatest proportion of objects in space coming out of the U.S. There's actually a website where you can track this real time in 3D. It's super cool.
All right, Abigail Doolittle, thank you so much. And let's keep the conversation going, because joining us now is Peter Beck. He is Rocket Lab CEO and founder. And Rocket Lab, of course, manufactures guided missiles and space vehicles. So let's talk about the Neutron rocket. So the launch had originally been scheduled for 2024. You pushed it into mid-2025. Just walk us through briefly the decisions that went into that.
Yeah, sure. Well, I think firstly it's good to provide a little bit of context here. So we operate multiple launch vehicles. So the first one being the Electron rocket, which is the second most frequently launched rocket behind our friends at SpaceX. So it was interesting to see that graph there on your previous presenter. And then we have our Neutron launch vehicle, which is our large launch vehicle, which it's a direct competitor to the SpaceX Falcon 9, which you talk about there. And we've moved that debut date a couple of quarters, but I should stress that in the duration of a large space program like that, a couple of quarters is pretty insignificant. And then, as you saw from the revenue growth, we have a space systems business, which actually accounts for like 2/3 of the revenue of the company. And, we're, continue to see huge growth in that space service businesses, delivering satellites, some of which are going to Mars for NASA later this year.
And I mean, it's a fair point that when you're thinking about the grand totality of time and space, that a couple quarters probably doesn't matter that much. But the company has also said that when it comes to the Neutron rocket launch, that a lot of that will depend on the test results of your engine. What are some of the milestones that we should be looking for when it comes to those test results?
Yeah, look, a rocket engine is always a long pole in the tent for any rocket program. And we're very happy to have the engine at the test stand now. It's a major milestone to have that engine there, and we'll go through a series of hot fires and tests to get that ready for first flight and continued production. So that's really a major milestone. But a rocket program is kind of the rocket is like the tip of an iceberg, and there's a giant piece of the iceberg below the waterline, which is all the infrastructure. So we've been busy building multiple factories, launch sites, engine test facilities, and so on and so forth. So, tremendous amount of concrete and steel put in the ground to be able to support a vehicle of this scale and a program of this size.
And like you said, of course, you also have your Electron rocket as well. And for those of us who aren't rocket sciences, could you just explain quickly what the difference is between the Neutron rocket and the Electron, and what the Neutron will deliver that you currently aren't doing with the Electron?
Yeah, it's pretty simple. It's just scale. So as I mentioned, Electron is the second most frequently launched rocket right now in the US and fourth most frequently launched rocket in the world. And it's primarily focused on small dedicated payloads in the order of a few hundred kilograms, whereas Neutron takes 13,000 kilograms into orbit, and then hopefully one day, ultimately, humans into low Earth orbit as well. So it's a a really significant program and very, very significantly large launch vehicle.
And as I understand it, the hope is that Neutron will be reusable, correct? I mean, how difficult is that to achieve?
Well, traditionally very difficult. However, a little rocket Electron is partially reusable already. So, we've already, achieved a lot of the learnings that we needed to achieve with that. But I think, anybody who brings a launch vehicle to market right now that's not reusable, it's kind of like bringing a dead product. So, it was really important for us. And, there's only two companies currently that fly reusable launch vehicles, and it's SpaceX and Rocket Lab.
And what does partially reusable mean in this context? Does that mean you can use certain components from it, but not the entire thing?
So the entire first stage, which consequently represents about 70% of the total cost of the rocket, the upper stage or the second stage is not traditionally reusable.
And that definitely makes a lot of sense. So let's look at some of what you have planned for 2024. I understand that you have 22 missions that have been sold. How confident are you that 22 missions will actually launch, though?
Yeah, look, I mean, the one thing that we're always a bit of a victim of is we call it manifest whack-a-mole, where we launch the rocket when the customer is ready, and if the customer is delayed, then ultimately the launch is delayed. So it's just part of running a rocket business. It's quite lumpy. So we'll see in the fullness of time how many of those launches we get away this year, but it's still a huge year. And as I pointed out, we're currently the fourth most frequently launching rocket in the entire world. So there's plenty going on for sure.
Have any of those missions already been delayed, those 2024 missions?
There's a couple of them moved out already. Typically we'll see a customer will take their spacecraft and they'll go into various testing, and if they see issues with their spacecraft during testing, they'll call us up and ask to move. Sometimes it's a few weeks, sometimes it can be a couple of quarters. If it's a very large program, we've seen slip outs of a year. So, that's just the reality of running a rocket business. As I mentioned, you fly when your customer's satellite is ready to fly.
And I want to talk a little bit about the share performance, because you take a look at Rocket Lab shares, they're down about 33% year to date. What part of the message aren't investors hearing right now?
Yeah, look, I honestly think, space is out of favor a bit. I mean, there's been a lot of space companies go public, a couple of years ago, and, Rocket Lab is really one of the only few that have done very well. So I think it's kind of, it's a tough environment for investors to get into space when there's, there's been quite a number of significant failures in the industry. But for us, the stronger left standing, and what we're seeing in our business is just tremendous growth. We're now a prime contractor on major defence programs, and the business just continues to grow and grow. So I think it's a new sector. It's a new sector that struggled, and it's tough economic conditions, and growth is not in favour. So we'll just keep our head down and continue to execute, and in the fullness of time, everyone should be rewarded.
And Peter, I know it is quite late in New Zealand, but before I let you go, I mean, we've mentioned some of the other space companies. SpaceX, of course, has been mentioned a few times in this conversation, and I'm curious what competing with SpaceX actually looks like. Is that more time, more money, or is it better rockets? How do you actually close that gap?
Well, look, we joke. We basically compete with Elon and Jeff Bezos, the two both wealthiest people on the planet. So we certainly can't outspend those folks. So we have to outthink them. And if you look at the history of the company, the capital efficiency and what we're able to achieve on such small amounts of capital is truly impressive. So. There's a famous New Zealand physicist called Ernest Rutherford, and he said one of his most famous sayings was, "We have no money, so we have to think." So that's always been the approach of the company.
Well, Peter, really enjoyed this conversation. Appreciate you staying up so late for us. Our thanks, of course, to Peter Beck of Rocket Lab. And we are getting some new details on Apple's Let Loose event today, including a bigger version of its iPad Air and an AI-focused iPad Pro. The unveiling is an attempt to reinvigorate Apple's tablet lineup that hasn't been updated since 2022. Bloomberg's Dana Woolman joins us now with the details, and just talk us through what we learned today when it comes to these new iPad models.
So this was the end to a real drought in iPad announcements. The last had taken place in October of 2022, and that was the longest drought in iPad announcements, I believe, since the Steve Jobs era. And what's notable today is these are the first iPads, at least on the upper end, the iPad Pro line, which include OLED screens, which are the same kind of screen technology that you'll find already in iPhones and smartwatches. And I would add, in some competing laptop lines. Macs don't have OLED screens yet, so this is the best you're going to get in terms of an Apple product. And it's just a brighter screen. It preserves more detail in the shadows. And I think, in general, the key is laptop-like. So the screens are more laptop-like. The accessories that go with it are more laptop-like, including the new Magic Keyboard. Even the webcam has been moved across all the iPads to the landscape side. So when you're holding it horizontally, it just makes more sense to have video calls on those devices.
And so it's interesting. I mean, you take a look at the stock. It isn't doing too much. It's up about, 0.4%, had been about 1% higher. Maybe some of this was priced in, but you take a look at commentary from Bloomberg Intelligence, for example. They're not expecting these to be really that meaningful in terms of the share price. What are investors and analysts saying about how much this actually matters?
I think what everyone is really looking for is something that's not going to be announced today, which is news about Apple's AI strategy. That is likely to come more during the company's developer conference, its annual developer conference, which typically happens in early June. So I think everyone across the industry is looking for more about Apple's AI strategy. A lot of people have said that Apple is lagging its competitors on that front. And it was sort of notably missing today. There were references to Apple's neural engine, but not so many references to what the actual software on the device can do. So a lot about the new hardware, very little about the new software. So I think that's what's missing, and that's really what people are waiting to hear more about.
So we'll just have to keep waiting there. I'm sure we'll be talking with you again when we finally get that announcement. Our thanks, of course, to Bloomberg's Dana Woolman. Now, coming up, highlights from our conversation with one of the most influential voices in the market, Mark Rowan. He is Apollo Global Management co-founder and CEO. Next, this is Bloomberg.
every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Well, it's time for our daily Wall Street Week conversation, and today we're focusing on structural changes within the financial industry. Mark Rowan, he is Apollo Global Management co-founder and CEO. He spoke with Wall Street Week host David Weston yesterday at the Milken Institute Global Conference in Los Angeles.
It is absolutely the driving force. I mean, this is focusing on the urgent, which is what we were talking about before we came on air, versus the important. This is the important thing that's happening in our business. At our recent partners offsite, I put up a slide that said in 2008, Apollo, 40 billion of AUM. 2023, 650 billion of AUM. We grew 14 times. We outgrew Apple. We outgrew Amazon. We outgrew Microsoft. Pretty impressive stat. Next slide. Were we lucky or smart? We were lucky. You can't possibly plan on growing your business 14 times, but you can position the business in a way that you take advantage of powerful tailwinds or trends. What were the tailwinds? 2008, we had a financial crisis which pushed most financial institutions in the Western world on defense. We built and formed a financial institution called Athene in 2008. That company went from a startup to today, $360 billion. Offense. Could never have been done but for the macro environment. The other thing that happened is rates went to zero. People who had made promises to retirees, to pensioners, and had other obligations that were fixed, all of a sudden needed to look elsewhere for rate of return. They were willing to consider that perhaps private markets offer an alternative. Okay, those tailwinds powered us through 2008. Now I sit in 2024 and I say, what are the tailwinds? This tailwind of debanking, of having investors do more and banks do less, absolutely happening and happening everywhere in the world. Does not mean banks will shrink. It just means on the margin, growth is going to come in the investment marketplace, not in the banking marketplace. Second, retirement. Unfortunately, we're getting older. Every Western society is getting older. We as societies have done a terrible job with guaranteed lifetime income. Everyone will need more guaranteed lifetime income. This is a fixed income product. It is powered by highly rated fixed income, so-called private investment grade. Big growth market. High net worth. Institutional investors used to be the dominant forces in our industry. We're at the very beginning of high net worth investors exploring private markets. This is going to a trend that's going to take place for the next 20 years. And finally, indexation and commoditization of markets. If you're an active manager of equity, you've failed to beat the market better than 90% of the time for 20 years. I don't think you got stupider. I think these firms are actually really good, but the structure of markets changed. And this gets to the notion of if 4,000 public companies is not enough for diversification, you're going to have to find a way to participate in private markets. All four trends power not just Apollo, but our industry.
You mentioned pensioners, retirees, and as you say, I certainly am getting older. I'll volunteer for that. Is this part, when we talk about pensioners or retirees, there's a big looming problem, obviously. As people advance in age, they need retirement income. Is private part of the solution to that problem? Are you going to help us get out of this jam?
It's a part of the solution. So we have an actual experiment. We can look at Australia. 40 plus years ago, Australia adopted superannuation, which sounds like a fancy solution, but what is it? It literally just gave normal investors who needed returns access to private markets through supervised supervision. And Australia's been the most successful retirement investment market anywhere in the world. What do we do in the US? Yes, we have defined benefit plans, but defined benefit plans are shrinking, not growing. Most of our retirement money is in 401k, 12 to 13 trillion by some estimates. What are these people invested in? They're invested in daily liquid funds for 50 years. Why are they invested in daily liquid fund for 50 years? I don't know. Well, because public was safe and private was risky. It will not surprise me, and we're already seeing the beginnings of it. Retirees who are thinking in 20 and 30 and 40-year timeframes having access to private markets. That doesn't mean private equity. That doesn't mean venture capital or hedge funds. That means the whole swath of the economy that is just not publicly listed.
So, Mark, let me shift to a different subject here. You started out as a media banker, I think.
Unbelievable. Hard to know.
You talk about disruption. I mean, having spent some time in media, including on the business side, there's a huge disruption in media right now. Can you compare what we're seeing that shifts, the fundamental shifts in media, with what we're seeing in the move to private from public? Is it a similar sort of fundamental shifting of the ground under us?
I do. I think there's a wholesale rewiring. If you think about where people used to spend their time in media and how they consume media, I joke with my kids who are somewhat older this time, what do the numbers 2, 4, 5, 7, 9, 11, and 13 mean? They look at me like they must be prime numbers or something like that. I'm like, no, they're channels. That's how people used to consume media. We had a time. We watched something at a time. All bets are off, not only in terms of how media is delivered, but how it's created, the ease with which it's created, and so on and so on. Financial services, we are going through that same sort of revolution in a much more regulated business. So it will not happen as fast. It is not just about public and private markets. It's about security. It's about who provides our services. We have a whole group of tech companies who are encroaching on the turf of the banking system. We have banks who are living in a more regulated paradigm, but are nonetheless the key gatekeepers to services. So I look at our industry. What is our job and our job at Apollo? Our job is to match long-term liabilities and long-term assets to provide rate of return to investors, excess return per unit of risk.
And that, of course, was Mark Rowan, Apollo Global Management co-founder and CEO, and, of course, Wall Street Week host David Weston. And tomorrow, we'll hear from Steve Mnuchin, former Treasury Secretary. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Let's get a check on these markets. We're going to do that with Bloomberg's Abigail Doolittle.
We're looking at a very small gain for the S&P 500, Katie, up about 0.2%. But what makes this interesting, it is a fourth up day in a row, the first time we've seen that since March 21st. That's essentially before we started to see weakness for the S&P 500. So some of the dip buyers coming out really trying to take on the sellers. We'll be taking a look at a chart on this in just one moment. But first, take a look at Disney. Shares down sharply, down 9.5%. This, of course, after they beat profits, revenues a little bit of a miss, but more concerning the third quarter guide. It's a little bit choppy in terms of not a lot of growth for parks. That's their cash cow. Plus, in the first quarter, there was a subscriber miss. Into today on the year, the stock had been up 29%. Not priced for perfection, but a high bar, and they simply didn't deliver quite as much as what investors had wanted. Now, international paper off of its highs, at its highs, up more than 11%. Suzano, the Brazilian bioeconomy company, it has potentially put in a $15 billion bid. Shares higher, but again, off the highs. We'll be following that story. As for the chart on the S&P 500, well, first, let's take a look at why we do have stocks higher over the last few days, and this is as yields come in. That two-year yield had been above 5%, but now below. But if we take a look at the S&P 500 and what's happening, very interesting to note this. We had shown this chart before. This is the uptrend out of October. Here's the downtrend before that March or after that March 21st. And you can see we've broken above resistance that it had been holding. Now we're at that 5,200 level. Above 5,200, Katie, maybe the buyers are going to take hold, but back below, there could be some real choppy trade ahead.
All right, Bloomberg's Abigail Doolittle, thank you so much. Coming up on Bloomberg Technology, former Google CEO Eric Schmidt. He joins Caroline Hyde. That does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
The US to sell $80 billion in 4-week bills on May 9th to settle on May 14th.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow, he's off. This is Bloomberg Technology. Coming up, we'll bring you all the details from Apple's Let Loose product launch as the company brings us the new AI-ready iPads. And we'll hear from the CFO of Disney as shares fall hard after a cautious outlook for streaming subscribers. Plus, Uber and Instacart, they team up to take on DoorDash. Our interview with both of the company's CEOs later this hour. But first, let's check in on these markets. We turn to the green, even on the NASDAQ, after really some strong days that we've had for the last 3 days. I mean, remember, on Monday we had the best 3-day run for stocks more broadly that we'd had, well, since November. I'm going to bring you back to the benchmarks for a moment. I'll get onto these individual players in a moment. Well, we are seeing the NASDAQ on the higher side. We've seen bond markets actually rally as well ahead of that 3-year auction. We're also seeing, of course, the world of crypto, just keeping an eye on what's happening with the world of Bitcoin at the moment, because we have, of course, seen, well, it up about 1.25%, a little bit of risk appetite there in the crypto land. Now let's take it on to some of the individual movers that we've had on the day, because this has been thick and fast earnings still coming, of course, after the bell yesterday and also this morning. Disney, as we're going to be getting to this company in a moment, down more than 9%. Look, some of the numbers are pretty strong. We're seeing still a focus on bringing about profitability at this business by Bob Iger. However, subscriber numbers looking to be a more cautious outlook and forecast coming from the CFO. The market falls hard on that. Palantir came after the bell yesterday, and look, we're once again seeing some rapid growth, but not as fast as people want to see, particularly with the US commercialization growth that we're seeing for Palantir. It came after the bell yesterday, and look, we had seen 70% in previous quarters. We're down to just, but a 40% increase in the overall sales growth. So a little bit of caution and taking off of the market there after the valuation had run up. I'm looking at Apple, though, up 0.4%, the juggernaut, unveiling some new products. This one all about the iPad, an AI-focused iPad Pro and a larger iPad Air. I want to break down the latest of what was just occurring in the last hour or so. Bloomberg's Dana Wallman. Were you impressed by the lineup? We've been waiting a long time.
You know, it's interesting. As you say, this is the first iPad news we've received from the company in almost 2 years, perhaps a year and a half. And the announcement felt incomplete to me. This announcement was, as I think we expected, all about the hardware. The iPads are thinner than before. They're lighter. They're faster, as you'd expect. And Apple did make a hint at the device's AI capabilities. There's so much that is still unanswered, particularly about the software experience, and as I imagine everyone is thinking, the AI capabilities. The company isn't expected to get into any of that until its annual software developer conference, which usually takes place in early June. So right now we've got some promising notes. We know a lot about the hardware. We're still wondering, in a sense, what can it do fully with the software, and who is it for? And I only say that because the devices are so increasingly laptop-like.
Yes.
But Apple also sells laptops, which were not mentioned today.
Yeah, so I mean, for me as a commuter, an iPad makes an awful lot of sense. But if you're a designer, if you're someone who's wanting the power of a Mac, are you ever going to be getting this and an iPad? Or who do you think the overall consumer is from your perspective?
I think these are perhaps laptop replacements or secondary laptops, if you will. It's interesting to me, the higher-end iPads here are the first iPads that have OLED screens. And this is, in shorthand, a much more advanced screen technology than even the Macs have right now. Some competing PC makers do have laptops that have OLED screens, but not Macs. So if you're looking for a laptop-like experience with a really superior display, actually the iPads might be a better choice.
According to a statement, the U.S. Energy Department announces solicitation of up to 3.3 million barrels of oil for the Strategic Petroleum Reserve replenishment.
Do you think ultimately the fact that we've been sort of a drought of new iPads will just galvanize demand going into this product?
Apple would certainly hope so. The most recent quarter was particularly disappointing for Apple in terms of iPad sales. And it would make sense when you remember that the hardware really was so stale. And consumers aren't stupid. They do know, they understand something about the rhythm of iPad and Apple update cycles in general. And I wouldn't be too keen on buying something that hadn't been updated in over a year, knowing that Apple is likely to have an update around the corner at just about any time.
And then we have the hand-wringing issue of Apple being behind the curve, so to speak, when it comes to artificial intelligence. Many would say, look, it always comes in a little bit slower, but then comes with strength. Are you feeling from an investor perspective, but from a user perspective, that AI on an iPad or AI on device is really going to be a winning formula for Apple?
Yes, I expect Apple to have some interesting news. I don't know what it's going to be, but I do believe Apple is going to be talking quite a bit about AI at its coming conference. I also think to some extent this is a little bit about marketing and the language that Apple has chosen to use. I remember there was a different competing software conference, it may have been Google, about a year ago, and they would not stop saying AI. You can choose to say AI over and over again. Does that make it true that you have invested more in AI and that you're doing a better job? I think a lot of what Apple already has in its products is to an extent AI powered, even if they're not using the words AI. I do think they have more to share and need to say more, if not to actually catch up, to at the very least correct the perception that they have lagged behind the competition.
PRing, a little bit of storytelling here when you've already got the M4 chip in there, which makes it AI ready. There we have the stylus that we can currently see. Dana Wollman, so great to have you on this product launch day from Bloomberg. We thank her. Meanwhile, coming up, Disney's turnaround efforts. They gained momentum under Iger, but Wall Street also really focused on the company's streaming miss, the outlook, the cautious outlook. We're going to be digging into that with the CFO, Hugh Johnston. That's coming up next. Meanwhile, let's just focus in on what's happening with Boeing. Now, remember, we're looking at Boeing for a whole multifaceted reason. But right now, we're off by 0.4%. The reason the tech show's interested is because the Starliner launch, now targeting Friday after an initial delay, that technical issue that prevented the initial flight coming on Monday. This is all about the historic first crewed mission of Boeing's Starliner space capsule. We'll see whether they can get it off the ground on Friday. The United Launch Alliance, the Boeing Lockheed Martin Corp joint venture, making the Atlas V rocket carrying the capsule, and it halted its countdown a little bit earlier. This is Bloomberg Technology.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking? I mean, like, what's that about?
we're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
This is Bloomberg.
After that board fight that was won, we now see some money coming off the table of Disney when it comes to its share price because earnings are out and there was some caution ahead when it comes to subscriber growth. But let's dig into where the numbers actually did manage to beat. I'm looking at earnings per share looking strong for Disney overall. We're also seeing the fact that they are on course to mainly focus on profitability come the fiscal next quarter. Even by the fourth quarter, you could see profitability in their streaming unit. And we're seeing those still off by 7.4% over the last 2 trading days for Disney. And a lot of this is coming because there's still a lot of weakness in TV and cable. Of course, they had the twin strikes that impacted the amount of revenue that they're getting overall from their movies. And maybe we're seeing, a steer towards a slowing in insatiable demand to be getting to those parks and on those boats that Disney has as well. We spoke to the CFO, Hugh Johnston, a little bit earlier, and just hear his cautious take.
The quarter was really a strong one for us. 17% OI growth, 30% EPS growth. That's what led us to raise guidance to 25% EPS growth for the full year, which is obviously quite strong. 2 big stories, I think, here. Number one, you were just talking about our experiences business was up 10% on a revenue basis, 12% on an OI basis, and the parks business was actually up 13% on OI. So we do feel good about that. I watch other stocks report and have seen that the value consumer is really struggling a bit and making choices right now. We're not really seeing as much of that in our portfolio of products. The other positive for us is obviously the streaming service. Last year, we lost about $600 million. This year, we're about break even, and we saw a 12% revenue growth. So we're encouraged by the progress we've made in that business in a relatively short period of time.
Hugh, you said that you're not seeing that kind of price sensitivity. How much could you increase prices then from here?
It's a great question. We took prices up a little bit in the beginning of this year and didn't really see much of an impact. So as to what the future brings, we're obviously very judicious with the way that we price. We want to provide access to as many guests as we possibly can. But we do believe that the great experiences we provide, people are willing to pay for.
Hugh, over the past 6 months, we've been talking about the cost-cutting operations in Disney. Have we finished some of the shrinking? Have we finished the paring back? And are you back on some sort of growth trajectory? We are definitely back on a growth trajectory. That said, we're always going to be looking hard at our cost structure, in particular looking to reduce costs where perhaps they add less value than they used to, and redeploy some of that money back into the business so that we can actually grow the balance of the business. So I think that's a never-ending exercise of looking for ways to be more efficient as a company so that you can invest in your future. When you talk about growing, where is that growth focused on geographically? We know that in the U.S., you've got a very strong parks business. In Europe, there also is a parks presence. But in Asia, in particular in China, that has been a growth area. Is it still, how much can that be a bright spot at a time of increasing geopolitical tensions?
Yeah, I do think not just China, but all of Asia represent growth opportunities for us, both in terms of the streaming service in select markets, as well as in terms of the parks and cruises business. So we do see good growth opportunities there. Europe and Latin America continue to be good growth opportunities. And make no mistake, North America, we're not done growing yet. We still think there are terrific opportunities here for us right at home.
When it comes to Asia Pacific, is it domestic demand within those countries, specifically China, or is it tourists in the region?
Combination of both. I wouldn't tie it to one or the other. I think it's a combination of both.
And when you look at China, to Lisa's point, you know, we're going into a very heated political election coming up in November, very hot rhetoric regarding China. Is it becoming more challenging to deal with authorities in Beijing and business on the ground, given the increased geopolitical tensions?
It has not been for us. You know, one of the benefits of what we do for a living is, you know, we make people smile. We bring them happiness, right? We bring them the most magical place on earth. Candidly, the government's investing in infrastructure to make it easier for guests to get to and from the park. We're continuing to invest in that park in order to drive growth. It's doing better now than it ever has. So we're the fortunate beneficiaries of bringing people joy in a world that needs it.
Hugh Johnston, Disney CFO there. Coming up, actually, we're going to be hearing from the former Google CEO, Eric Schmidt, on China as well, as his think tank holds its first ever AI Expo on competitiveness in that field. Meanwhile, let's just have a little look at what's happening on the share front of Infineon. Now, here's a chip-focused business that's looking at China as well, looking at auto demand. Basically, it's chips within EVs, saying China is actually bottoming. We're seeing healthy demand there for Infineon products. We're up more than 12%, yet another key chip designer or maker or builder that is showing that maybe we've just seen a bottomed out in terms of the EV lackluster demand that we've seen of late. This is Bloomberg Technology.
Israel's PM Netanyahu says Hamas's proposal falls far short of Israel's essential demands.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Time now for Talking Tech. First up, Nintendo says a successor to its 7-year-old Switch game console is on the way. Now, the announcement is, of course, coming after it forecast a bigger-than-expected profit decline for the current fiscal year. Now, in a post on X, the company's president said the new device is set to be announced in the coming year. Fans, investors, they have long been waiting on this news of a succession plan for the 2017 gadget, which has sold more than 141 million units since its debut. Plus, chipmaker NVIDIA is investing in UK autonomous driving tech startup Wave in a $1.05 billion funding round. The venture is actually led by SoftBank Group and existing backer Microsoft. It's one of the largest ever for a European AI company. Now, the cash injection underscores the continued demand for AI, especially among the autos industry. Valuation of Wave, not disclosed. Meanwhile, talking of EVs and autonomous vehicles, Tesla faces a July 1st deadline to submit information to US regulators over concerns about its autopilot system. Now, the electric car maker issued a recall, remember, of over 2 million vehicles back in December on reports of drivers crashing while using the feature. The National Highway Traffic Safety Administration says it has opened up a query as to whether Tesla's software update was sufficient in preventing crashes. Now, today is the Special Competitive Studies Project, and it's kicking off its first ever AI Expo for national competitiveness over in Washington. I sat down with the SCSP chair and former Google CEO Eric Schmidt to discuss how the US is going on in the AI race.
Well, the good news is the U.S. is way ahead of China and everybody else, and I think that's going to continue for a while. To me, national competitiveness is the challenge for the next 10 or 20 years, because the Chinese are really focused on dominating certain industries, and we need to compete with them and make sure we win. In the case of artificial intelligence, we are well ahead, 2 or 3 years probably of China, which in my world is an eternity. I think we're in pretty good shape. And the crazy valuations, all the money, all of the new experimentation, this sort of enormous adoption of AI that's occurring will have a lot of implications on society and very good for business.
What about, well, ultimately the pace of regulating artificial intelligence? Is there any risk that we stifle innovation in so doing?
There's always a risk of premature regulation. My simplest example there is Europe. I spent 10 years trying to convince Europe to actually innovate instead of regulate, and they just keep regulating. The current EU Act, AI EU Act, is essentially regulation, not investment in the future. So you can see that Europe is highly unlikely to be relevant. China, of course, is struggling because of chip shortages and so forth, although they're ready to win if they can get the hardware that they need. And the rest of the world is not focused enough on this. So the good news from my position in terms of America, here we are in DC for national competitiveness, we're the likely winner if we don't screw it up.
I'm really interested, you say perhaps China's being pushed behind because of its lack of access to chips. Are we currently navigating that nuance well?
Well, the Trump administration, followed by the Biden administration, did a good job in getting those rules in place. It's a good example and not a common example of how a targeted intervention has a positive measured outcome from the standpoint of the national security.
So it's 11:30 a.m. Eastern Time. We expect comments from Fed's Kashkari, who participates in a fireside chat at the Milken Institute Global Conference.
A few years ago for the Congress. It's very important that we get more basic money out of the government for basic research. We're building intelligence. We're building a new form of non-human intelligence that will change the world forever in a good way. And furthermore, it needs to be done with our partner countries. These are the Five Eyes, the UK, that sort of thing, some European countries. And also it needs to be done with American values. So using China as the bogeyman, imagine if they were in charge of the internet and they were in charge of the rules. Can you imagine how very different your experience as a user on the internet would be? Today, you can show up, you can be anonymous, you can do whatever you want within reason. That kind of freedom is central to the spirit of the internet, and it's important to be preserved.
Talking about a bogeyman and a Chinese-related bogeyman, TikTok became the bogeyman that many are now trying to regulate, to indeed ban or to sell. There's been some reporting that you've been interested, alongside Mnuchin, in potentially purchasing US TikTok. Would you still be?
I'm not currently looking at that. I looked at it for a while. My personal view on this is you're better off regulating than banning or a judicial action. All the big tech companies are now in the hands of the DOJ in various legal fights. I would prefer to see a regulatory regime that is sort of has the right incentives and the right prohibitions for all of these things. My own view of TikTok is that TikTok is not really social media, it's really television, and that you can regulate television by the equivalent of the equal time rule, but somehow we're not having that conversation.
What's interesting is, of course, you say many big tech companies are currently, well, entangled from a time perspective with the DOJ, one of them being where we know you helmed from, of course, the previous CEO of Google. Where do you rate, from a personal perspective, where Google is in the AI competition race?
Well, it's interesting that almost all of the technology you're seeing today was invented at Google about 5 to 10 years ago. And it's one of the sort of great things that during that period, Google had a roughly, in my estimate, 2/3 of the world's talent in AI was working at. So Google had a very, very strong head start. I think Google is a complicated place. There's a lot going on. OpenAI in particular came out with GPT-3, 3.5, and 4 and did a fantastic job. I think that was the competitive nudge that has gotten Google back in the game. What I like now is you have these two huge companies, Microsoft and OpenAI together, and Google Alphabet, again, operating together, and you have them putting billions of dollars of hardware and enormous software teams to invent this new future. This is not to take away from Anthropic, another competitor. Obviously, whatever Elon is doing with X.AI, he's raising a huge amount of money. And Meta has recently released a 400 billion parameter modeler, is in the process of releasing it, that looks really, really good. So that competition is the right answer to the regulators and to everyone's question. Competition brings out this enormous value to consumers. And eventually people will see this and they'll say, oh my God, look at what this does, and it's free. And of course, all that money was paid out of the markets, the billions of dollars that's going in right now, and they'll monetize it somehow.
Former Google CEO Eric Schmidt there, and of course the current chair of the SCSP. Coming up, we're going to continue the conversation on artificial intelligence competition with the CEO of that organization, the SCSP. Meanwhile, let's just stick with China and national security now. It was likely behind a recent hack into the personal data of British Armed Forces personnel. According to sources, the hackers breached the payroll system used by Britain's Defence Ministry and obtained the names and bank account details of members of the Army, the Royal Navy, the Royal Air Force, and some veterans. This comes as Chinese President Xi Jinping is actually visiting Europe this week to attempt to smooth out relations with the European Union, which has been adopting a far more hawkish position on Beijing. Now let's just return to some corporate news for you now and some shares that we want to be watching. Amazon currently on the move. Now, AWS looks like it's been pouring money into Asia, but it's Singapore where they're focusing. They're committing $9 billion to double Singapore's cloud.
At 11:30 a.m. Eastern Time, we expect comments from Fed's Kashkari, who participates in a fireside chat at the Milken Institute Global Conference.
We're up 0.25% on Amazon. This is Bloomberg Technology.
We also expect comments from ECB's Nagel, who gives a speech in Oestrich-Winkel at the Joint Spring Conference 2024, Structural Changes and the Implications for Inflation.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising
Shortly
capital.
expecting comments from Fed's Kashkari and ECB's Nagel.
They have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's check in on these markets because, well, after a strong 3 days of gains, best since November, we're still on a March high. NASDAQ 100 powering up some 0.3%. This as we still perhaps anticipate room for the Fed to cut throughout the rest of the year. We're hearing from Neil Kashkari a little bit later. 10-year yield currently off by 6 basis points. Remember, we've got a lot of auctions coming this week, and we've got a load of 3-year debt on the table today. We're at 4.42, let's call it, on the 10-year. Bitcoin managing to turn around nicely now. We're up 0.9%, 63,877. A little bit of risk appetite creeping into crypto. Move on, have a look at some of the individual movers that we're looking on the day, and there's been a raft of earnings. Some of them slightly more cautious than the market wanted to see, particularly when it came to subscriber growth for Disney. We're just down about almost 10%, maybe some profit taking coming off the table for Disney. We're seeing Datadog down hard, off by 11%. This New York company, again, many had anticipated some strong growth because hyperscalers have been showing some growth in their earnings. Maybe didn't feed across in the way that the market had anticipated. We're off by some 11%. Nvidia off by 1.7%. Chipmaker, well, I mean, we're seeing Druckenmiller reportedly saying he's actually winding down, well, taking off some of his chips, his bets on Nvidia, and reducing some of his holding in that particular tech stock. We're off just by 1.7%. DoorDash off by 2%. Interesting moves coming from Uber and Instacart to take on DoorDash. We're seeing restaurant deliveries being folded into Instacart. They're going to be adding Uber Eats menus and tracking to its apps. Let's talk about that because, well, Bloomberg's Emily Chang spoke with the Instacart CEO, Fujisimo, and Uber CEO, Dara Khosrowshahi, on the tactics here. Take a listen.
We have heard from Instacart customers that they come to the Instacart app to order groceries for the week, but sometimes they also want dinner for the night. And so we wanted to enter restaurant delivery without distracting ourselves from our number one priority, which is grocery. And so we looked for a partner that would allow us to, from day one, have hundreds of thousands of restaurants available to Instacart customers on the Instacart app. And we're very excited to be doing this partnership with Uber Eats.
Dara, Instacart is a competitor, given that Uber is pushing into grocery and, of course, retail. Why cross enemy lines?
Well, certainly Instacart is a very strong competitor as it relates to grocery. But for us, it was an opportunity to expand essentially the Uber Eats business, especially into the suburban markets where Instacart is particularly strong, families, etc. You know, Uber has historically had a real strength in the cities, the younger, affluent customers who are in the cities. That's where rideshare originally came from. And as we've expanded into Uber Eats is much stronger in city centers than, let's say, suburbs. And we thought that the opportunity to put our brand and our service in front of the incredible Instacart customer base in a way that is a terrific experience will be good for business, but also really good for our restaurant partners. You know, what Uber Eats is all about is bringing more business to our restaurant partners, bringing more opportunities to earn for our couriers. And we're certainly hoping that those Instacart customers are big tippers.
Fiji investors seem to
Fed's
like
Kashkari
Uber's
says the
push
most
into
likely
grocery.
scenario
Why
is
give
we
them a foot
stay
in the
put
door?
for extended period on rates.
Well, I think there are a lot of companies that compete in one area and collaborate in another. And this is a good example where on the restaurant front, we found a lot of alignment. And we think that this is going to be highly beneficial for Instacart customers. Now we have the leading selection in grocery, 1,500 retailers, 85,000 stores in grocery.
And Kashkari says
combined with
if
hundreds of thousands
disinflation
of
comes
restaurants,
again
thanks
or
to
we
this
saw
partnership.
market
And we're
weakening
also
growth in
making
job
our
market,
Instacart Plus
that might
membership
lead to
more
rate
valuable.
cuts.
So we think this is a win-win all around. And when we see
Fed's
these kinds of
Kashkari says we
win-wins,
would
we
hike
jump on
rates
them.
if needed.
So tell us a little bit about the logistics here, how exactly this is all going to work. Will customers be redirected to Uber Dara? What part of the order is Uber handling? How are you splitting revenue and fees?
Yeah, I can get started, and PG can continue. So the experience is an Instacart experience. And the way I put it, Emily, is if you go to the Uber Rides app right now, you see kind of the original Rides experience that you have, but there's also an Eats experience that is essentially looks like it's built into the Uber Rides app, where
Fed's Kashkari says jobs report Friday was softer than expected, but not soft.
Technology that we perfected as part of the platform that we're building in Uber, and we're extending it in partnership with Instacart. So the branding is going to be joint branding, but it's the look and the feel, and the experience is going to feel a lot like Instacart. So I think the Instacart user is going to sit within Instacart, and I think the experience is going to be
Kashkari says if inflation becomes embedded, we may hike if needed.
Are accustomed to.
Uber CEO Dara Khosrowshahi there, as well as the Instacart CEO Fiji Simo, along with our own Emily Chang. Let's return to Washington now, though, because the Special Competitive Studies Project is kicking off its first ever AI Expo for national competitiveness. I sat down with the SCSP chair and, of course, the former Google CEO Eric Schmidt to discuss.
To me, national competitiveness is the challenge for the next 10 or 20 years, because the Chinese are really focused on dominating certain industries, and we need to compete with them and make sure we win. In the case of artificial intelligence, we are well ahead, 2 or 3 years probably of China, which in my world is an eternity.
Fed's Kashkari says we would need to see multiple readings on inflation to be confident to cut rates.
With the CEO of the Special Competitive Studies Project, Ili Bayraktari. Ili, thank you for joining us just ahead of the key Expo unveil. And I'm interested as to ultimately how optimistic you are of China vis-a-vis the US. Eric Schmidt there saying we are years ahead of China. What makes you so confident of that?
China has been pretty clear about their goals, about what they want to achieve with AI. They have a clear strategy to be the global AI leader by 2030. They put enormous resources behind their strategy. They have their national AI champions. And in a short period of time, they've gained a lot of ground when it comes to AI. Now, as Eric said, we are ahead of China, but that should not make us slow down. I think we need to continue investing. We need to continue bringing public and private sector together.
Fed's Kashkari says in March, I jotted down 2 rate cuts for this year. It's possible we will stay at 2 or go to 1 or 0 rate cuts for the June SEP.
Ili, I'm so sorry. We've got some technical difficulties on the line and we're hearing an echo. We'll be back to you in a moment. Ili Bayraktari, he's the Special Competitive Studies Project CEO. This is Bloomberg Technology.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
Kashkari says the U.S. economy is in a good place.
Sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show.
Fed's Kashkari says it seems like we will go sideways for a while.
The wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts. Be alive and on demand.
Fed's Kashkari says we may need to be more patient.
From Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Let's get back to Washington. We're pleased to say the CEO of the Special Competitive Studies Project is still with us, Ili Bayatari. Thank you, Ili, for working through some of these tech issues. But more broadly, I want to get to the tech issue and the use of generative AI within basically the area of, particularly when it comes to intelligence agencies. This is an area that you've got an awful lot of experience in. Are we seeing an adoption of generative AI within our own intelligence agencies in the US?
So I think, like with any previous technology transformative era, I think our intelligence community is adopting. You could argue there are 2 steps forward, 1 step backward, but I think everybody recognizes these technologies are going to be so powerful that
Fed's Kashkari says it's much more likely than raising rates is to keep rates where they are for longer than public expects.
And how they use these technologies. Obviously, there are privacy-related issues about using these technologies. So I think everybody recognizes how these are important technologies that we need to adopt for the intelligence missions purposes. And I think everybody's making some kind of progress in the area of their mission.
Of course, you were Chief of Staff to the National Security Advisor, Master, so someone who has a lot of experience in this field. Going back to more broadly what the Special Competitive Studies Project is doing right here, right now, is you're also trying to find what would stymie the competitiveness of the US. One issue with generative AI is access to energy, access to chips. Where are you thinking of thought leadership of ensuring that the US stays ahead when it comes to energy adoption?
Yeah, I mean, look, the CHIPS Act was the first probably legislation in many years in which you had such a bipartisan support that we as a country dedicated $52 billion to bring back and build in this country some of the manufacturing capabilities that we lost for the last 20 plus years. So I think hardware, and in this instance, chips are really important. I think now we are uncovering that energy demand is going to be a true capability that you need to build these next generation AI technologies. I think there are several paths we can take as a country. There's a lot of energy. There's a lot of energy around fusion, I would argue. We have a lot of companies here at the AI National Competitiveness Expo in DC that represent some of the key fusion companies. We have other pathways towards getting to the energy. But I think AI could help us transform also the energy resources we have, energy sources, and diversify, going forward because of the demands and because of the needs we have, to get to the next generation of these technologies.
Ili, when you're bringing together government institutions, you're bringing together academics, you're bringing together corporates. What outcome ultimately do you want? Do you think we are firing on all cylinders when it comes to discussion of how to harness this leap forward in technology right now?
So I don't think we are. I mean, that's why I think we organize this expo, because innovation happens in pockets. You know, we have like most of the innovation happening in East Coast or West Coast. And then you have in Washington, you know, you have the federal agencies that are doing two things, both trying to adapt these technologies for the purposes of what they do daily, whether it's Health and Human Services or FEMA or Department of Defense. But also they're also drafting policies on how we use these technologies. So the purpose was really to bring, as we call, Hall of Nation in nation's capital, where they can talk, they can exchange ideas, they can exchange business cards, and ultimately hear and talk about the benefits and challenges of all these technologies and how do we move faster in adopting all of them for the next 5 to 7 years.
Well, we wish you well on that bringing together of academics and government and see what the outcome is. Eli Bayraktari, we thank you so much for your time today. Special Competitive Studies Project CEO over there in Washington, the AI Expo. Meanwhile, let's just talk about what Microsoft has been doing. It's deployed a generative AI model entirely divorced from the internet, saying that US intelligence agencies can now safely harness the technology to analyze top secret information. Most AI models, like ChatGPT, rely on the cloud services to learn and infer patterns from data. But this is the first time a major large language model can actually operate fully separated from the internet, which allows spy agencies to use AI while avoiding the risk that data could leak out into the open. This whole narrative is one we're going to stick with now, because we're going to talk more broadly about cybersecurity. The RSA conference is in full swing over in San Francisco, bringing together the world's top cybersecurity government business leaders, and they're going to dissect and strategize on the best practices to tackle such new threats. Let's bring in Palo Alto Networks Chief Product Officer Lee Klarich for more. And Lee, I can imagine once again AI is the first topic of conversation. What's winning out in the battle of, well, bad actors adopting it or the cybersecurity contingent adopting it?
Oh, you're absolutely right. The attackers, you know, when ChatGPT first launched, the first thing they started doing was figuring out how they could leverage AI to their advantage. And the first thing we did in cybersecurity is we started figuring out how we could leverage AI to counter that. And today we've had a series of AI security announcements focused on how we bring precision AI to combat these attackers that are going to be using AI everywhere.
So you bring out ultimately the things that people put in their arsenal to be able to fend off such attacks. Can you just give us a size and scope of how much we are seeing more cybersecurity issues, threats amount because of generative AI?
Yeah, it's hard to trace it specifically to generative AI. We see millions of new attacks launched every single day. We see this in our telemetry. We see this in our machine learning models, our AI models that are detecting these attacks in real time. And all of that translates into billions of attacks being blocked every day. Now, how much of that is specifically the result of generative AI versus more traditional mechanisms? It all starts to kind of blend together, but it definitely points to the increase in scale. And we're also seeing, maybe even more importantly, an increase in sophistication of these attacks, where attackers are able to use generative AI to improve their chances of actually carrying out a successful attack.
Of course, regulation has tried to keep a pace with this, and disclosure, the SEC in particular mandating basically prompt disclosure of whenever a company, a corporate has indeed had a material incident. How are you seeing that prompting the leaders in security within the corporates to come to you to ensure that they've invested in the right product at the right time?
In driving investment towards cybersecurity, the necessary investment, quite frankly, given the security landscape. And a lot of these measures are oriented toward making sure that organizations have the right security capabilities. Increasingly, that means the need to be real-time in their security operations. And when something does happen, prompt disclosure, which of course is really good for the industry. It helps everyone understand what's happening so we can all learn from it quickly. It also makes sure that the end consumer understands what's happening and can take necessary actions if needed. So all of that, though, culminates in the sort of the other side of cybersecurity, which is this is a battle we can win. I'm in cybersecurity, but I'm actually very optimistic about the benefits of AI and other technology benefiting those of us who are all trying to defend organizations around the world.
And you've been trying to defend it since 2006 over with the Palo Alto Networks in the product area. Chief Product Officer Lee Klarich, leaving us with a bit of optimism there. We thank you. From New York and San Francisco, this is Bloomberg Technology.
On season 2 of The Circuit, we're walking with the titans of banking.
You guys love these memes.
Yes, me too. And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
At 12 p.m. Eastern Time, we get the EIA STIA report.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that.
The RSA conference is upon us in San Francisco, so we are deep diving on cybersecurity. Steve Stone joins us now, head of Rubric Zero Labs, which is out with the latest report called The State of Data Security, Measuring Your Data's Risk. I imagine, Steve, a lot of data is at risk right now, and I want to understand just how many incidents you're seeing ultimately having to be identified by corporates right now.
Well, thanks for having us on. We're really excited to be here. When we look at the scope and scale of this problem, you're absolutely right. It's systemic. If we take just one example, if you look at HHS data here in the United States, we see that the equivalent of 1 out of 3 Americans had their personal data impacted in just events against healthcare in just the U.S. in just 2023. So on the corporate side, we are very busy working on this issue.
I am so sorry that we have to cut this short, but at the moment we're going to have to turn our attention to Washington. Steve Stone, head of Rubric Zero Labs, we hope we can return. But for now, President Biden delivering remarks before Congress in his annual Holocaust Memorial speech. Let's listen in.
You're a true scholar and statesman and a dear friend. Speaker Johnson, Leader Jeffries, members of Congress, and especially the survivors of the Holocaust. My mother here, she'd look at you and say, God love you all. God love you all. Abe Foxman and all other survivors who embody absolute courage and dignity and grace are here as well. During these sacred days of remembrance, we grieve, we give voice to the 6 million Jews who were systematically targeted and murdered by the Nazis and their collaborators during World War II. We honor the memory of victims, the pain of survivors, the bravery of heroes who stood up to Hitler's unspeakable evil, and we recommit to heading and heeding the lessons that one of the darkest chapters in human history, to revitalize and realize the responsibility of never again. Never again, simply translated for me, means never forget. Never forget. Never forgetting means we must keep telling the story. We must keep teaching the truth. We must keep teaching our children and our grandchildren. And the truth is, we're at risk of people not knowing the truth. That's why growing up, my dad taught me and my siblings about the horrors of the Shoah at our family dinner table. That's why I visited Yad Vashem with my family as a senator, as vice president, as president. And that's why I took my grandchildren to Dachau, so they could see and bear witness to the perils of indifference, the complicity of silence in the face of evil that they knew was happening. Germany, 1933. Hitler and his Nazi party rise to power by rekindling one of the world's oldest forms of prejudice and hate, anti-Semitism. His rule didn't begin with mass murder. It started slowly across economic, political, social, and cultural life. Propaganda demonizing Jews, boycotts of Jewish businesses, synagogues defaced with swastikas, harassment of Jews in the street and in the schools.
At 12 p.m. Eastern Time, we get the EIA STIA report.
Pogroms, organized riots. With the indifference of the world, Hitler knew he could expand his reign of terror by eliminating Jews from Germany, to annihilate Jews across Europe through genocide, the Nazis called the final solution. Concentration camps, gas chambers, mass shootings. By the time the war ended, 6 million Jews, 1 out of every 3 Jews in the entire world, were murdered. This ancient hatred of Jews didn't begin with the Holocaust. It didn't end with the Holocaust either, or even after our victory in World War II. This hatred continues to lie deep in the hearts of too many people in the world, and requires our continued vigilance and outspokenness. That hatred was brought to life on October 7th in 2023. On the sacred Jewish holiday, the terrorist group Hamas unleashed the deadliest day of the Jewish people since the Holocaust. Driven by ancient desire to wipe out the Jewish people off the face of the earth, over 1,200 innocent people, babies, parents, grandparents, slaughtered in their kibbutz, massacred at a music festival, brutally raped, mutilated, and sexually assaulted. Thousands more carrying wounds, bullets and shrapnel from the memory of that terrible day they endured. Hundreds taken hostage, including survivors of the Shoah. Now, here we are, not 75 years later, but just 7.5 months later. And people are already forgetting. They're already forgetting that Hamas unleashed this terror. It was Hamas that brutalized Israelis. It was Hamas who took and continues to hold hostages. I have not forgotten, nor have you, and we will not forget. And as Jews around the world still cope with the atrocities and trauma of that day and its aftermath, we've seen a ferocious surge of anti-Semitism in America and around the world. Vicious propaganda on social media. Jews forced to keep their hide, to keep us under baseball hats, tuck their Jewish stars into their shirts. On college campuses, Jewish students blocked harassed, attacked while walking to class. Anti-Semitism, anti-Semitic posters, slogans calling for the annihilation of Israel, the world's only Jewish state. Too many people denying, downplaying, rationalizing, ignoring the horrors of the Holocaust. And October 7th, including Hamas's appalling use of sexual violence to torture and terrorize Jews. It's absolutely despicable, and it must stop. Silence.
Shortly expecting the EIA Steer report.
Denial can hide much, but it can erase nothing. Some injustices are so heinous, so horrific, so grievous, they cannot be buried, no matter how hard people try. In my view, a major lesson of the Holocaust is, as mentioned earlier, was not inevitable. We know hate never goes away, it only hides. And given a little oxygen, it comes out from under the rocks. We also know what stops hate. One thing, all of us. The late Rabbi Jonathan Sachs described anti-Semitism as a virus that has survived and mutated over time. Together, we cannot continue to let that happen. We have to remember our basic principles as a nation. We have an obligation. We have an obligation to learn the lessons of history so we don't surrender our future to the horrors of the past. We must give hate no safe harbor against anyone. Anyone. From the very founding, our very founding, Jewish Americans, who represent only about 2% of the U.S. population, have helped lead the cause of freedom for everyone in our nation. From that experience, we know scapegoating and demonizing any minority is a threat to every minority and the very foundation of our democracy. So in moments like this, we have to put these principles that we're talking about into action. I understand people have strong beliefs and deep convictions about the world. In America, we respect and protect the fundamental right to free speech, to debate and disagree, to protest peacefully, and make our voices heard. I understand that's America, but there is no place on any campus in America, any place in America, for anti-Semitism or hate speech or threats of violence of any kind. Whether against Jews or anyone else, violent attacks, destroying property is not peaceful protest. It's against the law. And we are not a lawless country. We're a civil society. We uphold the rule of law. And no one should have to hide or be brave just to be themselves. To the Jewish community, I want you to know, I see your fear, your hurt, and your pain. Let me reassure you, as your president, you're not alone. You belong. You always have and you always will. And my commitment to the safety of the Jewish people, the security of Israel, and its right to exist as an independent Jewish state is ironclad, even when
As we're seeing the key numbers from the EIA Steer report released here, so the current year crude forecasting at 13.2 million barrels per day, while the forward year, so next year's crude oil forecast is seen at 13.73 million barrels a day.
To free remaining hostages, just as we have freed hostages already, and will not rest until we bring them all home. My administration, with our second gentleman's leadership, has launched our nation's first national strategy to counter anti-Semitism that's mobilizing the full force of the federal government to protect Jewish communities. But we know this is not the work of government alone or Jews alone. That's why I'm calling on all Americans.
So the US EIA cuts the forecast for this year's world oil demand growth by 30,000 barrels per day, now seeing 0.92 million barrels per day year-over-year increase. For next year, they raised the forecast by 70,000 barrels per day, and now seeing 1.42 million barrels per day year-over-year increase.
Here in Emancipation Hall, the U.S. Capitol, among the towering statues of history, is a bronze bust of Roald Wallenberg. Born in Sweden as a Lutheran, he was a businessman and a diplomat. While stationed in Hungary during World War II, he used diplomatic cover to hide and rescue about 100,000 Jews over a 6-month period. Among them was a 16-year-old Jewish boy who escaped a Nazi labor camp. After the war ended, that boy received a scholarship from the Hillel Foundation to study in America. He came to New York City penniless.
Also seeing a report that TikTok sues the US government over law enforcing sale or ban. So according to the New York Times.
He became a renowned economist and foreign policy thinker, eventually making his way to this very Capitol on the staff of a first-term senator. That Jewish refugee was Tom Lantos, and that senator was me. Tom and his wife Annette and their family became dear friends to me and my family. Tom would go on to become the only Holocaust survivor ever elected to Congress, where he became a leading voice on civil rights and human rights around the world. Tom never met Raoul, who was taken prisoner by the Soviets, never to be heard from again. But through Tom's efforts, Raoul's bust is here in the Capitol. He was also given honorary U.S. citizenship, only the second person ever after Winston Churchill. The Holocaust Museum here in Washington is located on a road in Raoul's name. The story of the power of a single person to put aside our differences, to see our common humanity, to stand up to hate, and its ancient story of resilience from immense pain, persecution, to find hope, purpose, and meaning in life, we try to live and share with one another. That story endures. Let me close with this. I know these days of remembrance fall on difficult times. We all do well to remember. These days also fall during the month we celebrate Jewish American heritage. A heritage that stretches from our earliest days to enrich every single part of American life today. Great American, great Jewish American, named Tom Lantos used the phrase, "The veneer of civilization is paper thin. We are its guardians, and we can never rest." My fellow Americans, we must be those guardians. We must never rest. We must rise against hate, meet across the divide, see our common humanity, and God bless the victims and survivors of Shoah. May the resilient hearts, the courageous spirit, and the eternal flame of faith of the
So the EIA sees this year's US natural gas consumption at 89.31 billion cubic feet a day, which is down from the forecasted 89.92 billion cubic feet a day in April.
That was President Biden delivering remarks at a Holocaust remembrance ceremony at Capitol Hill. And in his remarks, he also expressed his concerns about anti-Semitism on college campuses, the escalation of protests, and a commitment for the release of hostages abroad. Now, when we come back from break, we're going to bring you back with Bloomberg Crypto. Stick with us. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
The EIA sees 2025 US natural gas consumption at 89.64 billion cubic feet a day, which is up from the forecasted 89.12 billion cubic feet a day in April.
Live from Bloomberg's world headquarters in New York, I'm Shanali Basak.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
And in just a moment, Kavita Gupta, founder of Delta Blockchain Fund, is joining us. She discusses the volatility in crypto and the development of Layer 2 solutions.
Plus, we speak with
We have posted out the New York Times article regarding TikTok suing the US government. That is on the feed for anyone interested.
SEC warns Robinhood that it faces an enforcement action over its crypto business.
And we're going to talk about the wealth effect from crypto as a recent study shines light on how investors are spending their digital fortunes.
All that and more on Bloomberg Crypto. First, though, a snapshot of the market today. Taking a look at Bitcoin over the past week, we do see it higher by 6.7%. The cryptocurrency surging on Friday. That followed a soft jobs report, which combined with what we heard from Fed Chair Jay Powell, actually led to a rates reset, a move into risk-on assets like crypto. Bitcoin had dropped to 56,000 on May 1st. It was the lowest level.
And more from the EIA, US crude oil production for this year is expected to rise by 270,000 barrels per day to 13.2 million barrels per day. That's against the earlier forecast of a 280,000 barrels per day increase, so a slight downward revision.
Despite last week's earnings beat, with warnings that a crypto sell-off could hurt the business in the coming quarters. Coinbase Global shares down by 2.4%. Also, let's take a look at the crypto miner Marathon Digital Holdings. Those shares are moving lower today. This after surging yesterday on the back of news that the company is restructuring. We're going to be watching its earnings closely on Thursday. Those shares down by 1.4%. Seeing some green now on the screen when it comes to the iShares of Bitcoin Trust, ticker IBIT. BlackRock's IBIT moving higher on the day. Shanali?
Tim, you got BlackRock, I've got Grayscale, because interestingly enough, you have seen the Grayscale Bitcoin Trust seeing net outflows about $17 billion since it was converted to an ETF. But last week, the world's largest crypto investment vehicle saw a net inflow of money for the first time since January. Now, that was only about a $63 million inflow you've seen on a net basis, but of course, it does signal that perhaps the tide is turning when you've seen that many days in a row of outflows. Of course, Tim, Grayscale also looking to bring new products to market as it pertains to Bitcoin and also Ethereum in the ETF form.
Okay, I want to talk a little bit about the company formerly known as Square. We're talking about Block because we want to highlight a new strategy that we're seeing from Jack Dorsey over at Block. The company, we learned last week, is going to invest 10%.
US crude oil production for next year is expected to rise by 530,000 barrels per day to 13.73 million barrels per day. So that's up from the prior forecast of a 510,000 barrels per day increase. Again, according to the EIA.
Shares over the last 4 days up more than 8%. And then remember, Block owns the Cash App. that generated $1.26 billion in the first quarter. Remember, it began by allowing people to send money to one another, but it's evolved, it's expanded. It offers
TikTok just adding in this MIT piece that the law that's in question would force the app to shut down by January 19th of 2025.
Alicia Haas about how Coinbase is expanding beyond Bitcoin trading. Base, where Coinbase allows developers to create new apps on-chain, is one way that it's trying to bring new clients on board. Here's what she had to say about the potential.
There is some meme coin activity on Base, but I would focus you on this is the creative content. This is part of the process. We are seeing really exciting new applications being built on Base, like in the areas of social, gaming, and I think this is just part of the journey to get there. I think, again, the key that I want to focus on is a platform that enables quick, fast transactions, just like we move from email to text, text to WhatsApp.
U.S. petroleum and other liquid fuels consumption for this year is expected to rise by 200,000 barrels per day to 20.4 million barrels per day, unchanged from the prior forecast.
The Delta Blockchain Fund. Kavita, good to see you again. I just want to start with volatility that we've seen over the last week or so. How do you explain the volatility, especially increasingly when people are talking about, okay, Bitcoin is an asset that we don't see necessarily linked to other moves in financial instruments?
Yeah. Hey, Tim. Thanks for having me. I think the volatility we're going to continue to see, I expect to see this continuously over the summer because there's first a lot of geopolitical situations which keeps on popping up. Secondly, we are seeing that there is a pressure whenever the Bitcoin goes on a little higher, a big sell order comes in. When it moves down, we see a big buy-in order comes in. I think the global market with the ETF in has really moving the prices in the same ranges of volatility. But I think one of the biggest one is, of course, anytime when there is a strong notice from SEC, pretty much the whole market moves. The very interesting part is this time with multiple Wells notices coming out, it didn't move to the extent people were expecting, especially after the price out from the Bitcoin halving. So it's very interesting how the market is still holding up in a very same range.
Kavita, can you double down on this thought here? Because for a while there, we've seen the SEC really start to bring the hammer down and the market really shrug off the concerns. And you're seeing new Wells notices and potentially enforcement actions come to the surface, and the psychology may be changing. How much of an impact can the SEC at this point have in really putting a clamp on the potential for crypto?
Not in the real sense within the crypto market. So people who are native crypto buyers or really believe in crypto have been there for last 2-3 cycles. It really doesn't affect them. It basically, they always end up thinking like, oh, it's a great buyer's market. But overall in the traditional market, it just creates a little bit more worry when you're as a fund of fund or you are a traditional hedge fund. Should I really do this or should I just hold on? Because already it's summer, liquidity is tight, tax season just went in. So I think it is just one more factor instead of the factor. And also I think the upcoming elections is what everybody is eyeing for. And I think September, October is when we are expecting a huge market movement with respect to it.
It is just one factor, but it's also a factor that can come as a surprise to investors of publicly traded companies that do have exposure to digital assets, Kavita. If you were to look across the landscape right now at all the publicly traded companies that are in the space, which one do you think is most susceptible to SEC enforcement or regulatory risk?
Within the crypto space or generally?
Within the crypto space.
I think if you look at crypto space, like we recently got a bunch of Web2 companies actually getting it like Robinhood. I think I don't see susceptibility, I would say, for the word. The reason for that, to be very honest with you, would be where is the definition? I think all we're going to see a lot of noise and a lot of these companies really pushing back on SEC. And given the time horizon of the election, which everybody is looking at, where is this SEC and what is the mindset going to be? I don't think we're going to have any clarity on it at all. And if I have to pick one company, honestly, I feel that would be unfair because everybody is getting Wells notices based on the same thing. Hey, you may be trading security, but what are those securities? Have you clarified anything on it? It's still a question mark. There is no clarity on it. And so there are no answers to it. Said that, with Bitcoin being very clear and having so many ETFs, I'm not expecting ETH ETF this year for sure, given the SEC stand. But does that make any of the traditional hedge funds who have been holding ETH on their balance sheet a question? I personally don't think so.
What about for developers? If you're sitting here looking to develop on one of the existing chains, and there's so much uncertainty around how they'll be treated from a regulatory perspective, how much risk
The EIA expects a Brent crude spot price of around $90 a barrel for the rest of this year on OPEC plus oil production cuts and ongoing geopolitical risks.
Over 2 years, we are seeing massive movement, brain drain, I would say, a lot of amazing talent leaving US when they're building on
So
the
just
blockchain
worth
crypto
noting as
space.
well that
And I
US
think we're
crude
gonna
oil
see a
futures
bunch
as
of
well
it
have
with the
since
AI
paired their
data
losses and
regulations,
erased those
which are
losses since
clamping
the release
down
of the STIA report.
on the same direction. But in the blockchain crypto space, whether you're building on Bitcoin, whether you're building on Ethereum, Solana, Polygon, we are continuously seeing major tech talent moving to places like Dubai, Lisbon, Hong Kong, Singapore, and not having US, definitely not with respect to registration or even sharing in that tax dollar, just on the fear you are legal in the rest of the world, but you are in a gray area in one country for no reason, for changing nothing. And I think that should be a very big worry for the US economy.
Kavita, founder and
The
general
EIA
partner
goes
of
on to
Delta
say that they
Blockchain Fund.
expect
We're so
Brent crude
appreciative
oil
of you
spot
breaking
price to
down
average
parts of the market that people
$85 a
don't get to
barrel
look at
next year
quite enough.
as global output
Meanwhile,
picks
Circle
up.
CEO Jeremy Allaire is confident that regulation, institutional adoption, and stablecoin development is headed in the right direction. And here's what he told Bloomberg yesterday.
People would always ask me, when's mainstream adoption going to happen? What are the things that are there? And I've always said you need regulatory clarity. You need the technology to become much more scalable and usable, right? And then you need the people, the mainstream applications that people are going to be interacting with this through, whether you're a business accepting a payment or an end user. You need those to connect up to that. All three of those have been happening.
We're joined now by Alex Thorne, Galaxy Digital Head of Research. Alex, we were talking with Kavita a little bit earlier about the uncertainties that are created by the regulatory environment, and curious from your perspective on limitations here. Stable coins are the closest thing to real money, I guess. But what about everything else being built on these chains?
Yeah, hey, Shanali. Hey, Tim. Great to be back. It's a great question. There's a lot of stuff being built. I think DeFi is still a huge sector inside crypto that has a lot of regulatory uncertainty and a lot of opportunity. I think if you look at where the SEC has been very focused in the U.S., it's primarily around questions of whether you've issued tokens that they think are unregistered securities or whether you're facilitating the trading of tokens they think are unregistered securities. So effectively acting what they say as an unregistered national securities exchange. This is a huge question for DeFi. I would say most of the inquiries and Wells notices and enforcements that have been brought by the Securities and Exchange Commission don't really touch the Bitcoin world. And so that, I think, uncertainty about the regulatory standing of Ethereum and its applications has contributed to Bitcoin's outperformance during this bull run.
Hey, Alex, the regulatory regime could change in early November with the election. I'm wondering from your perspective, as Galaxy Digital Head of Research, which presidential candidate out there right now is best for the crypto community?
I think in general, any kind of change in posture at the major market regulators would be beneficial, whether that comes due to retirement or a new administration coming into office. I think it sort of remains to be seen. I think even in the case that the current administration stays, we're likely to see some changes that are beneficial. You've got bipartisan support in Congress for changes in the way regulators have approached this industry. But there's no doubt that Republican allies in the House and in the Senate are more favorable to digital assets.
So essentially you're saying anyone who's there, apart from who's there right now, would be an improvement?
I mean, look,
is that what I'm hearing?
I think it could improve in any case, but the prior Republican administration was more amenable, and I think now you've seen, whether it's from candidates for the Republican nomination, independent candidates, there's a swath of candidates across the sort of whole ecosystem, even Democratic challenger, that are more favorable to digital assets in the current administration.
Alex, how do you think about how this all impacts kind of projects moving forward? If we're thinking about all the uncertainty in the industry, you're saying Bitcoin is kind of exempt right now from a lot of that uncertainty. Does that just create more money flowing into Bitcoin? And what is the case for that? I mean, you've seen kind of Bitcoin level off here and really limit itself in terms of how much more interest can be drawn in the wake of the advent of the ETF and in the wake of the halving. What's the next catalyst? And is Bitcoin being suppressed at these levels kind of a cap on how big the industry could grow?
Pointed question. I appreciate it very much. I think that we've had such an extreme rise. I mean, Bitcoin's up over 280% since January 23. It's up over 50% this year. It's reasonable for any asset that has risen that much to cool off a bit. Frankly, I mean, it's almost humorous because I was on the show over a year ago, and we were talking when Bitcoin was about $22,000 about the prospects. Obviously, a lot can change for Bitcoin. From Catalyst standpoint, you have these advisor platforms and wealth management platforms that really haven't turned on selling Bitcoin ETFs on an unsolicited basis yet. When we predicted in October that there would be 13 or 14 billion in net inflows into these ETFs, that was solely relying on those wealth management platforms and advisors. And instead, we've seen about that much come in pretty much through brokerage trading platforms. So I think you'll see a lot more interest. Obviously, the macro situation is part of that. I think obviously with rates and if we see some easing on the monetary side, risk assets in general will benefit. I think broadly to the first part of your question, I think, when you think of what Bitcoin developers in the ecosystem are working on now, it's getting much more interesting on layer 2s, on DeFi. I think that could drive more interest in the sort of Bitcoin investment case beyond simply Bitcoin as digital gold or a scarce, non-sovereign monetary asset. But I think that core case remains very strong. I would say it is stifling, to the prior guest's point, some builders and investment in the U.S. That being said, in Q1, I think over $2.5 billion was invested by venture capitalists into 600 plus crypto-related deals. The vast majority, the vast plurality of both deals and dollars invested in companies founded and headquartered in the United States. So the U.S. is still the leader. Policymakers just need to be wary that they don't stifle what could be major innovation for the future.
Alex, what about the recent flows into the ETFs? What are they telling you about the direction moving forward?
I would say that obviously we saw significant outflows over the prior 2 weeks as Bitcoin dipped below 60,000. I don't personally believe that the outflows necessarily caused the dip. I think if you look at the flows versus the daily float on Bitcoin, they're still not really the majority at all. I think you saw some folks take gains perhaps, and that accounts for some of the outflows, but something like 90+% of the capital that came into those ETFs between February and April did not exit last week. So I happen to think that the ETF buyers, particularly later when they're comprised primarily of advisors and wealth managers, will be sort of stronger hands than short-term traders.
Right.
And I think the outflows showed that.
Alex, we gotta leave it there. Thank you so much for your time.
Alex Thorne,
Thank you,
Galaxy Digital Head of Research. Really appreciate you joining us.
That's all for Bloomberg Crypto. Join us same time, same place next week, Tim. This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zabe Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome to Bloomberg Markets. I'm Shonali Bassick. Let's get a check on these markets. The S&P 500, you have some green on the screen again today. NASDAQ 100 as well. Both indices up about 0.3%. The two-year yield's about steady here that we're looking at. Remember, it's a big day in the bond market. Relatively low volatility, but let's flip up the screen because you still have some volatility in the bond market as well. The two-year yield, while you have it flat around 480, remember we have more economic data ahead on the week, and you have a lot of Fed speak. Neil Kashkari earlier today even saying that you could expect Fed rates to stay on hold for longer. The 10-year down about 5 basis points, now well under that 450 level, down to 443. And remember, you have that 10-year auction tomorrow as well, really testing Treasury issuance at the longer ends of the curve, 30-year later in the week as well. New York crude also on the decline, down to 78 on the day, 0.4% higher, but still not too much movement there. Gold spot also taking a breather, about 0.3% lower. Some midday movers on the equity side here. Big story, Apple unveiling new iPads today at its Let Loose event. It's an opportunity to clean up the confusing iPad lineup, which is currently made up of 5 different models. And Apple has spent 14 years trying to make the iPad into a computer replacement. And Peloton soaring today after CNBC reported that a number of private equity firms are considering a buyout of the fitness company valued at $1.3 billion as of yesterday's close. Peloton shares now surging about 13% on the day. Remember, shares hit an all-time low about a week ago after CEO Barry McCarthy announced plans to step down as it embarks on a major restructuring. We're going to discuss that Peloton story a little more now with Bloomberg's Mark Gurman. He's going to talk about Peloton. He's going to talk about Apple as well. Mark, on Peloton, it's interesting. You do see the rise in the stock today. It's still down about 30% on the year. Is this a stock that just should not be in public markets anymore?
Peloton is a laughing stock, and I don't think it should be in public markets personally, and I don't think it's a good buy for a private equity firm either, right? Barry McCarthy 2 years ago takes
The EIA forecasts U.S. retail gasoline prices averaging $3.70 a gallon from April through September, similar to the same period last year.
Almost 10,000 layoffs in total, goes all in on software and content, remakes his executive team, tries to relaunch a revamped app to get more interest. That failed. A marketing chief comes in and leaves within less than a year. Certainly nothing good happening there. And then 2 years later, restructuring again. The CEO stepping down, no successor even in place. Had no one who could capably take over for him. They have 2 board members coming in there, getting paid $150,000 per month each while they're going to be running the company. It sounds like something BlackBerry did 15 years ago. The best thing that Peloton can do at this point, close down its hardware business, go all in on content, and try to sell it to Amazon or Netflix to make it part of their subscriptions. Because otherwise, I don't see this company existing that much longer. They have about $800 million in cash left. They're burning millions and millions per quarter. So this is a company that's not going to last much longer unless it gets sold.
Well, to the point that you're making there, you almost drew out the private equity playbook pretty perfectly. Sell the hardware, bring in some money, maybe sell it. I mean, if you see a private equity firm or a couple come in, do you think that there's value to be recouped here?
No, I don't think there's value to be recouped here. Nobody's going to buy the hardware business. The hardware business is a major money loser. It has always been a money loser. The previous management of Peloton set the company so far back by believing that the COVID pandemic would be the new normal forever, failing to see that gyms would reopen, fail to see that normalcy would again prevail, and they believed that everyone was going to buy these bikes. They simply built too many, put too many plans in place to build more, and really set the company back, that even stripping the whole thing apart and running it into the ground like McCarthy did couldn't save this company, and he's out about 2 years later. So I don't see any financial win here for anyone unless the hardware business is just shut down and closed, and they write that off and take a huge loss there and try to sell the content business for a couple $1 billion to a Netflix or Amazon. But I don't really see the private equity play working out here. I don't see staying on the public markets lasting much longer either.
Let's talk about Apple a little here, too. Have to get your opinion on how they're letting loose. How do you think their new iPad lineup is going to shake up among investors?
Yeah, I think the new iPad Pro is quite impressive. As expected, they've gone all in on AI. This is an AI device, foremost with the M4 chip. It's a little bit faster, 50% faster than the M2 chip in the iPad Pro from 2022, but the big change there is a faster engine for artificial intelligence tasks. The new OLED screen on that iPad Pro is quite impressive. This is going to be the first OLED tablet to really ship in high capacity and high volume. So I think this new iPad Pro, though it's quite a bit more expensive than the prior version, is really going to be a winner. The new iPad Air, $800 now for a 13-inch iPad Air. That means that the 13-inch iPad screen size is the cheapest it's been since 2015 when the original iPad Pro was announced. So that's a considerable achievement there as well. And I think that 13-inch iPad Air is going to be a quite popular machine as well. The big nuance there is the hardware is so advanced, the software never has been able to keep up with the iPad hardware. The question is, will the software catch up this year? And I think we'll start inching towards that direction, which is going to be a pleasant development for iPad lovers.
Really quickly here, Mark, does it create a problem for the newer iPads to compete significantly with the MacBooks?
No, I think it's a good thing. You want to make the iPad as good and capable and powerful as possible.
The EIA expects some OPEC Plus producers to continue to limit oil output after the current voluntary OPEC Plus cuts expire at the end of June.
How you can make them the best possible devices, and you'll see which one wins out. You'd rather have one win out than both lose.
Mark, we thank you so much for your analysis, both on Peloton and on Apple. That is Bloomberg's Mark Gurman. Now to some breaking news that hit over the past hour. As expected, a TikTok filing its lawsuit against the U.S. government over forcing it to divest from its parent company, ByteDance, or banned from the United States. TikTok saying that the law would force the app to shut down or be sold by January. Joining us now from D.C. is Bloomberg's Mike Shepard, who knows all the ins and outs here, not just of the TikTok side of things, but the broiling in Congress over this. How is this lawsuit going to be met?
Well, we can expect the Justice Department to mount a vigorous defense in support of the law. The Biden administration had gotten behind it, in the closing days as it was added to a much larger foreign aid package. President Joe Biden, even before that happened, had indicated he would sign the law without offering too many other specifics. Remember, the Biden administration, a number of key officials, including the head of the FBI, the director of national intelligence, and other members of the president's
White House's
cabinet,
Kirby says the US has been
expressed
told by
concern
Israel that the
that
Rafah
TikTok
operation was
poses
limited.
national security risk for two reasons. Its Chinese ownership could allow the Chinese government to gain access to U.S. users' data. They also say that the Chinese government could use the platform as a vehicle for propaganda, and especially heading into an election year, they see that as a risk.
You know, it's interesting. You think about what Eric Schmid recently told Bloomberg TV, this idea of weighing a purchase of TikTok from its Chinese owners, but he said he'd rather see the app regulated, not banned. How welcome to that idea is the U.S. government?
Well, the U.S. government right now, based on the law and where the administration is standing, says that that is not possible. They really need to see new ownership and a complete severing of ties with China for the app to continue in its current form. However, we see today in this lawsuit, which in many ways, this is the moment we've been waiting for. Since President Joe Biden signed the bill into law last month, TikTok and its owners, Beijing-based ByteDance, have been preparing this legal challenge, and they're doing so on First Amendment grounds. They're laying the groundwork for a serious constitutional challenge to this law, saying that it will infringe the free speech rights of 170 million TikTok users. And they're also saying that it's without precedent, that Congress really hasn't made a law like this without much of an argument underpinning it.
Mike, we thank you so much for bringing us the latest on TikTok versus the United States. Now, coming up next, we're going to talk about a rough day for the world's biggest entertainment company as Disney's streaming growth and profit outlook miss estimates. It's our stock of the hour. We'll bring you all those details next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the next episode of The Circuit, Google CEO Sundar Pichai on this AI moment.
Do you worry about becoming a dinosaur?
a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We took prices up a little bit in the beginning of this year and didn't really see much of an impact. So as to what the future brings, we're obviously very judicious with the way that we price. We want to provide access to as many guests as we possibly can. But we do believe that the great experiences we provide, people are willing to pay for.
Disney CFO Hugh Johnson on the streaming price hikes and the impact it's having on the business, which brings us to the stock of the hour. Shares of Disney under pressure after reporting Disney Plus subscriber growth disappointing Wall Street's expectations and a profit outlook for the year that also came up short. Let's discuss this with Bloomberg's Chris Palmieri in Los Angeles, who covers this company super closely for us. Chris, you look at the numbers, you could have found some good news, but Wall Street is hanging on to the bad news. How does this really play into investor excitement for Disney's future?
Yeah, Wall Street's so negative. It's hard to read. Yeah, when we first saw these numbers, we thought they looked pretty strong. Profit was a big beat, and they were raising their guidance for the full year earnings per share as well. So also dramatic improvement in profitability in the streaming business. From like a $500 million loss to just $18 million or so big improvement there in streaming. But the company did say in this current quarter, their fiscal third, they weren't going to have as many Disney Plus streaming service signups. The theme park business, which has been such a strong growth engine, was going to be flat in terms of profits. And then even probably more ominously on the call, the CFO said that they were seeing signs of weakness in the parks business overall in terms of ramping down from that big post-COVID bump that they all saw. So those were the big concerns.
Is Nelson Peltz looking at these numbers and saying, I told you so? Or is he sitting there saying, wait a minute, things need to turn around faster, I still hold stock?
Well, you can look at this two ways. There's definitely evidence that
the Fed bids for 3-year notes total $7.3 billion.
Improvements in costs and all that. But when you see the stock market reaction, yeah, I'm sure Nelson is going to say that somebody should have been in there to warn everybody that this slowdown was coming. And again, I'm sure he's concerned. It came up on the call. What about CEO succession? What's being done there?
I think the outlook here is probably the most concerning here. How do executives at Disney really counter that?
They're just going to keep trying to execute. They did say fourth quarter for them was going to be better, both in terms of parks and in streaming. They've been saying for years now, and they've reiterated that the streaming business overall is going to be profitable in the fourth quarter, which will be huge. I mean, most of the competitors aren't there yet outside of Netflix. So that will be a significant turning point. But at the same time, you're also seeing real weakness in the traditional TV business this last quarter in particular. Some of it is these new deals like with Charter. They're giving Disney Plus to cable subscribers, but they're canceling cable channels that they used to get. So it's a mixed bag for Disney.
Some tough love here. I mean, what does this all mean for Bob Iger at the end of the day?
You could look at this report and see signs of a turnaround. Maybe he's going to make this work and exit in a couple years on a high note, but still to be determined.
Chris, thank you so much for covering. This has been the worst day for Disney stock since November of 2022. So certainly a tough turnaround. Bloomberg's Chris Palmieri. Thank you. Now, coming up next, we're going to talk about a newly formed group looking to influence the ever-changing city of Miami. We're going to go down to Wall Street South with Andre Dua, McKinsey managing partner. Up next, this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology. This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg Markets, and I'm Shonali Bassick. And a new global ranking of the wealthiest cities puts New York at the top of the list, with residents' wealth in excess of $3 trillion. New York has almost 350,000 millionaires, which is the most of any city, and up 48% from a decade ago, according to the firm Henley & Partners. That means about 1 in every 24 residents has a 7-figure net worth. And when you look at Wall Street South, Miami ranks 33rd among cities with the most millionaires, which is up from 78% over the past 10 years. And speaking of Miami, we're going to talk about Wall Street South for our Wall Street Beat today, because we're looking today at the newly formed partnership.
So in 10 minutes time now, at the top of the hour, the US is due to sell $58 billion in 3-year notes. The prior bid to cover was 2.5, and the prior high yield was 4.548%. And taking a look at a note from JP Morgan strategists, they predict a smooth reception based on the outright level of yields and subdued near-term event risk for this 3-year note auction. The latest CFTC positioning data shows that speculators were net short around 1.1 million 5-year note futures, a possible source of covering demand at the auction.
From the models in other cities, including New York, DC, and others. But what we're really inspired to do was to bring a group of business leaders to act together in the civic interest to create a Miami that works for everyone. So our real animating thought is, how do we take this remarkable momentum that we've seen in Miami and turn it into something that's durable, long-lasting, and continues to propel Miami into the best cities in the world?
Now, it's interesting because you have some interesting leaders in this group, including billionaire Ken Griffin of Citadel, Dan Sundheim, and Orlando Bravo. How did you bring people into this group? And again, what do they want to accomplish?
Yeah, look, as you said, finance has obviously been moving down to Miami as an industry, but what you see is a real diversity in the economy, and our goal was to bring together, let's call it the new Miami, people like Ken, Orlando, and Dan, and put them together with the existing business leaders who've been responsible for Miami's growth and prosperity over the last 10 or 20 years. And the real thought is, how do we bring the power of that group together to kind of add to the civic infrastructure of Miami and make sure that we really seize this opportunity of a diversifying, more vibrant economy, opportunity, an attractive business climate, and really take it to the next level. So that's really what we were thinking. But I think it's very important to note that what we really are striving to do is to build a Miami that works for everyone, not just for the newcomer people who have moved here, but the people who've been here for a long time. And so, what does that mean? That means housing that's more affordable. That means a transit and infrastructure system that can deal with our growth, and also an educational system that provides for terrific opportunities for our children and creates a pipeline of university graduates who can power our future economy.
You've certainly front-run me on some of the issues Miami, of course, is still having for the people who've been looking to move. Andre, I should also say that you are one of the people that did move, that you moved out of New York in 2019, and of course, there's been that interesting migration. I've got to say, some of the people that I know that have moved have spent an ample amount of time back up in New York City. How sustainable is this move? When you think about people that are coming newly to Miami, who are they?
Well, look, I think they're coming across a range of different sectors. They're clearly coming in finance. They're coming in the VC and the tech community. They're coming in private equity. They're coming to expand our already strong sectors in healthcare, real estate, tourism, hospitality. And as you know, Miami's really emerged as one of the global centers of sports and culture. So this is a story not just about one sector, but about many sectors. But I think what we're all realizing is there's as much as our trajectory in the last 5 to 10 years has been unprecedented in America, our success is not guaranteed and our future story is not yet written. And so how do we come together and work together with elected officials, other civic leaders, and create something which we can be proud of and provides the maximum opportunity for the most people in our great city?
How much does it cost to join the partnership?
We've all contributed at a meaningful level and made a commitment for the next 3 years. And the goal is to be able to fund an executive director, a small staff, and a series of activities that put us at the center of the conversation.
So what exactly is the conversation? If the idea here is to have a small staff and you want to influence, potentially the future of education, maybe even transit in Miami, how do you start making those moves realistically? Is it a lot of pressure being put on the local government, or is it the idea of bringing in more donors and more people to the city?
Look, I think that's an excellent question. What we've sought to do is to start by saying, well, what does it take to be a great city? So we actually today have released a report in which we lay out what we see as the 10 attributes of a great global city. Then we've said, look, let's take an honest accounting of where we are against those attributes. Where are we doing very well? For example, we have the lowest unemployment rate of any large city in America. We have the top performing school district of the top 5 urban districts, and so on. So we've laid that out. We've also laid out the areas.
So in 5 minutes' time now, at the top of the hour, the US is due to sell $58 billion in 3-year notes. The prior bid to cover was 2.5, and the prior high yield was 4.548%.
And let's now pick a few issues that we can work on together. And I think you're right. It's going to take a collaboration between business leaders, elected officials, with whom we've entrusted taxpayers' dollars, to figure out what are the best and most strategic investments that will position us well between now and the next couple of decades.
Really quickly here, who are you trying to attract to Miami? Is these kind of the younger financial folks, or is it the billionaires that have already amassed their wealth in New York?
That's a great question. I think what we're seeking is a dynamic, diversified economy in which all residents, including those who've been here for a long time and newcomers, can enjoy a high quality of life. That means a city that's safe, a city with great education, a city you can easily move around, and a city where you can afford to live with your family. And so, Shonali, I don't think there's any particular plan to say this is about attracting people. Right. This is about creating a city for the long term that can be successful and that ascends into the ranks of the great global cities.
Andre, we got to leave it there. That is Andre Dua of McKinsey & Company. I'm Shonali Bass. fantastic. That does it for Bloomberg Markets today. Stick with us through the close. Still a lot of markets up ahead for you. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Shortly expecting the results for the US 3-year note auction, the Treasury pre-saled when issued yield comes out at the top of the hour.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context
Treasury 3-year yield pre-sale 4.608%. That's 4.608%.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg Television and Radio, where we are following news from both the current and former U.S. presidents today. Current President Joe Biden given an address on anti-Semitism on Capitol Hill, while former President Donald Trump is in court in New York, where Stormy Daniels is on the witness stand. We'll have the latest this hour, plus reaction with Republican Congressman from Florida, Byron Donalds. We'll also get analysis from Cliff Young of Ipsos polling, as well as our political panel, Jeannie Shanzano and Lester Munson. And We'll bring you an interview with Minneapolis Fed President Neil Kashkari this hour, live from the Milken Conference. So a lot is ahead. First, though, as always, we got to start with the markets and get a check on those from Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. We're looking at an update right now for the Dow, the S&P, NASDAQ, the outperformer right now, Russell 2000 up 0.7%. To put that all in context, we are looking at a gain now of just about 0.3% on the S&P, higher by 14 points now, again up 0.3. The S&P closing in on 5,200, 51.95 right now. Dow Industrials up 54, a gain of 0.1%. The NASDAQ Composite Index up 35, up 0.2%. 10-year 4.43% with a 2-year that's now yielding 4.80%. Spot gold down $10 the ounce, down by about 0.5%, while West Texas Intermediate crude oil is up 0.3%. Peloton Interactive shares are surging now by 13.6%, the most intraday in 6 months after CNBC reported that a number
two spot 63, 2 spot 63, high yield 4 spot 605%, 4 spot 605%. So the US sells $58 billion in 3-year notes and awards 87.59% of bids at high. Primary dealers take 14.87%, direct 19.6%, and indirect 65.52%.
We're awaiting the latest from Capitol Hill after the second meeting in as many days between the Speaker of the House, Mike Johnson, and Congresswoman Marjorie Taylor Greene of Georgia, who, of course, has threatened to act on her motion to vacate the Speaker as soon as this week. Before the meeting that was scheduled for 12:30 p.m. today, she said she's clear in what her demands to Mike Johnson are. She would like to see the Hastert rule followed, which means a majority of the majority must support any bill. She wants no more funding for Ukraine, to defund the special counsels who are looking into former President Donald Trump, and avoid a shutdown before the election by passing ACR to automatically enact a 1% spending cut. The question is, what leverage does the Congresswoman have over the Speaker? Is he likely to agree to any of this, especially when Democrats have said that they will act to table a motion to vacate if indeed it is brought forward? So we want to get reaction to all of this now from inside the Republican conference. I'm pleased to say joining me here on Bloomberg Television and Radio live from Capitol Hill is Congressman Byron Donalds, the Republican from Florida. Congressman, welcome back to Bloomberg. It's great, as always, to have you. What is your understanding as to what could go down in your chamber in regard to this motion to vacate in the coming days?
Well, I think what's likely is that the motion will be tabled by large amounts of the Republican conference, and from what we're hearing, members of the Democrat conference. Look, at the end of the day, there have been questions from many conservatives about a lot of the bills that have passed on the House floor, where a majority of Democrats have been voting for those measures. But I believe that right now, going through a battle for the speakership is not in the best interest of the Republican conference or in Congress overall. So I think at the end of the day, it's going to get tabled, and then we're going to move on. We're going to move on to the appropriations process for the next fiscal year.
Russia's Novak says OPEC Plus doesn't discuss output hike.
To protect the House Speaker, which may be the thing that keeps him with the gavel in hand, or about the support from former President Donald Trump. To what extent does he influence the outcome here?
I think President Trump has made his views known that he doesn't want to see the House go through this motion to vacate process right now. So I think right now you have a lot of people up here on both sides of the aisle who just want to basically get to the election season and let the American people have their voices heard about which way they want Washington to go. Do we want to continue to go down the line of the crazy agenda of Joe Biden and the Democrats that's led to massive open borders, massive inflation, on the verge of World War III? Or do we want to go back to Trump-era policies which actually improved wages in our country, kept inflation low, led to a more peaceful planet across the board, and actually secured our nation? And so that's the conversation I think every member on Capitol Hill wants to have. I think we're probably going to get to that. We're definitely going to get to it. I think the motion to vacate is probably going to get tabled in the process.
Well, Congressman, you just mentioned there the border, which of course is something that your conference has focused immensely on and passed H.R. 2, though with no Democratic support. Never got the chance to vote on that bipartisan border deal that was reached between Senate negotiators and the White House. President Biden has, though, expressed interest in doing something on the border legislatively, trying perhaps that effort again. Do you expect you will have a chance to vote on something else before the election?
No, I don't, because what Joe Biden wants to do is play politics with the issue of securing our nation. Even the border bill that was in the Senate, that was pure politics. The Senate didn't even bring it up for a vote. That's how toxic that bill was. And so the reality is that what Joe Biden wants to do is give a fig leaf, give a patina to the American people right before the election to demonstrate that he cares about securing the border. The truth is he does not. He never has, because if he cared about border security, he would have worked with Republicans at any point over the last 18 months. He has refused to do that. And over the course of his entire presidency, we've now seen anywhere from 8 to 10 million illegal immigrants come into the United States. So he doesn't care about the border. He uses it for his own political gain. And now he wants to do something right before the election because his poll numbers suck, because he's been worse at his job.
Well, of course, he had been working with one Republican, at least, Senator James Lankford, who helped negotiate that bipartisan border deal. But moving on, Congressman, there is another issue with which the president has been grappling. In fact, he's on Capitol Hill today. I understand you weren't there at his remarks, but he did give an address on anti-Semitism, talking about how there is a freedom to free speech in this country, not, though, room for hate speech or violence on college campuses, given what we are seeing across the country, including schools like GW, where I know you yourself visited here in Washington. What else would you like to see be done to address this issue? Is the speech itself enough?
No, the president's speech is not enough. It's 9 or 10 days too late, but why are we surprised? Joe Biden is no leader. He's late to every crisis that faces our country, including the rise of anti-Semitism from the radical Democratic left. So no, the speech is simply not enough. What we should be talking about right now is the fact that you have students whose civil rights have been violated. So these schools, which do not take campus security seriously, we should be invoking Title VI of the 1964 Civil Rights Act, and we should be defunding these institutions if they're not going to protect the civil rights of students. It's that simple. And this goes back very clearly. If you go back to the Civil Rights era, the reason why Title VI was put into the Civil Rights Act is because you had black students whose civil rights were not being protected on college campuses. So if it was good enough then, it should be good enough now.
Well, Congressman, when we think more widely about what many of these protests have emanated from, obviously it is the ongoing conflict between Israel and Hamas in Gaza, where we have seen tens of thousands of Palestinian lives lost. There are questions now as to whether or not Israel will be moving forward with a further ground invasion into Rafah, potentially resulting in more loss of civilian life. Would you be supportive of any alteration to U.S. policy toward Israel if Israel were to do that when the administration has warned against doing so, conditioning aid, for example?
No, I don't think we should do that. This is something where Hamas committed a disgusting atrocity against the people of Israel on October 7th. And so what the United States government should do is stand behind its ally. If Hamas refuses to surrender, that is because Hamas is a terrorist organization that literally hides behind women and children in Gaza. They would prefer to see Palestinians die so that Hamas can live. I know that's very strong language for your network, but that's the truth of what's happening overseas. And so
at 1:20 p.m. Eastern Time, we expect comments from Fed's Kashkari, who is interviewed on Bloomberg TV.
Are getting political coverage from a lot of news stations around the world and from the radical left in the Democrat Party, who continue to give them cover. When it comes to the Palestinians in Gaza who have died in this conflict, nobody wants to see the loss of life. But when you have Hamas hide behind women and children, using them as human shields, there is going to be loss of life. And they do that for one very important reason. Hamas hides behind women and children because they believe that Israel will weaken and not follow through with eliminating Hamas. But Israel's resolve is high. They should continue the incursion into Rafah as we speak. They should not stop from doing that, because if you let Hamas hide behind women and children and then rebuild themselves by sending aid over there, which, by the way, Hamas right now is stealing the aid for their own purposes from the Palestinian people. If you allow them to survive, you're only going to invite more attacks in the future. I think Israel's doing the right thing. They should proceed forward. And the White House, led unfortunately by Joe Biden and the Secretary of State, Mr. Blinken, they should stand behind our ally, not behind Hamas.
Well, Congressman, do you not think the White House has done that to this point, considering we have not seen conditions put on aid, and we have heard many times expressed by Biden and other officials within the administration?
Treasuries hold days gains after 3-year note auction.
Listen, we've heard the words from the Biden administration, but when you go into where they've been talking with the Israeli government behind closed doors, what you've seen is them putting pressure on Israel, trying to get them to change the battle plans that the IDF is going through right now. They've been saber rattling to Israel, saying that there are certain conditions that the United States wants to see and how they proceed in this conflict. That is not the appropriate response from our government. That is a cowering response from our government, which is sad to see, because at the same time, you have the Biden administration is back channeling to the Iranian regime, trying to cut a new Iranian deal with that regime. And we all know that the Iranians are the backstop for Hamas. Hamas is a puppet regime of Iran. And so when you have Tony Blinken and President Biden going behind closed doors to back channel to the Iranians and then also to limit what Israel can do, then I would tell you no. The speeches might sound good, but what's happening in reality has not been good and not supportive of Israel.
Congressman, your displeasure with the way that this president has conducted himself in regard to this conflict is well noted. I would like to ask you, though, about the former president with whom I know you have a close relationship. I'm sure this will come as no surprise to you that your name has come up quite repeatedly in terms of who may potentially be Donald Trump's vice presidential candidate, join him on the ticket come November. What conversations have you had, if not with him, with others on his team about that?
There's really not been any conversations. I think everybody's aware of kind of what the short list is, to use your language. But what we're focused on is making sure that the Trump campaign is in the best position possible to retake the White House this November. Look, whatever President Trump decides to do when it comes to the vice presidency, I'm going to fully support, because I just want to win and get our country back on track. We have an amazing country if our leadership is actually smart and gets out of the way of the American people. I think 4 years ago, the American people were lied to. Joe Biden said that the adults were going to be in the room and the adults are going to come back to Washington, D.C. But what we have seen in the last 3.5 years is the most disastrous policy, both domestically and on a foreign policy basis, our country has ever seen. Joe Biden is the master of disaster, and he needs to go. Whoever the vice president is, that'll be fine. President Trump's going to make that decision. I will support that. But we got to get our country back on track. The American people deserve no less, and our allies deserve no less.
All right, Congressman Byron Donalds, the Republican from Florida, thank you so much for joining us on Bloomberg Television and Radio live from Capitol Hill. We appreciate your time, sir. And we want to get a bit of reaction now from our political panel. I'm pleased to say Jeannie Shanzano, Bloomberg Politics contributor, is joining me alongside Republican strategist Lester Munson, co-head of the international group at BGR. So, Lester, if I could just first go to you, obviously a lot of criticism of the Biden administration dealt there by Congressman Donalds. At the same time, while Biden is navigating the situation with
Shortly
Israel,
expecting the results of the Fed reverse repo operation, and at 1:20 p.m. Eastern Time, we expect comments from Fed's Kashkari, who is interviewed on Bloomberg TV.
Versus something about character. What will win out in November?
What a wonderful question. I don't think we know yet. This is a pretty close election. I think Mr. Donalds just demonstrated why he's on that list. That was a lot of forceful messages, master of disaster, as he called Joe Biden. He would be a great, just objectively, if you're looking for an attack dog vice presidential candidate, he would be terrific. He hit all the marks. that those messages resonate with Republicans. That's going to help Donald Trump, who might be trapped in a courtroom for the next few months, either in New York or in Florida or D.C. He's going to be trapped in courtrooms. Byron Donalds is one of the people who could be out there, bringing the attack on behalf of the former president. I thought that was pretty effective.
Well, Jeannie, when you consider what exactly
73 counterparties take 475, spot $325 billion at the Federal Reserve repo operation.
He's handled the situation on the U.S. border. Are these not two issues that are actually among perhaps the highest ranking in terms of what's going to be weighing down Joe Biden's reelection effort?
They are, and the third one, of course, would be the economy and inflation. And so he did hit those talking points. Unfortunately, the veracity of some of what he said was not something that many people who have looked, for instance, at the Jim Lankford bill on border security would agree with. He talked about it as if it was, Joe Biden's bill, uninterested in border security. Well, you asked Jim Lankford, you asked the Wall Street Journal, this conservative editorial board, they described it as the most conservative security bill, not an immigration bill, that we had seen in 100 years. And so, of course, it was the House of Representatives, the Republicans, who punted on that because it wasn't in Donald Trump's interests as it pertains to the election in November. He didn't want Joe Biden to get a win on that before the election. So, yes, is he making good talking points on behalf of Donald Trump? Absolutely. But when it comes to governing, big questions have to be asked. Just going back to the issue of Israel, for instance, I listened to Joe Biden speak carefully. He talked about an ironclad commitment to Israel, and I'm not sure how that could be questioned at this point.
All right, Jeannie Shanzano, Bloomberg Politics contributor, and Lester Munson of BGR Group. Wish we had more time with you both today, but thank you so much, as always, for joining me. We'll have much more coming up here on Balance of Power, including in just a few minutes an interview with the Minneapolis Fed President, Neel Kashkari, live from the Milken Institute conference. So stay tuned for that conversation coming up on Bloomberg Television and Radio.
Hamas official says the latest ceasefire proposal, which we agreed to, represents the minimum that responds to the demands of our people and our resistance.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
Shortly expecting comments from Fed's Kashkari.
Live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and Radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, the NASDAQ Composite Index, and yes, the Russell 2000 all advancing. S&P right now higher by 0.3%. Best level of the day now, up 16 points on the S&P. Dow Industrials up 72. That is a gain of 0.2%. NASDAQ Composite Index up 34, higher now by 0.2%. 10-year 4.44% with a 2-year yielding 4.81%. Spot gold lower by 0.5%, 23.13 the ounce. West Texas Intermediate crude oil up 0.6%, 78.95 a barrel. Disney having its worst day in 18 months after earnings, down 9.9%. Also after earnings, Palantir down by 14.7%. Balance of Power continues now from Washington. Back we go once again. Your host, here she is, Kaylee Lyons.
All right, Charlie Pellet in New York for us today with a check on the markets. Thank you so much. I am Kaylee Lyons in Washington. Joe Matthew taking a day off today. We've got you covered all across the East Coast from New York to Washington and the West Coast as well. And that's where we go next, out to California, where the Milken Institute Global Conference is taking place. Romaine Bostick and Carol Massar are there, and they're joined now by a very special guest, Minneapolis Fed President Neel Kashkari. Carol, Romaine.
Thanks, Kelly. We are sitting here right now with Neel Kashkari, president of the Minneapolis Fed. There's been a lot of talk about how persistent inflation has shown itself to be. You were pretty early on, at least among Fed members, of saying, don't get too ahead of yourselves in talking about cutting rates. A lot's changed, at least from the data that we've gotten over the last, 3 months or so. Has that changed your view as well about staying where we are?
Well, the second half of 2023 surprised us at how rapidly inflation fell. That was really good news, and the economy remained strong. We all hoped that was going to continue. The first quarter of this year, it seems like it's stalled out. So it's a little too soon to declare that we're definitely stalled out, or maybe it's just taking more time. I think we're in a good place right now. Labor market is still strong. We can take our time to get more data to see if disinflation is going to continue. And if it does, great. If it doesn't, then we need to take that on board.
What is the complexion right now of disinflation? What actually drove us, at least down to the level where we're at right now?
Most of the gains that we saw last year were supply-side improvements. Supply chains getting better.
Fed's Kashkari says it's too soon to declare we are stalled out on inflation.
That's really positive. I don't think monetary policy actually brought demand down that much. And so most of the gains were because of the supply side. Now the question is, if monetary policy has to take us the rest of the way there, is it tight enough to do that? I wrote an essay today on our website raising that question, and I'm not sure how tight monetary policy is. We need more data to assess it.
How do we know that the disinflationary process has still some ways to go? Or how do we know that maybe this is it? This is the new normal?
Well, it's not the new normal because it's 3%, and the Fed can and will achieve 2%. The question is, if disinflation is still underway, then maybe it'll continue on its own, and we can then take that on board. if we need to hold rates where they are for an extended period of time to tamp the brakes on the economy, or if we even needed to raise, we would do what we need to do to get inflation back down.
I have to just ask you, though, about 2%. And I know why the Fed stands by that 2%. But I talked to people around the room this week here, and their cost of capital...
Fed's Kashkari says inflation where it is now is not the new normal. The Fed will achieve 2% inflation.
The 2% target, that needs to come up. That's not the reality long-term structurally, and at least not for the folks in this room.
Yeah, I disagree
Fed's
with
Kashkari
that.
says
I
if
mean,
we
I
need
think
to hold
that
rates for an
ultimately the
extended
central
period
bank,
or
whether
raise
it's the
rates,
Fed
we
or
will
the
do
ECB
that.
or the Bank of England can determine whatever the inflation rate is, and over time, if they conduct their policy appropriately, people will come to understand that, will adjust their behavior. We're committed to 2%. We will get to 2%, and we will get an interest rate environment necessary in order to achieve 2%.
You know, one of the arguments, though, Neil, is that the idea of nearshoring, bringing things back home, building chips in America, that's going to create, they're going to be more expensive than if we were building them overseas. And that is going to be, you know, consistent inflationary pressures longer term. There are some macro forces underway. Why not think that it's got to be above 2%
See,
longer term?
I think those trends are real, but those would suggest to me a one-time increase in the price level, not necessarily an ongoing increase of inflation at a higher level. But we believe, and I believe, that the monetary authority can ultimately long run determine the inflation in the economy, but the rate environment necessary to achieve that may be different depending on these broader macro forces.
So rate cut this year, should we take it off the table? Is it still a possibility?
It's certainly still a possibility. We need to let the inflation data tell us. I mean, I think my colleagues and I, we all have a range of views on where the economy is going, but we're all committed to letting the data guide us. And if the data comes in a positive manner suggesting disinflation continues, we'll adjust.
Go ahead.
But is it just housing pressure? Like, you write a lot about housing pressure. We talk about it. We're talking
Fed's
about
Kashkari says a rate cut this year is still a possibility.
houses out there, and that's creating inflation on the housing front. Is it just housing pressures that you guys are really focusing on, or that you're focusing on?
I'm focusing on housing, first of all, because it's traditionally the most interest rate sensitive sector of the economy. And if the most interest rate sensitive sector is not showing as much disinflation as I would have thought, for example, new lease rates appear to be climbing back again.
Yeah.
That's surprising to me. Why is that? That makes me wonder, is policy as tight as I would have otherwise assumed? We are seeing some effect of monetary policy on credit card delinquencies, on auto loan delinquencies, especially for lower credit score borrowers. So it is having some effect, but it's not having as much effect as I would have guessed by now.
I know we have the benefit of hindsight, but you go back to when the rate hiking cycle effectively paused. Do you think that the Fed should have kept going with hikes, meaning additional hikes?
I don't know. I mean, I think that there are lags in monetary policy, and we saw such rapid disinflation in the second half of last year. I mean, it was a really wonderful scenario. That was real, and that surprised us. And so it's reasonable to say, let's just let that continue. Maybe it'll take us all the way home. It ended up stalling out, at least for a little bit.
Do you feel like you can accurately assess those lags, what those lags are? Because even when you talk about disinflation, you acknowledge yourself, a lot of that is driven by supply side issues and not just monetary policy. How do you assess what the balance is?
Yeah, it's hard.
Yeah.
You know, for example, in the housing market, which we're talking about, we know a lot of Americans refinanced their homes when the mortgage rates were very low. And so they're not feeling the pinch of higher rates because they have not had to refinance. And so that happens. That happened in the late 1970s and early 80s as well. That's part of the lag in the policy process. So we have a lot of data that we look at, and we ultimately have to use judgment to try to put it together.
Speaking of data, growth, we're doing okay. Jay Powell consistently reminds us this is a good thing. We hear it, we feel it here at Milken. Is there the possibility that you don't even have to cut rates at all this year because the economy is strong?
Well, no, you're right. So if inflation moves sideways, and if the labor market continues to be strong and growth continues to be strong, then I would be in the camp of we shouldn't do anything. Just let this play out for an extended period of time. If, on the other hand, we start to see inflation come back down or meaningful weakness in the labor market, then that might say we need to start dialing back. Or if inflation proves to be more entrenched, we could have to go up.
Yeah.
But is the economy, is it strong for everyone?
Well, no, it's of course not. And we know that the way policy works, it slows down parts of the economy, and the lower income workers tend to feel the pain the most. And that's, I mean, wish that were not the case. It's also
Fed's
frustrating
Kashkari
that
says if
every time
inflation
there's a piece
moves
of good news, you
sideways
see
and the labor market
Wall Street
remains
rally,
strong, we should
euphoria
not do
returns
anything
to
on
Wall
rates.
Street, and yet there are people who are feeling the pain. So it's definitely uneven how this gets felt.
You did mention, though, if inflation starts to go up, I thought I heard you say we could have to increase the Fed. That's a smart narrative still to have out there, that the Fed could possibly have to raise rates again?
Well, of course. I mean, we are data dependent. We are committed to getting inflation back to our 2% target, and we will do what we need to do. Nobody has taken any rates completely off the table. I think the bar is high. Much more likely we would stay put for an extended period of time, and then we'll see where we are.
How would you actually prepare, though, the markets for that? That's not the kind of thing you just want to go into a meeting and surprise the markets on. I mean, you need a little build-up there.
I agree, but there's no shortage of Fed
Like
communication.
Right? There is
no shortage of Fed communication to signal when people's perspectives are changing.
Is that Fed communication, though, do you think it's fair? And by that, I mean, is it too much? Because you get so many differing opinions, and in the media, it's great. We love it. But I feel like for investors, sometimes it feels like, okay, we're getting too many people telling us.
I understand their concerns. They're 12 reserve banks. We represent regions of the country. So people across the 6 states that the Minneapolis Fed represents want to hear from us often. I turn down 95% of my speaking invitations that I get. So I go out across the district. I'm usually saying the same thing, but in the spirit of transparency, I live stream it so I'm not giving any secrets away. And if people want to watch it and cover it, I can't control that. And so it's a balancing act where we want to be transparent to the constituents that we represent, and yet we also want to show that we're not giving secrets away.
President Kashkari, I feel like there is more clarity of thought about what the Fed may do next, certainly here at Milken this year around. But having talked to you, we could cut rates, we could raise rates through data dependent. I get it. Do you at the Fed and the FOMC feel like there is more clarity about kind of where we are in the economy and where the trouble spots are?
Well, I think there's more clarity on our reaction function, which is we are all committed to watching the data. Our models have not worked very well in the last few years, so we have to watch the actual inflation data. That will guide us. We all agree on that. Now, whether inflation goes sideways or continues to fall, we have a range of perspectives on that. That's where the deviations lie. But our commitment to doing what we need to do, there's no deviation around the table on that.
Are you still paying a lot of attention to financial markets and how they're reacting to things?
Absolutely. I mean, it is a channel through which monetary policy affects the real economy.
Yeah.
And when, it took 3 negative inflation prints in a row, markets started to take that on board, and then 1 positive job report, and euphoria returns.
All right.
Oh, I guess we have to go.
Yeah, we got to wrap. You don't see all those people in the background, Carol. Like that means wrap. Neil, always great to talk to you.
Great to see you. Thank you.
Neil Kashkari, Minneapolis Fed President, live here at the Milken stage. Let's throw it back to Keely and the team over at Balance of Power.
All right, Romaine Bostick and Carol Massar sitting down with Minneapolis Fed President Neil Kashkari live at the Milken Institute Global Conference. Thank you so much. Great interview. Neil Kashkari saying that a rate cut this year certainly is still a possibility. Of course, President Biden has said he still expects a rate cut to come this year as well. We have much more ahead here on Balance of Power. First, though, we want to get a check on world and national news with Amy Morris in our 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. Israeli forces took control of the Rafah border crossing in Gaza ahead of a possible assault on the city. It's the first time Israel's army entered that part of Gaza since the war with Hamas started back in October. The development came a day after Israel told residents in parts
A Hamas
of eastern
official
Gaza
says if Israel's military aggression continues, there will be no ceasefire.
The ferocious surge of anti-Semitism in America and around the world during a ceremony today to remember the victims of the Holocaust at a time when the Hamas attack on Israel and controversy over the war in Gaza has sparked new waves of violence and rhetoric toward Jews. Biden's remarks at the Capitol played out as pro-Palestinian protests continue to rock college campuses across the country. And adult film actor Stormy Daniels has been on the witness stand for 2 hours in Donald Trump's criminal hush money trial, but now they're on a lunch break. Before the break, she told the court about her background and how she got started in the adult film industry. And she explained how she first met Donald Trump at a celebrity golf tournament when she was 27. Now, his legal team is already objecting to any graphic testimony by Daniels. Prosecutors say they may need that to establish Daniels' credibility and how she came to have an affair with him. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities head-on. It's very important to have a diverse team because we have a very diverse landscape of customers.
On the next episode of The Circuit, Google CEO Sundar Pichai on this AI moment.
Do you worry about becoming a dinosaur in a world where technology is moving so quickly?
If you
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's 1:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we've got the S&P 500 index edging closer to 5,200 right now at 5196. The S&P up 16. We're off session highs, but still up 0.3%. Dow Industrials up 68 now, up 0.2%. NASDAQ up 36, again also of 0.2%. 10-year at 4.44% with a 2-year that's yielding 4.81%. Gold down $7 the ounce, down 0.3%. Right now, gold is at $23.16 the ounce. And West Texas Intermediate crude up 0.5%, 78.85 for a barrel of WTI. Bottom line here, a comeback in the U.S. stock market. It is extending now into a fourth straight day. TikTok is suing the U.S. government in the first challenge to a new law that would force Chinese parent company ByteDance to divest itself of the popular video app or face a ban. And Kenvue shares are higher after the consumer health company announced plans for a roughly 4% reduction in its global workforce, all part of an efficiency plan designed to make it more competitive. Kenvue shares, they're advancing now by 6.4%. Recapping, a rally underway again today with the S&P now higher by 15, up 0.3%. Balance of Power continues. Back we go to Washington. Once again, here she is, your host, Kaylee Lyons.
All right, Charlie Pellet with a look at the market action today. Thank you so much. I'm Kaylee Lyons in Washington. Joe Matthew is off today. Welcome to Balance of Power on Bloomberg Television and Radio, where the markets, of course, are trading all day with no break. There is a break, however, up in New York in the trial of Donald Trump. The criminal hush money trial, that is on the lunch break until the end of this hour. But before that break started, we got multiple hours of testimony from porn star Stormy Daniels, who, of course, has been in focus in this case as she was the recipient of this $130,000 hush money payment that prosecutors allege was intended to influence the results of the 2016 election in Donald Trump's favor. And, of course, that the payments to Michael Cohen, the fixer who made the payments to Stormy Daniels, were misclassified improperly as legal fees, thus the charges of falsification of business records. We want to get more now with June Grosso, who, of course, is the host of Bloomberg Law, has been following this trial incredibly closely. So, June, it's unclear what else we'll hear from Stormy Daniels when the lunch break returns, how much longer she could be on the witness stand. Have we gotten, though, all of the details that really prosecutors likely wanted to get at from her?
Well, it's hard to know because I don't know what else they have that she could testify to. But the most important thing, and she's talking about it now, is the hush money trial. And they certainly have gotten into that. Also, I think what's important for prosecutors is, the jurors have been hearing Stormy Daniels through this whole trial. They want, the jury to meet Stormy Daniels and also to talk about the sexual encounter she had with Donald Trump, which she recounted in great detail. And what they want is to show the jury why Donald Trump wanted to keep this so secret, desperately, didn't want it coming out before the election. And when you hear some of the details she gives, you can imagine that this is something that someone running for president would not want to be out there. I mean, he said things like, first of all, he asked her a lot of intimate questions, and he said at one point, "You remind me of my daughter." So this whole scenario is unsavory, and that's putting it mildly, and it's a good reason for Donald Trump to want it to stay out of the public eye.
Yeah, well, when it comes to some of the detail, of course, the judge had previously ruled that not all of the sexual detail needed to be borne out by Stormy Daniels on the witness stand, though certainly she did get into some of it, but
did.
more.
She got into a lot of
things
it
like positions.
Right, because she talks so fast, from everyone I've been hearing, she talks so fast that it comes out before, and then it's too late. And the defense hasn't been objecting that much, but you got a lot of detail. I don't know what other detail she could have really talked about. So I think that the judge, I understand that he was none too happy, and this is a very even-tempered judge. Not much gets him, concerned, but he was unhappy about this thing and sounded as if he was losing his temper a little bit.
So, of course, the detail of the actual sexual encounter, June, is one thing. The detail on the actual NDA and the payment is another. Before the break, we did hear Daniels talking about that non-disclosure agreement. She said it was intended to keep information secret. She was asked by the prosecutor who the beneficiary of the NDA was. She answered Donald Trump, adding that it was arranged by Michael Cohen. She went on to say she had wanted the deal done by October 14th, prior to the November 2016 election, because she was afraid if it wasn't done before the election, that she would not be safe. And she reiterated that the deal was for $130,000, that she could not tell the story and he could not contact her. Of course, another name, though, has come up in that testimony from Daniels, which is Michael Cohen, June, who we have yet to hear from. How could her testimony and his ultimately be attempted to be pieced together by the prosecution?
Well, so a lot of the witnesses that we've heard from up until this point from the prosecution are there to buttress what Michael Cohen is going to testify. You know, as I've said, Michael Cohen comes to the courtroom with a lot of baggage, a lot of ways for the defense to attack his testimony. I mean, we could count the many ways. So he is a witness whose credibility has to be bolstered by the prosecution, and they're going to do that with documents, but also with some of the testimony. For example, the testimony that she's giving about how Michael Cohen set this up and how she was afraid she wouldn't get paid before the election. And, you know, we have that whole thing about how Michael Cohen was trying to get the payment and finally had to put it up, you know, but with an equity loan on his own home. So all these little things are going to be brought together by the prosecution, or at least they hope it'll be brought together in one big piece where the jury will say, well, he has his problems. He has a lot of problems. You know, he perjured himself and all this, but he's backed up by all these witnesses and by all this paper that we have here. So I think that's what the prosecution is attempting to do with her testimony. But also, as I said, you know, they're also getting in a lot of sort of details about Donald Trump that might disturb some jurors because they come off as sleazy. So who knows what the jurors are thinking at this point.
Yeah, of course, I will wait and see ultimately how this jury rules, whether or not, or decides he's convicted or acquitted. The prosecution has said it does expect it could be calling witnesses for another 2 weeks. So it could be weeks still until this whole affair wraps up. June Grasso, host of Bloomberg Law, thank you so much, as always, for your expert insight and analysis as to what exactly is happening in the courtroom in New York. And of course, what happens in this trial in New York has broader ramifications, considering this is not just a former president, Donald Trump, on trial, but current presumptive Republican nominee who is actively campaigning to once again sit in the Oval Office. So we want to talk now more about how this case factors into voter opinion as we get closer and closer to that vote in November, and bring in Cliff Young. He is U.S. Public Affairs President at Ipsos and is joining me here in our Washington, D.C. studio. Cliff, always great to see you. Thank you so much for coming back to Bloomberg. If we just start with the impact of this trial, or potential impact ultimately of the verdict, if Donald Trump is convicted, and then depending on potentially whatever the sentence is after that conviction, how does that impact his odds of winning in November?
Well, first and foremost, we don't know because it is the future and they're sort of extraordinary events. They're not events that we can sort of compare to in the past. We don't have a database of convicted former presidents that we can draw from. But we do test things. We experiment on these sorts of issues in our polling. And what we do find is a conviction, and more importantly, a conviction and prison time has an effect on the margins, that it basically sort of rattles moderate Republicans. They sort of migrate to undecided. That doesn't mean they wouldn't come back again if the messages were right. But without a doubt, this sort of event probably, like I said, has an effect on the margins.
Is that more that would-be Trump voters would be more likely to gravitate towards, say, an alternate choice, a third-party candidate, or that they actually would then go out and vote for Joe Biden? Because there is a difference there.
I don't think there's any sort of world where a Trump voter would decide not to vote for him and then vote for Biden. There's a likelihood that they migrate to a third candidate, RFK as an example, but more than likely they would not vote at all. They just stay home and just wait for the next election.
So ultimately, Cliff, a lot of this is probably not about that base Trump voter who would be voting for him no matter what, or certainly not voting for someone else who isn't him, versus a base Biden voter who is already committed to voting for the Democratic candidate. It's about that basket of undecided. And I just wonder how big that basket realistically is, and whether or not we're talking about that undecided group potentially growing larger because of issues like this or others, that more people become persuadable.
Yeah, this is in a very uncertain electoral cycle. So already from the get-go, we have between 50 and 20% of the population, depending on how we ask the question, unsure about their answer, about how they would vote. This obviously increases as the legal troubles sort of expose themselves over time. They hurt Trump specifically. I think it probably translates more into not showing up and voting than somehow someone changing their vote and voting for the other side. But obviously we will see.
Well, on that note of really ultimately it being about who turns out and actually decides to cast a vote in November. You did some polling with ABC that came out just a few days ago that did suggest, looking at the headline of just, American voting age people, Donald Trump is leading. When you narrow that basket to likely voters, it's Joe Biden that is ahead. So how should we be thinking about the turnout element of this, and ultimately, when we're seeing Donald Trump leading consistently across national polling, swing state polling as well, including our own here at Bloomberg, how turnout is ultimately going to factor in whether he's as strong with people who are actually going to show up?
Yeah, we have to be very careful right now looking at sort of likely voters, that is those who are going to show up on Election Day or vote in the election. It's fuzzy at best. We're 6 months out. But it is suggestive that Trump has a lot of voters on the ledge, on the fence. There's uncertainty about him. There's uncertainty because of the legal troubles and frankly, because of many of the sort of related sort of issues. That could work itself out over the course of the electoral cycle. But today, when you look at likely voters, they like Biden more than they like Trump.
Well, Biden has his own share of issues, though, as well. While Donald Trump has legal problems, we saw Joe Biden's perhaps on full display today when he was at Capitol Hill giving a speech on anti-Semitism, as we're seeing college campuses across the country roiled by protests, many who are unhappy with his handling of his policy toward Israel, given the high civilian death toll in Gaza. How much is that going to influence, more so than other issues like the economy or immigration, voters who are deciding whether or not to show up in November for Biden?
Yeah, I really think that Gaza and Israel is a false negative, let's call it, for Biden. It's not the issue. The real issue is actually inflation. And younger Americans are really hit by high price levels, like minorities as well. When we look specifically at the data, we put sort of Gaza on the one hand, inflation on the other. Across all demographics, inflation wins out in terms of the number one issue, the number one worry. And that's really Biden's Achilles heel today. It's inflation.
Well, you mentioned young people specifically, who, of course, have really been at the heart of a lot of this protest activity. And so to hear that maybe it is perhaps more about the economy for them than other issues, your point is well taken. Yet in the primaries, the Democratic primary, we have seen across a number of states, Michigan perhaps most predominantly comes to mind, given its importance as a swing state, of primary voters choosing uncommitted or something to that effect. It's different language depending on what state we're talking about, but actively choosing not to vote for Joe Biden in the primary. Are you saying that protest vote over Israel policy is limited to the primary, isn't likely to be as much of a factor in the general?
Now, I was saying that inflation is more important.
Okay.
And to understand sort of where younger Americans stand, it's really about inflation. It's not about Gaza and Israel. That's not to say that you can't have a specific effect in a specific state. We know all these elections are very, very close. That's not to say that, once again, on the margins, that the issue can't have an effect. But when looking overall, it's really about inflation today. Biden's problem is bringing those constituencies most affected by inflation back into the fold.
Would one of those constituencies include black voters? Because we've also seen some Ipsos polling with the Washington Post on the idea that fewer black voters say they're highly likely to turn out and vote in November this time around. I believe it's 12 points less than in 2020.
It's very worrisome. Indeed, it's not just black voters, it's Latinos as well. Those two constituency groups have been very important for Democrats, and they've been majorly hit by inflation over the last few years, and they're less enthusiastic in sort of their outlook in terms of voting for Biden than they were just 2 years before.
When we think about enthusiasm as well in many different states, and I mentioned one of them being Michigan, a swing state that we pay a lot of attention to. Typically, we look at, there's roughly 7 of these swing states that we think will be highly influential. We heard from down in Florida over this past weekend, Donald Trump's campaign at a donor event suggesting Minnesota and Virginia could also be in play, that their polling suggests Donald Trump might actually be able to win those states. What do you think about that, Cliff?
No, I don't think I don't think that hits the mark. I think that Trump is overstated right now. Now, Biden is weak, and Biden has problems with his numbers, and that's something that the Biden campaign is going to have to worry about. But Minnesota and Virginia, especially Virginia, sort of turning. I don't think that's when you look at the historical data, that's possible. Anything's possible, but I don't think that's the case.
Okay, fair enough. So maybe it is going to ultimately come down to just those 7.
I think so.
7 states. To the point, the polling now is showing that Biden is losing, if not in all of them, depending on the poll you're looking at, in the vast majority, but certainly there could be some room for that to change over the next 6 months.
Without a doubt, over 6 months, those things can change. We expect it to narrow. Historically, these states have shown differences of 1-2 percentage points. They're at 4 and 5, some of them. It's much too large, much too in favor of Trump. As the economy improves, we expect Biden to improve. Mm-hmm. Yes, but today, Trump wins in all the key swing states.
Of course, there's still a long way to go, so we'll probably keep having you back here on Bloomberg Television and Radio to talk about it over the next 6 months. Cliff Young, of course, is U.S. Public Affairs President over at Ipsos. Thank you so much for joining me here on the early edition of Balance of Power. I'll be back later on today at 5 p.m. Eastern Time for the late edition. In the meantime, a special edition of Bloomberg Business Week from the Milken Conference will be just on the other side. This is Bloomberg.
This is Bloomberg.
Archer's laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that.
All right, welcome back to day 2 of our special coverage from the 27th Annual Milken Institute Global Conference here
your very warm Beverly Hills, California. A mashup, once again, of two of your favorite programs. I'm not going to say which one is their favorite, but it is a mashup of The Close and Bloomberg Business Week. I'm Romaine Bostic.
I thought you were going to say two of your favorite talents, but I didn't want to go there. I'm Carol Nasser, everybody.
That's Tim and Alex Seal. Is that?
Don't tell them. All right, we spent a lot of time yesterday talking to folks from the world of private capital. Today, we're going to expand things a bit with a broader cross-section of finance, including sitting right next to us, Carmen DeCibio. He's EY CEO. We're going to talk about some of the big changes in the world of consulting. I'm curious, though, what CEOs, what they want to know from him, right, and his team about what's top of mind for them.
A lot going on in that space, a lot going on in the media space as well. Byron Allen going to be stopping by to give us his thoughts here on that long shot bid for Paramount.
I'm really excited, too. We're going to talk a lot about real estate today. David Steinbach at the real estate investment giant Hines to talk single-family rental strategies. They have such a great global perspective, so curious to see what he has to say.
Katie Koch, CEO over at TCW, going to be stopping by, as is...
Wait, and they had some news yesterday.
Oh, yeah, that is right. We got a lot to talk about.
In the private credit space.
Someone did show prep, all right.
Also with us, we're going to check in with Ray McGuire, president of the investment bank Lazard. So that's going to be pretty cool.
And then I know that you've been really excited to talk about. You're really into this neuroscience stuff.
Yeah, exactly. Dr. Ali Rezai, he is over at West Virginia University Rockefeller Institute. 60 Minutes just did a piece with him, so fascinated to see what he has to say. And we're doing this on a day where we see the markets up again, S&P popping up above 5,200.
There's a lot more optimism. When we talk to people, there's a lot more optimism, whether it's in public markets, private markets, deal making, consulting, maybe.
Well, that's what we're going to find out.
Yeah.
Listen, we often talk with disruption or about disruption here at Milken, investing in business and technology. It is also happening, as Romaine just said, in the world of consulting, where firms have trimmed headcount, delayed start dates, and slowed the pace of hiring over the past year amid declining demand from their clients. So we have a great voice to talk about the industry and changes at his own firm and more broadly. Carmen DeCibio is Global Chairman and CEO of the consulting firm EY, here with us at Milken. Thank you so much for being with us.
Great being here. Great being here with both of you.
Let's start with the headlines. You know this industry. You started at the industry at EY out of college back in '85. The headlines, cutting workers. It feels like that they are pulling back in a big way. What is going on in the consulting industry?
Well, first of all, you got to step back a couple of years ago. We were all growing at above 20%. EY was growing above 20% in consulting.
Because of the pandemic and that part?
Well, there was some pent-up demand from the pandemic, but also there was confidence, low interest rates, which I'll get into, and companies were spending. Okay, now what's happened with rates going higher and there being uncertainty in terms of where rates are going, companies are holding back on spending. And it's a little bit more of an expectation versus where the rates actually are, because historically speaking, the rates are not that high, but the expectation was cut at a certain time period. So I think companies have been waiting and therefore not spending as much as they were. And that's caused a slowdown. It's an industry slowdown. We were growing well into the 24, 25%. Now we're growing in the mid-single digits.
How much is a cutback on the private equity side of things? You guys consult a lot of the PE firms. We talk to a lot of PE. Here, they are kind of finding their way forward. How much of the slowdown is a result of that?
Well, it is. Some of the slowdown has to do with transactions, whether it's PE or strategic transactions. There have been less of them. Obviously, the overall economy and rates have impacted that. When there's less transactions, a lot of our businesses are slower. Our transactions business, our due diligence business, even our tax business, and certainly consulting, transformations, integration, there's less of.
So volume is down. What about the size of deals that are getting done? Are those also lower?
They're also lower because obviously big spends, huge technology spends that are in the hundreds of millions of dollars, they're expensive. Companies have held back in terms of really investing the way they were.
What sort of, provides a boost to that space? Because we talk about interest rates. I mean, interest rates have been stable, relatively speaking, for the last year now, I guess, more or less here. And most people pretty much assume we're pretty much going to stay here, maybe some tweaks around the edges.
Yeah. So a couple things that will give it more boost. One is AI. So companies right now are looking at how do they deploy AI. And we're at the very beginning stages of generative AI. So when people say, AI's been around for 20 years and so forth, machine learning's been around for 20 years. Generative AI at the scale that it could be has not been around for 20 years. So we look at AI in 3 different buckets, and this is the way we really have our clients look at it as well. First of all, you have to look at it at the strategic level. Your board, your CEO has to know what AI is going to do to your business. It can't be just your chief information officer. But we look at, number 1 is how do we help our clients with AI? So that involves a lot of use cases in different sectors around the world. We have thousands of use cases that we're working with our clients, but these projects are small. We're getting used to them. Yeah. The middle bucket is around how do you make your business better?
Right.
And that includes us as well, and that's around productivity.
You tried to make the business better by spinning off the consulting unit. It didn't happen. Are you disappointed in that it didn't work out?
I am disappointed, but the reason why we're doing it, the conflicts in terms of really unlocking value, is still there. So I truly believe we've learned a lot from that process. The profession overall has learned a lot. You've seen private equity now investing in accounting firms and consulting firms. They weren't before because they're seeing the cash flow and the value, and you're also going to see that going forward.
Carmine, I wonder, like going through your own restructuring and issues, if you will, at EY, does that help you in terms of working with clients? Or does it make them say, well, wait, you guys sound like you've got some stuff going on? Like, I'm curious about that.
It was incredibly helpful. We were going through this transformation, and we learned a lot, and we've changed a lot, even though we haven't done the actual transaction. But I was talking to CEOs that were going through transformations, comparing notes, helping each other during the entire process.
I do want to go back to AI, because obviously that's been the talk of a lot, and specifically how companies build those AI strategies. The idea of, do you build it yourself, or do you just find another company that's doing it and buy them? What type of questions are you getting from clients about the best approach to take?
Well, I think companies right now certainly are looking at companies like Microsoft. Microsoft has this concept called Copilot, which helps in a lot of different areas, but it helps an individual in terms of their work every day and so forth. And so, Microsoft's doing this at scale. Others are doing this at scale. We have an alliance with Microsoft. So it's really helpful to use others that have invested in this for those kinds of tools. A lot of companies are asking about developing their own large language model for their company using their data. We have one of those at EY. It's called EYQ. It's fantastic. Our people love it and so forth. But you have to have cleansed data to be able to do that.
Yeah, absolutely. And to start off, Carol gave away your age by saying when you started out there. But it was actually kind of fitting because we talk about these big... he did finish, yeah. He was an overachiever. But it gets to this idea of these big structural changes, right? You're on your way out as a CEO. You're handing over the reins in a couple of months, I believe, right, in July. Here, what are you leaving your successor? I mean, what are the big issues that you think she's going to have to deal with that are going to be most important to build EY?
So let me just go back for a second. When I became global managing partner, which is the number 2 role at EY, it was 2013. We were $25 billion in revenue per year, and we were about 200,000 people. We're $50 billion now with almost 400,000 people. So there's been tremendous growth in the organization. My successor, Janet Troncalli, she's an absolutely fantastic leader.
First woman CEO.
First woman global chairman and CEO of a Big 4 firm. And she will have a huge scale of a firm to run. And she will have to wrestle with what's the strategy going forward? Are the conflicts too great? Do we have to relook at transactions? Do we have to look at how do we create value, private capital being invested in the business? These are all things that not only her, but all our competitors are going to have to look at.
It's interesting. You talked about the growth of EY, but does it need to be leaner in some ways going forward?
It absolutely does, and it will be leaner because of AI. Technology will help it be leaner. We're looking at 20-30% productivity help as soon as we get all the technology in, and so it will be leaner. Our partners are asking for that, technology will be a big help.
Is that technology, though, that's primarily doing a lot of the sort of more rote tasks? There's been a lot of discussion about entry-level jobs in this space, whether it's in consulting or investment banking, the types of tasks, rote tasks that were given to those new entrants. If AI or some other technology is doing that, what type of training are those folks, those new folks, going to have as they come into the industry?
They will have training in AI. They will have training in AI tools. We already do that. We offer many hours of training. That's one of the big advantages of starting at a firm like EY. It's training. Some people think it's the continuation of school. We train. If you look at corporates today and you look at finance functions in corporates, many people have had a start in one of the big four firms. And we really train the world when it comes to finance, accounting, auditing, and so forth.
Armando Civio, thank you so much. We really appreciate it. Good luck with all that is to come from you.
It's great being here with both of you. Thank you.
Really enjoyed it. The CEO of EY joining us right here at Milken. All right, a lot going on here and a lot going back in New York headquarters and a lot in terms of the market. So let's get an update on the trading day in New York. Here is Tim Stennebeck.
Hey, good morning, I guess I could say to you guys for about 50 more minutes. We are seeing stocks lose a little bit of steam. Yields are lower across the curve as we check in with the S&P 500, the NASDAQ 100, and the Dow Jones Industrial Average right now. Dow right now is higher by about 5. Well, let's go ahead and round that up to 0.1%, as is the S&P 500. We can go ahead and call that 0.1%. As I mentioned, stocks moving a little bit lower just in the last half hour or so. NASDAQ 100 just down fractionally. S&P 500, if it does finish in the green today, it's its longest winning streak going back to March. Today, led higher by mega cap tech companies. The rebound in risk assets that we've seen in general over the last week, really driven by two things. A rates reset following a Fed-friendly jobs report, and the most recent Fed meeting, better than expected earnings. Speaking of earnings, we're seeing some big equity moves today as a result of Disney. As a result of earnings, I should say, chief among them, Disney. Look at this. Disney down close to 10%, falling the most in a year and a half after the company reported a not-so-great outlook for growth in Disney Plus subscribers in the current quarter, and also said that visits to parks are expected to moderate from peak post-COVID levels. Remember, Bob Iger, he's in the midst right now of this years-long effort to reorganize Disney. In the age of streaming, the company's losing subscribers to cable TV. He's been under pressure from activist investors. He's aggressively cut costs. He's propped up ESPN. He's pumped new life into Disney Studios after some big box office misfires. I also wanted to check in on shares of Apple. They're higher by 0.5 percentage point right now. This after the company announced a larger version of the iPad Air. It's aiming to reinvigorate its iPad lineup. It's gone without an update going back to 2022, and this is the first redesigned version of the iPad Pro going back to 2018. The new model's thinner, includes a crisper screen. It's got a faster M4 chip that can handle AI tasks. Finally, Tesla. Shares of Tesla also lower. A couple of pieces of news on the stock today. Chief among them, though, the company's facing increased federal scrutiny of autopilot. The National Highway Traffic Safety Administration looking for info that will help determine whether the company's biggest ever recall made its driver assistance system safer, down by 3.5% right now, dragging down the NASDAQ 100 and the S&P 500. NHTSA opened a recall query last month after 20 crashes occurred in vehicles Tesla tried to fix with an over-the-air software update back in December. Well, coming up, we got Byron Allen, the founder of Allen Media Group and Entertainment Studios, joining us from the Milken Institute Global Conference. This is Bloomberg.
Season is here.
This is a get out the popcorn moment.
An across the board just pummeling of expectations.
Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey folks, we've got Microsoft.
Apple earnings crossing the wire. Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
A lot still to come. With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment? I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Welcome back to our live coverage from the Milken Global Investment Conference in Beverly Hills, California. Romaine Bostic here alongside Carol Masser, and now alongside Byron Allen, who founded Allen Media Group and Entertainment Studios in the 1990s. He expanded it from a few late-night syndicated programs to ownership of more than 3 dozen broadcast network affiliates, a dozen individual properties, including the Weather Channel, as well as digital news platforms like The Brio. He's recently added a movie distribution company and has gone public with proposals to buy local TV giant Tegna in 2022, a pitch to buy ABC and Disney assets in 2023, and this year, interest in bidding for Paramount Global. Byron joins us right now here from the Milken stage. You're always bidding on something, Byron.
As a matter of fact, I'm going to bid on this flower on your lapel right now.
Well, my wife thanks you.
Okay, I'm thinking $1 billion. What do you think?
I'm going to say $30 billion.
Okay, I'm out.
According to Bloomberg Intelligence, that's the amount that you are prepared to put up for Paramount. Are you interested in buying Paramount? And if so, at what price?
You know what? We remain interested. We think it's a phenomenal asset. And we think Sherry and our management team, they're well positioned to continue their path. Or if she wants to sell, we're happy to help. And I have a lot of faith in Sherry Redstone. And I have a lot of faith in George Cheeks and Brian Robbins and Chris McCarthy. They are excellent managers. And if she decides that's the path she wants to take, have them run things, that's great. If she's still interested in selling, we are very interested in sitting down to figure out if we can get something done. A lot has occurred over the last 6 to 8 weeks. Events that we're not used to seeing happen so rapidly. But we do have strong interest in buying all or some of Paramount Global.
Do you think your bid can be competitive, both in terms of what it offers strategically as well as the financing to do it?
You know what? Capital is not the issue. There's plenty of capital available to support our bid and to buy the asset. The real commodity here is certainty of close. And the great investor Mario Gabelli said it best. This deal will live or die at the FCC. My advice would be to walk into the FCC with somebody that is FCC approved, somebody who owns and operates television stations.
Do you think Sony can do that?
Well, when you are a foreign owner, that's tough to own television stations. I think you can own up to 20%. They don't allow that. So we've invested about $1 billion buying ABC, NBC, CBS, and Fox affiliates around the country. We are broadcasters first, and we are FCC approved. And that is the key to this deal, approval, regulatory approval. There's plenty of capital. Just in this lobby alone, there's about $80 trillion looking to invest in something. As a matter of fact, I can step off this podium and raise another $30 billion in about 5 minutes. Yeah. Just go talk to her, him, and her, and we're over. Well, so capital isn't the issue. Yeah. Approval is the commodity. Yeah. And that's the thing that everybody needs to be mindful of. Yeah. You want to be respectful of the process. I don't think you want to go into D.C. saying, I've never owned and operated television stations. Yeah. I think that's important.
Byron, having said that, it sounds like you're pretty far along in the process. Do you have bankers lined up? What can you share with us? in terms of who you're working with when it comes to, as you say, lots of capital out there. So who are you working with in terms of lining up the financing to actually do a deal?
Well, that I can't share with you. But I will tell you this, that the capital is very much available, not just to me, but others that are skilled in this area of buying and running media companies. And I think that's what's going to come out in the whole process. What you don't want to do is tie up the asset for a year or two and not get approval.
How far along are you, though, in actually the specifics on a deal in terms of getting something done?
You know, quite a bit of our capital has already been investment committee approved. So we're good to go in that regard. You know, I think we wanted to be respectful of Skydance and Redbird Capital. They had a 30-day exclusive. And so we wanted to see what the story is and confirm whether or not that exclusivity has expired. We're not, you know, a very smart banker said to me, Byron, you don't have to do a thing. All roads lead back to you. Because there are assets there that we want that others don't. We want the linear networks.
Why?
I believe in the linear network business. I think it's the majority of their revenue and their EBITDA.
Yeah.
You know, there are folks.
But you know that's the contrarian approach. Everyone's trying to get rid of their linear operations.
You know, I bought the Weather Channel.
Why can't you make it work?
I bought the Weather Channel 6 years ago, and they couldn't. I bought it from Bain, Blackstone, and NBC Universal. They couldn't wait to give me the keys. And thank you very much. In those 6 years, we pushed up the top line revenue and we pushed up the EBITDA, and we're running the Weather Channel at a 50% margin. So we're very comfortable in the linear business. We believe that a number of these linear assets are running a little heavy on expenses.
Is there growth in the linear business?
Yeah, I think there is. I think the Weather Channel has enormous opportunity to grow. I think you're going to see us continue to grow. People are not, especially in the weather. The weather business is a big business because climate change and global warming is very real.
It's the one thing we check every day.
Yeah, it's the one thing, and I will tell you, it's going to be more. I'm not trying to be Debbie Downer here, but the weather is going to be more and more extreme going forward.
Good point.
And whenever we have extreme weather, we are pretty much number one in that category.
Byron, because you are so upbeat about the linear TV business, if you will, what is it that other folks you think get wrong when they're all saying this is the time has passed, it doesn't make sense anymore?
You know, a lot of times people just don't see what you see, and that's key in investing. What people want to see is double-digit growth. They're fascinated by the double-digit growth. That's what they're attracted to.
But is all linear television, do you think, can have double-digit growth? Or is there something special about the Weather Channel, as you said, climate change and different things make us want to look at it more often?
Yeah, I think what happens, I think the sub count will come down, but I also think that it will migrate to streaming. You know, when I bought the Weather Channel 6 years ago, you didn't have YouTube and Hulu. So now, you know, there are millions of subs that didn't exist before. Content will be consistent, and folks will always want premium content. They just want to pay a fair price for it. I think what's happening is you're watching the consumer say, I want this content, I just don't want to pay this much for it. And I think you're going to see our content survive and do very well because it's being priced correctly and it's packaged with other content that they're willing to pay for. So we're not worried about that. That's the least of our concern. In the last 6 years, if the revenue was going to go down and if our EBITDA was going to go down, it should have happened in the last 6 years, but it didn't. It went up.
But you're not immune to what else is going on in the world and what's affecting some of your competitors. You just recently announced some cost cutting, some degree of cost cutting. I don't know the exact numbers, but you've had to tighten your belt a little bit as well.
We have approximately, like I started the company from my dining room table 31 years ago. And in our 31 years, we've never had, layoffs.
Do you still have that dining room table?
I do.
And you're going to submit that to the Smithsonian?
I'm going to do that. I'm going to submit it. And more importantly, the chairs that I wore holes sitting there. But we had about 2,500 employees.
Yeah. And
we reduced our workforce by 300. And it was very painful because we've never done that before. During the pandemic, I didn't lay anyone off. Because I didn't want anybody going out into that cold, ugly world of the pandemic. Unemployment now has hit a low, and there's plenty of opportunity out there for folks to go and get other jobs and continue to flourish. So that wasn't easy, and our focus now is more on streaming. We have Local Now, which is something very special, which is a free streaming service that uses artificial intelligence and provides local news, weather, sports, and traffic, geofence to the user's zip code. And the most important thing here, it's free. The world loves free, and it has over 20,000 movies and everything else.
All right, you're preaching to the choir. Byron, we're going to have to leave it there. Always wonderful to talk to you.
Thank you for having me.
Byron Allen over at Allen Media. And we continue our coverage here from the Milk and Sage. And, you know, we talked to him about linear TV. Let's face it, we have a personal stake in linear TV. So, you know, I mean, I don't want to put him on the spot, but he's always been a big believer in this. And he's built a business going in places that other people didn't want to go, or at least they didn't see the value of going there. And that's why I kind of wonder what Paramount ends up bringing to the table if he's able to get
and sticking with it. It's not like he's bought it, owned it for a little bit, and getting out of it. So it'll be interesting to see ultimately how the deal works out. All right, everybody, we do have to go back to the markets. On that, let's head back to our New York headquarters, and here once again is Tim Stenevec. Tim.
Hey, thanks, guys. Long live linear. Shares of Paramount, by the way, down about 3% right now. On a bigger level, though, stocks are mixed. The S&P 500 barely higher right now for a fourth day. We see the S&P 500 up just fractionally right now. This rally losing a little bit of steam. The Dow still in the green. The NASDAQ 100 higher, down by about 0.1%. We are seeing a yield on the 10-year lower by 4 basis points. S&P 500, if it does close in the green today, it'll be the longest winning streak since March. It's led higher today by Alphabet, Apple, Eli Lilly, and Visa. The S&P 500 just about 1% off its March highs. Now, the rebound that we've seen in equities over the last week or so comes from optimism about what the Fed will do following that Fed-friendly jobs report that we got on Friday and the most recent Fed meeting on Wednesday. Also better than estimated earnings. Got quite a few companies on my radar today. One of those companies reported earnings after the bell yesterday. It's Palantir. Shares having their worst day in nearly 2 years, down 15%. This even after the company boosted its revenue forecast for the full year. Expectations going into the print were high. The stock tripled in the past year. It was up around 40% going into yesterday's report just so far this year. Palantir's roots are in government sales. Remember, it develops software and analysis tools for companies and government agencies that it says are allied with American interests. The company's CEO, though, said that demand from U.S. companies for its AI software now drives the business. Also among the best performers on a percentage basis in the S&P 500 is Kenvue. It's the consumer health company that spun off from J&J. Shares higher today after it announced a roughly 4% reduction in its global workforce. Higher right now by 4.7%. This all part of a plan that's intended to make it more competitive. The company also reaffirmed its full-year forecast and reported quarterly profit and sales for the period that ended in March that beat expectations. Today, after the bell, we get earnings from Reddit, Lyft, and Rivian, among others. We'll bring those numbers to you as soon as they cross. Kenvue shares higher by about 4.6%. Guys, back to you in Beverly Hills.
We were back on air. You got to let me know when they
chatting away. What can I tell you? All right, everybody. Philanthropy is one of the main areas of discussion here at Milken, and our next guest is participating in a panel a little bit later on today. She'll be talking about gender equality and so much more. We are delighted to have joining us Erin Harkless-Moore. She's Senior Director of Investment at Pivotal Ventures, founded by Melinda French Gates. And their goal, their mission, to accelerate the pace of social progress in the U.S. So they're removing the barriers that really hold people back, which is so important. Welcome, welcome, welcome.
Thank you for having me.
Tell us a little bit more about what you guys are doing specifically at Pivotal Ventures. We understand the broad mission, but drill down for us.
Sure. So Pivotal Ventures was founded in 2015 to increase equality and opportunity for people here in the United States. Gender is a huge component of that, and we've made a $1 billion commitment to advance women's power and influence. What does that mean? That means getting more women in the positions to make decisions, control resources and capital, and influence the policies that impact their homes, their workplaces, and their communities. So we pull multiple levers, including philanthropy and also investing. We're trying to get more capital in the hands of women founders and investors that are going to build the next generation of transformative companies that are going to shape economic growth here in the United States.
Yeah. Well, I want to hear more about the investing side of this for obvious reasons here. I mean, how successful have you been? Or more importantly, how do you measure the success of those investments? Because it can't just be about the return, right?
Return is important. We are returns first investors, but we're also really focused on the impact that we're driving. We look closely at the demographic data of the firms that we're investing in and the companies that we're investing in to ensure that they're building diverse and inclusive teams. Because again, when you have more diverse decision makers at the table, you'll have better outcomes.
It's like the supply chain, the pipeline,
supply chain.
all of it, right?
Exactly. And the sad fact is only 16% of check writers at U.S. venture capital firms are women. 2% of venture capital funding goes to women-led teams. It's a huge opportunity if we get more capital in the hands of women, and we're really focused on doing that at Pivotal Ventures.
You know, it's interesting that you say that. I think go back a few years, and we did a story here at Bloomberg, that even in female-led venture capital firms or female venture capitalists, they were still less inclined to invest in female-owned businesses. Is it getting better? Like, what are you seeing in terms of improvement in that area?
No, it's a challenge for sure, but I think we are seeing more and more women launching funds, raising larger funds. We've backed 20 firms at Pivotal Ventures that have cumulatively raised over $5 billion. So it's a huge opportunity. And I think founders want people that can help them drive value and add value to their companies. And that requires a diverse set of stakeholders, including women at the table.
All right, I got to ask you.
NYMEX gasoline June futures settle at $2.54 a gallon. NYMEX diesel June futures settle at $2.46 a gallon. NYMEX WTI crude futures settle at $78.38 a barrel. That's down 10 cents or 0.13%. NYMEX natural gas June futures settle at $2.20.
One recent example is a company called Summer Health. They just raised their Series A. They're disrupting pediatric care in this country. Female CEO, male co-founder, and they're going to build a huge business. It's going to make it simpler for parents like myself to get the care they need for their kids.
Erin, I have to ask you, though, about some of the pushback to these initiatives, whether we're talking about formal DE&I initiatives or something that's a little bit more fluid like what you guys at Pivotal are trying to do. You've seen the pushback, and it's not just, people waving their fists. There are lawsuits out there here. How do you deal with that? Because there is a legal issue. In some cases, it has to be addressed, whether the lawsuit is bunk or not. But you have to devote time and resources defending that.
Yeah, no, you do. And that's what's a challenge in this environment is I think it takes our eyes off the ball of the opportunity that we're missing by not getting more capital in the hands of women and diverse individuals. The pie is big for everyone. It's not small. And I think if we can bring more voices to the table, we'll see that in our returns and our impact and in the outcomes. So we remain focused on doing the work that we set out to do at Pivotal and investing in women, using our levers around social impact, strategic partnerships, philanthropy, to unlock that power of women in all spheres.
No, but it is interesting, like this whole idea of if we believe you can kind of invest, the pushback in terms of if you have money to invest, that it just can't go towards women, started firms, if you will. I mean, I don't know. It's just part of kind of the conversation we're having around the country. What do you say to that people are pushing back and filing lawsuits?
I say, look, we're going to keep doing the work, right? When women have the opportunity to build businesses, that raises up our whole economy. Black women in particular, prior to the pandemic, were responsible for starting 40% of the net new businesses in this country, which is huge. And so, if folks want to push back and file lawsuits, that's going to happen. But at Pivotal, and for me personally, I'm going to keep searching for great talent, great investment ideas, and those can be led by men, but a lot of them are going to be led by women too. Yeah.
All right, it's a great place to end it. Erin Harkless-Moore over at Pivotal Ventures, live here on the Milken stage. And Carol, we continue our coverage. We actually had a chance just a little while ago before we started our official broadcast at 3 to catch up with Minneapolis Fed President Neil Kashkari. We actually asked him about the state of the economy and the pace of the Fed's fight against inflation. Here's what he had to say.
The Fed can and will achieve 2%. The question is, if disinflation is still underway, then maybe it'll continue on its own, and we can then take that on board. If we need to hold rates where they are for an extended period of time to tap the brakes on the economy, or if we even needed to raise, we would do what we need to do to get inflation back down.
I have to just ask you, though, about 2%. And I know why the Fed stands by that 2%. But I talked to people around the room this week here, and their cost of capital, they're basing that more on closer to a 3% rate. And the idea is they're saying, look,
with that. I mean, I think that ultimately the central bank, whether it's the Fed or the ECB or the Bank of England, can determine whatever the inflation rate is. And over time, if they conduct their policy appropriately, people will come to understand that, will adjust their behavior. We're committed to 2%. We will get to 2%, and we will get an interest rate environment necessary in order to achieve 2%.
And that was Minneapolis Fed President Neil Kashkari, and he was really talking about the fight to get inflation down to that 2% target. Because remember, elevated inflation, it's really had, or elevated interest rates, I should say, have really had a big effect here on the economy, including the housing market. Just last week, Treasury Secretary Janet Yellen, she actually testified before Congress, and when asked about housing affordability, she didn't mince words. She said financing conditions and home supply are so poor that it's, quote, almost impossible for first-time buyers to buy a property. Now, while that poses a lot of major challenges for her and for government policy in the long term, it is opening up investment opportunities in the short term. Sean Dobson has transformed regional broker dealer Amherst Holdings into a trailblazing real estate investment platform with a big focus on single-family rental homes, acquiring more than 50,000 homes over the years with a combined property value of $10 billion. Sean joins us now, the chairman, CEO, and CIO over at Amherst Holdings. And Sean, I do want to start off talking about that opportunity here, because there's always two sides to every coin. You know, when there's pain in one sector, that can often sort of bring about opportunities to invest. And you found a way to do that specifically in buying up single-family homes.
That's right. The sector has been very exciting. It's been a little complicated over the last 15 years since the financial crisis. But now we're very excited, very proud of the access that we provide to families who are having a difficult time buying in the best neighborhoods in the country.
For this to be a successful investment strategy, you have to have a belief that what's going on in the housing market is structural and will be persistent for some time. Is that the case?
That's right. When we started the platform post-financial crisis, what we realized was that the access to credit was going to become very, very difficult. And now, with interest rates so much higher, the access to credit has become a price issue as well as an access issue. So for those families that are trying to move into those neighborhoods of opportunity, there's really two ways to get there. If you're fortunate enough to have the financial wherewithal to have a large down payment and qualify for a mortgage, buying is an option. But today, that's probably less than a third of families that really meet those things. So at that point in your life where it's time to live in that type of product of 3 bedrooms and a nice school district, you need to get there. And if the capital isn't available, then we supply the capital.
So what kind of deals are you doing in this environment? You guys did find opportunity coming off of the great financial crisis, Sean, really, and it paid off really well. Is there a similar type opportunity? Like, talk to us about the environment today.
Well, I think it's more subtle, and we're not really worried about sort of a gigantic.
It's obviously not depressed properties now.
Right. So there's really a scarcity of issues. And kind of what I like to say is that you can think about the residential housing market in sort of 3 ways. There's those that are locked in, those that are locked out, and then we have the market itself is kind of locked up. And what I mean by that is we've never seen mortgage rates move so quickly that there's such a large spread between the available mortgage rate and the mortgage that people have. That creates a significant lock-in effect, and that's brought down the float of the supply of homes for sale by a third. This is the largest asset class in the world, and the supply of available homes for sale dropped by a third. It's historic. So then you have the locked out, which are the people that were originally post-GFC, unable to qualify for a mortgage because mortgages aren't available unless you have a very high credit score. And now you have an affordability issue that's brought about by price. So you have a large group of families that are locked out of the buying. And then my third dumb little thing I made up here for you is that the market itself is locked up because the interest rates have risen and investor return expectations have risen, and yet asset prices have risen.
It doesn't sound good.
Oh, it's real estate. You have to be patient.
How do we boost supply? Neil Kashkari talked about this and the concerns about how this plays into the inflationary picture, that there isn't enough houses out there. Yeah. It's pushed up prices, and that has put pressure on inflation, and it's made it stickier.
That's right.
How do we improve the supply of homes?
Well, I think supply is an issue because it takes a long time. So it's zoning, land, it's partnership with the local governments, it's land, and 2/3 of the price to build a home in today's market is labor. And the labor costs have been rising and rising, material costs have been rising. So there's not like the easy button here. It's going to take some time, and it's going to take collaboration by everyone involved, including the credit capital markets, to allow that family that doesn't have a perfect FICO score a chance to get a mortgage.
In terms of being able to acquire these properties, what is the cooperation right now with builders? Are they realistic on prices right now, or is there still a bit of a gulf?
The builders are in a very bull cycle for their business. Their business can be a boom-bust business, and they're in a boom because they're the ones that have the land and they have the build capacity and they have the demand. There are still a lot of consumers buying and borrowing at these prices, paying these prices and borrowing at these rates to really satisfy the builders' product. Now, the builders have a very difficult time providing services to that entry-level home, which is where we specialize. That's sort of $350,000 home between Charlotte and Texas and the smile of the United States. So they have a very difficult time producing that home at a profit margin.
I do have to ask you, and this, there was a great Bloomberg story about kind of the challenges of single-family rental investment. And this probably applies more to smaller players rather than like a behemoth like yourself. But this idea of keeping tabs on properties, dealing with squatters, and other legal issues that come up that can really affect your cash flow here. And you weren't quoted in the story, but Amherst was mentioned in it. I know this is something you guys have had to deal with.
Like at the end of the day, we manage one home in one neighborhood, and we're providing services to one family, and you have to get that right every day. So if the water doesn't turn on, if a squatter is moved in while it's in the marketing, we have to solve that. Now, we have 1,000 people across the nation focused on the issue and automation and a lot of software. We don't get it right every time. We get it right a lot more often than we don't get it right. But that's the nature of the business, and for us, that's the opportunity. This is a complicated business, and not everyone is well situated to tackle it.
So what is the opportunity in today's environment for you?
It's really, for us, it's expanding the access to capital so that capital really understands they're supporting the renter. Renters are important. It's always been a third of our economy, so we need to give them better choices.
Right.
So I think that's the opportunity to expand the access to capital. And we build a lot of homes, so we're building homes and factories. So it really is the demand. We're very different than a lot of real estate sectors. We have really high fundamental demand. So for us, it's about building more efficiently, building in a higher space, renovating more efficiently, and then getting investors comfortable that this is the thing to do, to support these families and get them into these neighborhoods.
Longer term, when we talk about housing supply, the mismatch between supply and demand, whether it's on the rental side or on the purchase side here, do you see a moment, I guess, I don't know, 10 years out, where we will see meaningful equilibrium there, or is that just a pipe dream?
It's funny you mention this because a year ago we were looking at the fertility rates in the United States and forecasting out a decline in population, and that would be one way for this to balance itself. Then we have 3 million new immigrants in the United States now in a year and a half. Those are people that are going to put more demand on housing. So the housing market is going to deal with a lot of confluence of where the demand comes from or where the supply comes from. But what's really important for policymakers to think about is, like you said, this is a 10-year plan, a 15-year plan, and you have to be out in front of it. So cities have to operate in the way that people want to live there so they know that 10 years from now they have demand.
What about geographic rotation? Does that not help at all?
It helps a little bit, but what we've seen is people leave the core, the big cities, the gateway cities, and move to these smaller cities. And the smaller cities are sort of bursting at the seams in many cases.
Everybody's going south, aren't they? Everybody's
more sun, maybe less taxes.
Yeah, I was in Nashville, North Carolina. Have you ever tried to drive through there as of late? It's like driving down Fifth Avenue.
Everybody's in the Carolinas.
Exactly.
Sean, thank you.
Thank you, guys.
Sean Dobson over at Amherst Holdings. A nice look, really, at the residential real estate market, and more importantly, the investment opportunities in it.
I think it's so interesting, like coming off of Neil Kashkari and talking about, the shortage of supply of housing, what that means for inflation, talking with Sean, who's in the thick of it, and talking about some of the dynamics that's needed to come together to be able to build out the supply.
And how data-driven that Amherst has been in this. I mean, you talk about them being a pioneer in that space. You're really taking something that's very local, very by the gut, and applying real data to it, and I guess that makes it a better investment.
Great insight.
Yeah. All right, a lot more coming up here in our special coverage here from the Milken stage. Seth Burrell, managing partner over at Thoma Bravo, standing in the wings. Stick with us. We'll be back in a moment. From Beverly Hills, California.
This is Bloomberg.
is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Front month NYMEX gasoline falls to $2.54 a gallon. That's the lowest settle since March the 8th.
Welcome back, everybody, to our live coverage of the Milken Global Investment Conference. I'm Carol Master alongside Romaine Bostic. Well, I've got to say that among the stocks that we've been watching in today's session, AI software firm Palantir, it's falling in today's session. It's down about 14%. This is as sales forecasts fail to impress investors. This is a company that's in the middle of the AI play, but a software company. And Thoma Bravo is one of the largest software-focused investors in the world. So we're going to talk about the software space right now. They've got over $138 billion in assets under management as of the end of last year. So let's bring in Seth Borough. He is managing partner at the company. Seth, great to have you here with us.
Thank you so much for having me.
When you see the results of Palantir, what do you think? Does it mean anything in terms of the software area, AI related or other?
Our view on software is that it is an incredible long-term space to be invested in. And what we're seeing right now, at least in our portfolio, is that this next phase of AI, Gen AI, which of course we're talking a lot about at this conference, is driving all sorts of incremental, interesting use cases for our portfolio companies' customers. And the innovation we're seeing is pretty incredible at the moment.
What kind of software, AI related, are they specifically looking for?
For us, where we see most of the innovation, it's organic inside of our portfolio today. So we're buying within software the most innovative companies in the sectors that we're focused on.
What does innovation mean, though, the AI space? Because AI on its own is kind of innovative, right?
The thing about AI that's so interesting is that it has been a foundational technology in cyber and infrastructure software for the last decade. Today, we've now find ourselves in the Gen AI phase of AI, which is the next phase, which is all that we're talking about. But fundamentally, AI has driven all of our cyber portfolio and application and infrastructure portfolio to be able to operate at scale and do really incredible things. Today, what we see is that our development teams inside of our portfolio companies are now leveraging this next generation of artificial intelligence with Gen AI to really deliver incredible applications to their customers.
So is that sort of the investment opportunity, meaning the AI product that's put out for whoever that end consumer is? Or is it the companies that might be leveraging AI for their own internal things, whether it's drug makers or even finance companies that might start to rely on it a lot more?
It's a great question. So we really see it today on multiple fronts. One is delivering more value to our company's customers. It's incredible the types of applications that are being developed in very short order. Second is in the world of cyber, for example, now the cyber threats are much more incrementally intelligent with the usage of Gen AI, defending those threats with AI. So it's really AI battling AI in this really complex cyber world that we're living in. And the third is driving a lot of efficiency in organizations. We really view Gen AI as an enabler of talent. And we think that what really talented people can do, of course, there's a lot of those individuals within the software market in every industry, is fundamentally expanded through this new technology.
I mean, part of what's made Thoma Bravo so successful, and particularly in the technology and software space, is the ability to properly value a potential deal. How difficult is that right now? Because there's so much hopium, there's so much hype around AI that, at least from an outsider looking in, it's hard to know what's sort of substantive and what is just kind of that sizzle. So how do you come to a proper valuation when it really is just trying to be modeled out like 30 years into some future that nobody really knows what it's going to be?
In the world that we live in and operate in, for us,
In 10 minutes time at 3 p.m. Eastern, we get US consumer credit. Prior 14 spots 12 billion. Forecast 15 billion.
which are very established, very innovative businesses, you're right, there is a component always of innovation, and we need to be partnered with those businesses that are the most innovative. And so we look at this new capability that the company has, and it is table stakes to have a strategy around Gen AI today, but it's part of the overall business. And so for us, at the end of the day, it's much more about company performance than about over the long term than it is about evaluation at a given point in time.
Well, that's interesting, because if we're thinking about Gen AI and its real impact is maybe a decade in coming, or it's going to take multiple years, how much of a runway are you going to give a company when you look at investing in something? Like, are you willing to kind of pay up in terms of multiples with the expectations that it might take 3 years, 4 years, 5 years, or longer?
In the businesses that we are investors in, of which we generally are the control investor, these companies always have a segment of their development budget that's very, very forward-looking. So it's a combination of what we're doing today and also looking in the forward. You always have to be funding that innovation cycle. Customers want it. It's exciting for employees. And today, the big difference with this new technology that really has come to the surface in the last year, it's usable today. Products are being delivered today to our company's customers, and the payback is actually relatively quick.
Can you shed a light into exactly what companies are doing with all of this? Because I feel like some of Gen AI is going to be somewhat mundane tasks, but they're now, done by software or whatever. Like, give us an idea, right? In terms of the broad macro, we get it. Like, it's going to change a lot of things and processes. But what specifically? I'm curious about some of what you're seeing and how it's playing out.
Yeah, you're right. I mean, today, what you're hearing a lot about and what you're seeing is that larger organizations are able to use the technology really to drive efficiencies in their organizations.
Like back office and things like that?
Back office is a great example. The way we think about it in the world that we're living in is that it's an incremental value to our company's customers. So it really makes the products that our companies are building and selling much more usable in new ways to more members of an organization. We're really optimistic about it as a use case. In cyber, it provides our company's customers the ability to prevent threats and detect threats much quicker. And anomalies much quicker. And it's an extension of already what's gone on in machine language for really the last decade.
Seth, I want to ask you a little bit about just the broader private equity space right now, particularly in the context of regulation. There's been a lot of rumblings in Washington about some of the strategies PE firms have taken, roll-ups, of course, have been
Brent's crude futures settle at $83.16 a barrel. That's down 17 cents or 0.2%.
How in tune are you right now with some of those regulatory winds circling, and how much of that is going to force you to maybe rethink some of the strategies that you've taken in the past?
I think certainly we're in a different regulatory environment than we have been in the past. For us, we're operating in markets that are just so huge and enormous, with a lot of growth ahead of it, and that are very fragmented, that it's certainly something that we're thinking about, and that of course you have to, but it's not something that's taking up a lot of our time on a day-to-day basis as we're making new investments.
Does the election change that, maybe? The regulatory environment?
Your guess is as good as mine.
But could it, in terms of the outcome, you think?
It could potentially. There could be. I think every time that there's a change, right? There is certainly a change in regulatory environment. We don't plan on that. We don't try to predict that ever. It's just part of the landscape today. And you're right that the landscape today is different than it was in the past.
Do you have another question, Carol? Because I want to pivot to sports for a second. All right, I got to ask you about the Ottawa Senators. There was a lot of mystery behind the purchase of the Senators a few back late last year.
Tell us what you're doing.
And Bloomberg, of course, was out in front reporting that you were behind that bid here.
Are you?
So I am part. I grew up in Ottawa.
Yes.
I am a lifelong hockey fan.
And
I played hockey my whole life.
Yeah.
And I'm very passionate about it. And I am part of the ownership group of the Ottawa Senators. But I am certainly not the controlling shareholder in the Ottawa Senators.
Well, still, that's got to be like a childhood dream come true, even to have a minority stake.
It's an incredible amount of fun and something I'm very passionate about.
Yeah.
Seth, thank you so much.
Thank you so
In
much.
5 minutes' time at 3 p.m. Eastern, we get US consumer credit. Forecast 15 billion on the prior 14 spots 12 billion.
And look, if you had, I don't know, I mean, I don't know who you rooted for as a kid. I mean, you're New Jersey.
Giants. I went to Giant games with my dad.
But if you had a chance to get a minority stake, you would take it.
Totally.
Of course.
It's so much fun.
It's like lifelong dream.
Sure you don't want to change your mind and tell us something? All right, we got to run. All right, coming up, David Steinbach, CIO of Heinz. Man, they have a big global view when it comes to real estate.
Yeah, and this is, I mean, we're talking with Sean Dobson a little bit earlier about residential real estate. A real nice take coming up here on what's going on in the commercial real estate space. So much gloom and doom out there. Yeah. But I think what we're going to hear from him is a little bit more optimism.
Curious what he has to say about his properties in China. That's coming up next. You are listening and watching Bloomberg. We are live from the global conference, the Milken Conference in Beverly Hills. More to come right here on Bloomberg Television and Radio.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics.
1 minute remaining.
So we'll see.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
10 seconds.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Still waiting. 6.274 billion, 6.274 billion. That's lower than forecast 15 billion.
Special coverage from the Milken Global Conference in Los Angeles, California. Romaine Bostic here alongside Carol Master, broadcasting live on television and radio. You're used to that.
We're everywhere.
Yeah. Remember those little global simulcasts we do for like 7 minutes? Someone thought it'd be a good idea for us to expand it to 3 hours.
Expanded simulcast.
Yeah, so that's a good. We've been talking a lot about the real estate sector today.
I think this is so great. Yesterday was so much about private credit, which is really important to get a gut check on that. But real estate's so important. We started off the day, talking with Neil Kashkari over the Minneapolis Fed, the importance of supply of housing here in the United States, the inflationary pressures we are seeing. But that's the residential side. I'm really also
We have posted the US Consumer Credit March report on the feed for all those interested.
Yeah, absolutely. And actually, let's listen to some of the comments that we got on this space here. It'll be a nice setup here for our next guest. Let's take a listen.
We're very bullish on real estate. It is the biggest industry in the world. It's not going anywhere. We can't have events like this. People have nowhere to live. People have nowhere to work unless there is great real estate. We will continue to invest, and we think it's a fantastic time to be putting money to work.
What we focus on is where the population migration is going. So we love the U.S. writ large. Where the businesses are out moving their businesses to. Like rich people can move to Aspen and other places like that, but you can't move a whole business there. So Florida, Tennessee, Texas, all of the states that you see positive migration, I think is a great place to put your capital.
The sentiment in real estate, particularly commercial real estate, particularly office buildings, is so negative. It's so awful that I am just attracted to it.
Yeah, commercial real estate, really the talk of Milken this year, as of last year, with roughly 20% of the $4.7 trillion in U.S. commercial mortgages held by lenders and investors coming due this year. It's the reason why everyone's talking about it. I might create some pain out there for some folks who need to refinance, but it has lured a slew of investors armed with hundreds of billions of dollars to target commercial real estate deals. One of the most active players is Hines, which last month announced a new platform called Hines Private Wealth Solutions that seeks to capitalize on some of those troubles in the real estate industry. David Steinbach, the Global Chief Investment Officer at Hines, joining us right now. And this is, it's got to be one of the biggest opportunities you've seen in your career.
Yeah, these only come around a few times in your career, and we definitely have a moment where there's going to be real opportunity. So it is exciting to see kind of what's ahead this year.
But how do you sort of cut through all the gloom and doom? No one's going back to the office. None of these buildings can be repurposed. How do you look at that sentiment and then look at those properties and decide there's something of value?
Yeah. So Hines is a global investment manager. We have about $100 billion under management, and we're in about 30 countries around the world. So it's a pretty unique perspective in terms of seeing real estate through a global lens. And I'll say it's not the same everywhere in terms of just different dynamics, not only macroeconomic policy, but also physically what's going on the ground in different places. And so even the experience of office has been very different around the world in the last few years.
Let's go around the world. Let's start with the U.S. property market and the office space. Your exposure, what are you seeing? Is there going to be another shoe to drop?
Yeah, look, I mean, I think it's important to remember that what's happening right now is really 2 years in the making since interest rates started going up, right? So we're over 2 years into that. And so what this has felt to me has been a lot more of a controlled, managed process. Certainly there's a lot of pain in the system, but people have had time to work through the issues. And so I think time has been the key ingredient here to finding a way forward. So what we're doing now is much more looking on the horizon for what's ahead and where those opportunities are. Certainly there's a lot of things that need to get fixed still. I think private credit is a part of that, but I know equity is going to be part of that solution as well.
David, having said that, people talk about some of the office properties in like Midtown Manhattan in the Garment District. Nobody's going to ever want them in terms of office space. Will they have to be, what do we do with that? Some have said maybe the government needs to come in to help kind of clear some of that out. Is it fair to say that there's going to be office space that never is going to be used again?
Yeah, sure. I mean, look, office is a big sector in the United States, and there's a lot to that, right? I think what first needs to happen, and I think we're going to see it this year, actually. I think we need to see some transactions in the trophy space. So the best of the best. We need to see some real trades and have price discovery there. And I think that will be a huge signal to the market once we really start seeing that. Right now, I mean, we're in conversations with people where there are discussions. There's still a bid-ask spread. I think that bid-ask spread will close this year, and we'll finally start to see some transactions. And that's what the market really needs to understand how to price the sector.
So does that mean, yes, there will be some properties that will just never be used again, office space?
Yeah, look,
like
I mean,
in New York?
Yeah, just like in the retail sector, 15 years ago. I mean, there's certainly going to be some things that aren't going to be repurposed heavily or torn down. But I know that there are high-quality office buildings where the rents are performing, the fundamentals are there, but the capital markets are not.
Yeah.
And so what we need to see is the transactions to be able to have some certainty for how to price the rest of the space.
As far as your investment strategy, do you take a hard look at the properties that need to be repurposed, or are you primarily sort of focus more on those ones that are already set to go?
Yeah, look, I mean, a part of our operating model is really tapping into what we see as a much bigger change in real estate investing right now. I mean, there's regime change in interest rates, and it's going to be a different world. The way I've described it is the last 40 years, it's been downhill skiing in terms of a sport, and it's going to be cross-country skiing for now, probably for quite a while. And so I think that, in that new sport, it really is a new sport. It's a new mindset, a new muscle. And I think there's going to be a real shift from a search from beta to a search for alpha. Yeah. And that alpha generation really is that local execution. And it takes a very clear-eyed view on what office or whatever the real estate product is and what's going to make it work and what's going to make it work in this new era of investing.
Cross-country skiing is really hard. I don't know if you've ever done it, but it's
hard work.
I was going to say with climate change, there isn't a lot of snow out there, so it sounds like it's going to be a little rough either way.
I am curious. I mean, we all kind of are aware of the issues in the U.S. commercial real estate market. Right. You have an international footprint here. Right. Kind of compare and contrast that with what's going on overseas.
Yeah. Look, I mean, it's definitely, it depends on where you are. So last year, certainly Europe was leading the recovery in many ways. There was more transactions. There was more pricing discovery points for investors to get comfortable with. But we're seeing opportunities still in Europe. Our business is pretty balanced. Last year, we were about a third in Asia, a third in the U.S., third in Europe. I think the U.S. will now be more of our business this year. And we're certainly going to chase that. And in Asia, there is a lot of opportunity. In Japan, Australia, build to rent is a significant investment theme we see around the world. The United States is about 3 million houses short. That theme is elsewhere as well, and there's real reasons for that. And we think we can help solve some of the problems and bring new product to a lot of these countries.
Greater China, you've been there since 1996. What can you tell us about the real estate market in Greater China right now? And the government, do they ultimately need to do something to move this along finally?
Yeah, look, it's definitely been a tough situation, and we do have a presence there for a long time. We've been, we're still there. I'd say we're very cautious and being very careful, as everybody would be. We've actually begun to focus a lot more in India the last, I'd say, even 24 months. And India has been a huge area of growth for us, where we see a lot of expansion plans for a lot of U.S. companies, frankly, are setting up a lot of a deeper presence there. And so that's been a significant pool of opportunity for us.
Do you still want to have a presence in China, Greater China?
I think, look, I mean, China's going to be one of the largest economies in the world. I think it's just a matter of what it looks like. We're still there. So, but we see a lot of opportunity in the entire region, frankly, and all of that region feeds off of each other in terms of how the broader economies work.
What does the price discovery and price transparency look like over there right now, though?
In Asia more broadly?
Well, specifically in Greater China.
Yeah. Look, I mean, it's like a lot of other, even the United States, there just hasn't been a lot of significant trades yet for the trophy type of assets. So, but that's the same thing in the United States. We're waiting for that. Like I was saying earlier, we're waiting for that as well.
Are there distortions, like government sort of distortions, given how much involvement they have in the property market?
Yeah, look, I mean, within the Chinese economy, certainly the local Chinese insurance companies, there is a lot of local capital there that I know a lot of sponsors are looking to now to backfill where international capital was. And so certainly within that context, there is capital and liquidity.
David, you have a massive team, a massive presence, and you see so much. You mentioned India. I think that's really, fascinating. If you had to pick one market globally where you're like investors, I think about the Bloomberg audience, that keep an eye on, is it India?
I think, yeah. I mean, look, India is a place of dramatic change, without question. And we're putting a lot of resources around it. We have a lot of opportunities that we're unlocking. But I see opportunity everywhere, honestly. And like I said earlier, the United States, to me, I think it's going to be where a lot of investors focus most on. It's probably where we're going to see the most transactions.
In the U.S.?
In the U.S.
Next 12 months?
For the next 12 months. The next 12 months, yeah. I think it'll start with credit and move into equity. And so I think that's how investors are looking at it.
I have to ask you the interest rate question, the Fed question. We came into this year with expectations we were going to get multiple rate cuts. People are still holding out we get something. How much of your business right now would be dependent on a meaningful shift in interest rates, whether it goes down or up, for that matter?
Look, so one data point, if you look at the last 17 elections, 17 election cycles, what did the Fed do? About 2/3 of them, the Fed actually raised rates. Only about 6 of them, the Fed lowered rates, and 1 of them it held steady. So it's interesting knowing that. So this is you see the patterns, right, in terms of like where past elections were. So I would say the Fed is
licenses
likely
supply
going to
of chips to China's Huawei, according to Financial Times.
Basis points in our business last 2 years. Whether or not there's a slight cut, it's flat, even slight up, it's not going to matter that much in the scheme of our total business relative to where we've been. So we're much more focused on how do we create income, how do we create value, how do we make the right investments today for a long-term horizon, because real estate is a longer-term horizon investment. So it's 5 to 10 years is often how investors are holding it, and so that's how we're underwriting it right now.
It's fascinating. David, thank you so much. But I just feel like so many of our guests here at Milken have said a little bit higher, a little bit lower. It really doesn't matter. This is kind of the environment we're thinking we have to operate with.
Right. Yeah. I mean, the other analogy I thought of, it's almost like car racing, right? So NASCAR, the economy is like we were on NASCAR. We're just going around a circle really, really fast. Now we're shifting into F1. Where we just don't know what's around the corner, but we're still going really fast. Yeah. And so I think it's a new sport to play, and I think in this market we just have to be a lot smarter about how we're going to navigate whatever corner might be around the corner. So.
All right, well, we're going to have to leave it there. And you're so smart, David Steinbach, the CIO over at Heinz, that really knows more about this space. You love it so much. You asked them an extra question.
I know. Sorry, I know they're all going to be mad at me again.
Did you know our producers? Do you not know the hand signals?
I thought that means one more question.
All right. Enough silliness here on the Milken stage out in Beverly Hills, California. Let's toss it back to Tim Stanovic. I think you know him. Back in our New York studios to check on what's happening in the market.
Don't worry, I'm always keeping things serious here in New York. Stocks were higher across the board earlier, struggling to gain traction this afternoon. The S&P 500 did rise above 5,200. It was up around 0.4% before we saw a bit of selling late in the session. Right now, the NASDAQ 100 is flat. The yield on the 10-year right now, 4.45%, down 2 basis points. Bitcoin right now at 63,000. I want to talk a little bit about NVIDIA because it's lower today after Stanley Druckenmiller told CNBC that he further cut his NVIDIA position in late March. He said, quote, AI might be a little overhyped now, but underhyped in the long term, down 1.7% right now. He did repeat that he's bullish in the long term on AI as he's ever been, and he noted that the big AI payoff might be 4 to 5 years away from now. Should note NVIDIA up more than 80% so far this year, about 5% off of all-time highs, just to put today's move in perspective. A bigger move coming from Walt Disney today, also weighing on the S&P 500. Shares falling the most in a year and a half after the company reported a not-so-great outlook for growth in streaming subscribers in the current quarter. Also said that visits to parks are expected to moderate post-COVID levels. Iger's in the midst of a years-long effort to reorganize Disney in the age of streaming as the company does lose subscribers. He's been under pressure from activist investors. He's aggressively cut costs. He's propped up ESPN, and he's tried to reinvigorate Disney Studios. On the upside, Apple, the company announcing today a larger version of the iPad Air, aiming to reinvigorate their iPad lineup. It's gone without an update since 2022. It's the first redesigned version of the iPad Pro since 2018. Look at that, Apple up by 0.4%.
Intel and Qualcomm among companies affected by revoked licenses, according to Financial Times.
That a number of private equity firms are in talks to take the company private. Well, coming up, our coverage continues from the Milken Institute Global Conference. Lisa Donahue, co-head of the Americas and Asia at Alex Partners, is going to join us in Beverly Hills. This is Bloomberg.
On the next episode of The Circuit, Google CEO Sundar Pichai on this AI moment.
Do you worry about becoming a dinosaur in a world where technology is moving so quickly?
From our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is here.
This is a get out the popcorn moment.
And across the board, just pummeling of expectations.
Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey, folks, we've got Microsoft.
Apple earnings crossing the wire. Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
A lot still to come.
With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment? I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to our live coverage of the Milken Global Investment Conference. I'm Carol Master along with Romaine Bostic. Right now we have another lineup. They're waiting for Magic Johnson.
Magic Johnson, yeah.
Pretty cool stuff. So we'll follow it.
I hope you're keeping count because we have to figure out who was the longest line. Was it Elon Musk, Magic Johnson, David Beckham, Javier
Elon Musk, you couldn't even get in. It was kind of crazy. All right. We're going to get back to the markets because we've got a great indicator of what is going on in the financial and business environment. It is through the world of restructuring and turnarounds. And we've got a great voice on that. With us is Lisa Donahue. She's Alex Partners, co-head of Americas and Asia, joining Romaine and myself here at Milken. Welcome, welcome. Nice to be talking with you.
Great to be here.
I do think this is a great indicator, right? We look at different metrics about the business environment, what's going on more broadly. What are you seeing and what does it tell you about the macro?
You know, we're talking a lot. We see hundreds of companies. We work with C-suites, executives, and what we're seeing is forward-thinking leaders are getting prepared. If you think about CEOs in the C-suite, they've been dealing with disruptive forces for years now. COVID, ground wars, technological disruption. A lot. So forward-thinking leaders are thinking about flexibility, agility, how to take some of these challenges and look for the opportunities in them.
Lisa, there's big forward-looking, and then there's the cumulative effect of a great financial crisis, a pandemic, disruption. Having said that, are more companies in trouble? Are they looking to do restructurings and turnarounds?
I think more companies are trying to think smartly about how to operate in this high interest rate environment and how to deal with whether it's a capital R recession, small R recession, but really changing consumer behavior. And if you think about some of the economic drivers of certainly the U.S. economy, it's the consumer. So thinking about if that starts to be a slow trickle, what management teams can do to get ahead of that and to be prepared and to think about how to pivot and think about how to react.
And also the whole issue that what's ailing the economy, if you will, isn't just cyclical. There are structural changes as well. So I would think that means as a corporation, you have to take a structural look at your business, whether that's divestments or acquisitions or whatever, or a complete turnaround here. What type of questions are you getting on that front?
You know, that's an excellent question, and you hit the nail on the head. We're working with so many executives on what should their business model look like? What should they be doing to be kind of fit and ready, fighting ready when more disruption comes? We're talking a lot about carve-outs. We're thinking about what 5 years ago may have made sense as part of your conglomerate. Now it doesn't, and what isn't great for you may be a jewel for someone else. We're looking at customers. I mean, the simple truth is all customers aren't created equal. Is it time to fire a few customers and take a look and really understand full-on cost to serve?
Yeah, and And on that point, though, as these companies sort of make these assessments here, there's this idea that what's happening now is kind of slow moving, at least relative to, say, the global financial crisis, some of the big sort of shocks where all the pain kind of happened at once. Do they have a bit more of a luxury of time on their side this time around versus past crises?
You know, I don't know that I'd call it a luxury because I think the C-suite of today is dealing with faster and faster change. We're dealing with two ground wars, the emergence of more accessible AI. I mean, the truth is AI's been around for over a decade, but when you think about what ChatGPT means in some large language models, what a lot of our companies are thinking about is how can I use that? How can I use that to be more efficient? We're working with a very healthy company, and what they're trying to think about is how do I use customer fragmentation? How do I use to enhance the customer experience, target the customers in the right way, not in a robotic way, but in a human, authentic way? So there's some really cool things, I think, coming out of AI. And again, I go back to the forward-thinking executives, the executives that are thinking, okay, this may be a little rough sledding, but I'm going to be ready for it. I'm going to be lean. I'm going to be forward-thinking. I'm going to think about opportunities versus just crisis.
So, Lisa, one of the featured speakers was, of course, last night, Elon Musk. He did not talk about Tesla.
No.
We waited, but it didn't happen. But you are seeing something when it comes to the electric vehicle space. Give us an idea, because it does feel like, yep, there's still growth, but it's at a slower pace. What are you seeing?
You know, I do a lot. We do a lot of thinking about energy transition and what that means, not just for electric vehicles, but across the whole electric grid. And I think one of the biggest indicators of maybe a little bit of a slowdown. I think folks, everyone knows where we want to go, and everyone knows that ultimately we're going to get there. The question is, how long does it take? What are the steps in the interim? And in my mind, what is the required infrastructure to support it? And you think about what happened with Hertz and the pullback on their electric fleet as a result of the primary market prices going down, which then, of course, affect the secondary market prices going down. And maybe the consumer wasn't quite ready for longer hauls, not feeling comfortable with the charging stations and understanding what the infrastructure looked like. I think we're still getting there. I think we will get there. I think that the hybrid is the now, and the EV is the future.
But are you doing restructurings and working with companies that kind of need to reset their metrics in the EV space?
We're working with companies that are trying to think more broadly about, from a macro perspective, what's happening and what does that mean to me, and importantly, what does it mean to my customers and my competitors
in that space.
In that space, but honestly, energy transition impacts all of us. So it's not just uniquely that space, but in that space, helping them think through how to be more efficient, how to, again, speak to the customers, and then what that transition means to you as a CEO, as a C-suite executive.
Another big change that's been going on over the last few years is the refocus on supply chains.
Yes.
Obviously, here in the U.S., we had the big disruptions from globally, we had the big disruptions from the pandemic. There's been a big push in nearshore because of trade wars and other geopolitical issues here. Is this going to also potentially be, I guess, a new avenue of business or an expanded avenue of business for you?
One of the things, as you know, you mentioned that I focus on Asia as well. And I've spent, in the last 18 months, I've been there 5 times across China, Singapore, Tokyo, et cetera. And there's a couple of things that we're seeing as it relates to supply chain. Number one, and I get asked this question a lot, I don't think that we're going to be deglobalizing and moving completely away from China. We're too interconnected. It's too big a market to ignore. But what I am seeing is a lot of large global manufacturers are thinking about redundant supply chains. They're thinking about keeping what they have in China and looking at Vietnam, Japan, and Mexico has been a huge beneficiary of that type of movement. But I think, and what we're seeing and what we're working with folks on is Yes, it's about cost, but it's only about cost. It's not only about cost. It's about surety of delivery and making sure that you actually get the piece so you don't shut down your manufacturing line because of uncertainty with a long supply chain.
Yeah, fascinating. I do think about, though, the redundant costs of maintaining those supply chains, especially when you bring them back home.
Yeah, but, some of them, they have no choice to do that, right?
Absolutely.
And I think to Lisa's point, the idea that it's more than just the initial financial cost, right? It's the longer term.
The pandemic showed that, too, and some of the technology battles or the geopolitical battles that we are having. Lisa, great to get some time with you.
Thanks.
So appreciate it.
Great to see you guys.
Thanks.
Lisa Donahue, she is a co-head of the Americas and Asia at Alex Partners.
Yeah, and then she brought up Mexico too. I mean, we've seen we have to do a whole show on that because I'm fascinated by that. How much has been moved back towards the border. And remember, we went through this before back in the NAFTA days, and then it kind of died down a little bit.
We recently caught up with the architect Gensler, and they are global, and they talked about all of the activity and facilities that they're building specifically in South America, Mexico in particular. So it's happening.
Absolutely. Will you be around for that show too, or do I need to check with Tim?
I don't know. Let me think about it. Let me ask my schedulers.
All right, a lot more coming up here from the Milken stage in the lobby of the Beverly Hilton here in Los Angeles, California.
Magic Johnson is coming up.
Magic Johnson lined up here, but you know what? We got a line on the other side. You can't see it. It's not quite as long, but they all want to hear from our next guest, Kip DeVere, the head of the credit group over at Ares. A lot to talk about with him after the break. Stick with us.
This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
back to our special live coverage of the Milken Global Institute Conference in Beverly Hills, California. I'm Romaine Bostick alongside Carol Masser. A big focus today, not just on the broader investment space, but really on direct lending and alternative credit. And one of the specialists in that space, Ares Management, still seeing opportunities out there. That includes, well, even helping buyout shops shore up the companies they back against higher interest rates, while at the same time providing cash back to fund investors without necessarily having to sell those underlying assets. I'm pleased to say that the head of Ares Credit Group is joining us right now. Kip DeVere live here on the Milken stage. Kip, great to see you.
Thanks for having me.
Where are you finding opportunities right now?
So we're actually finding a pretty good constructive backdrop for everything that we do. Just as a reminder, credit, real estate, private equity, secondaries, and we play in a host of different geographies. Obviously, our largest business in the U.S., but we're in Europe and we're in Asia as well. So I think my quick takeaway is we're actually seeing the economy better than we might have expected at this point.
U.S. economy? U.S. economy or everything?
I think the global economy is saved for a few, but the U.S. economy in particular, for sure. We've been questioning a little bit, isn't transaction activity down a lot? And then when we go back and look at the deployment that we've had in our businesses, it would actually tell you that we're doing fine. To me, that means we're picking up market share and just continuing to be more and more relevant in all the businesses that we're in.
With some of those transactions, are we primarily talking about kind of mid-tier, middle market type companies or something bigger?
Yeah, I mean, we have a pretty broad credit business. So today it's about $300 billion of assets in 5 different businesses. I mean, it ranges from the lower middle market, which can be probably as small as 20 million of EBITDA, but increasingly we're able to finance these much larger companies that you all are writing about at Bloomberg. So, multi-billion-dollar deals as well.
What are those deals looking like? And I'm curious, in a higher rate environment, how that kind of impacts the financial structure a little bit.
It's so loud in here. Can you say that again?
So what's kind of, in terms of a higher rate environment, how is it impacting a little bit the financial structure of the deals? It is really loud.
I think, look, the good news is a higher rate environment means that assets are worth less. And that's true real estate, corporates, et cetera. So you're starting to see a reduction, I'd say, in purchase prices on corporate assets and certainly on real estate. And of course, with higher rates, that helps because you don't need to set these companies up with as much debt.
What kind of deals are getting done in real estate in particular? I think we've had a couple of conversations on the residential side of things, also on global properties in general and office as well. So what kind of deals are happening? Are you finding of interest in real estate?
My day-to-day is not, frankly, living in the real estate business, but I think if we surveyed everybody in real estate at Ares, it's really important that you don't take too broad a brush on real estate, right? So office is very, very different than we think industrial and multifamily, or most of our portfolios are, both on the lending side and on the equity side. I think office is tougher, and it's a bit of a we'll see. Although, we're all in New York. You've probably read the articles. The A properties in New York are fully leased up, and the B properties are not. So I think it's just, you really have to be a good asset selector and a good lender going in and doing the fundamental work, depending on the asset class and depending on
really know it, yeah.
Well, with some of the strength we are seeing in the economy, and more importantly, some of the stability we're finally seeing in the rate environment.
Yep.
I mean, and this goes beyond just real estate. Overall, is that helping facilitate more transactions?
There are all sorts of, and we talked about this on our earnings call last week, there are all sorts of contributors that should lead to increased deal activity. So we think plateauing, of rates, or the lack of continued rise of rates is one. We've talked about this a lot publicly, that most investors, our LPs, are really have significant appetite to get capital back.
Yeah.
And there's a lot of money in the ground in the leveraged finance space and in private equity and elsewhere that's going to need to compel transaction opportunities. The economic backdrop being good, obviously, is one of those as well.
What does fundraising look like for you right now? Is that more difficult?
I shouldn't really talk about it in any specificity, but we mentioned this on the earnings call last week. We raised $17 billion of capital last quarter at Ares, and about $14 billion of that was in credit. So the good news is, a lot of the places where we live, it has not been any harder. I think there's a real change in the way that investors have approached their portfolios, public versus private, liquid versus illiquid, et cetera, and that's continuing to create tailwinds for us.
You know, Kip, $14 billion on the credit side, that's a nice little bucket, if you will, to put to work, right? $14 billion. How quickly do you think you put that to work in this environment, or how quickly do you want to?
I mean, we try to be thoughtful, obviously, as we raise capital, and the way that we justify capital raises with our investors is certainly with our belief, and we think their belief that we can obviously deploy along with what we've raised in terms of the capital. So I think if new deal activity really does pick up a bit, it'll be even easier. But we've been hitting our deployment targets, as I mentioned earlier, regardless. So we wouldn't be raising the capital if we didn't think that we could deploy it over a reasonable period of time. That being said, having dry powder is really nice as the markets are always transitioning.
Kip, what are investor expectations? I talked a little bit about the higher rate environment. In an environment where you can get, 5% on a 10-year, it's just like, I think the rethink about expectations of what investors want longer term.
Oh, look, I mean, the reality is in a lot of the businesses that we're in a spread product. So we need to provide, attractive risk reward relative to the risk-free rate, and that's how we think about things. So there's no doubt, and base rates going up has helped because a lot of what we do is floating rate assets. But the private markets in particular have to shift with the risk-free rate and with the public markets.
I want to talk about Ares as a business. You guys have been expanding into Asia. You have a new new wealth management offering here. First, talk about Asia and the opportunities there. Is that where the most of the growth is going to be? Do you think so?
Well, I mean, we have some really well-established platforms in Asia. It obviously represents a tremendously large market, but I'd say in our businesses, it's probably less sophisticated than certainly what we have here in the U.S. and also in Europe. So I just view it as earlier stage. There we basically have a credit business that does performing credit and also special situations, and we recently acquired a private equity manager based in Singapore there that I think should provide growth. I think in Asia we're focused on other areas, whether it's real estate, infrastructure, and real assets as we try to grow into a larger footprint there.
But, it's interesting. We bring up Asia, and, obviously you go back a few years, and I feel like we always talked about China, but Japan is all of a sudden, especially here at Milken, we're hearing many investors bring up the Japanese market, the opportunity that it presents for you guys specifically in the area of credit.
Yeah, I mean, we think, look, the reality is it's an enormous economy.
Yeah.
With a very sophisticated business community that is massively underallocated relative to the rest of the world in terms of alternatives. And the reason for that is obviously just the required rate of return that they need over there has historically been lower based on the way that their economy works. That's probably changing, but I think they're also getting more sophisticated and frankly more interested about wanting to really roll up their sleeves, do the work, and get invested in alternatives. And when you talk about a 1% shift in the portfolios over there from traditional to alternatives, the numbers get very large very quickly.
Yeah, what is the differential right now in terms of the allocations that you see to alternatives in the U.S. versus, say, in Asia, particularly Japan, or even in Europe?
Yeah, I mean, I think it depends who you are, whether you're, a pension versus a sovereign and an endowment, which will typically have a much, much longer range and then much higher allocation to alternatives. The allocation in Japan today is virtually zero.
Yeah. What about how you're structuring deals right now? There's been a lot of discussion about how alternative asset managers, private credit funds are partnering with a lot of the bigger money center banks, more traditional banks, to get deals done. I mean, they're basically calling you, and not necessarily you going to them. Is this going to be kind of the structure of deals for the foreseeable future?
I mean, I think because on the new transaction front, we're a natural partner for banks. We obviously buy loans and buy high yield and syndicated transactions from banks in the regular way. We're also a good junior capital provider, which is a business that they have had less and less interest in over the years. But I do think over the next couple of years, banks will keep rationalizing the types of businesses that they're in and will probably sell a portion of this business or that business. We think we can be very good buyers of those businesses.
private credit, is it getting crowded at all? It feels like everybody, even this week alone, we're like different tie-ups and link-ups, if you will, between traditional finance and some of the private credit players.
I've been doing this for 20 plus years, so the market has just grown substantially, right? So when we started, we talked about financing $10 to $50 million EBITDA businesses. As I mentioned to you earlier, we can now talk to much, much larger companies because of our capital base. We think it's a business that actually gets easier as you get larger, i.e. there are real scale advantages. So is it more crowded? Is it more discussed? It is. But when you look at the risk reward and you look at the results that we're generating for investors, I think they're still pretty compelling.
What can you give us in terms of insight about returns to investors? Returns to investors.
Very little.
Come on.
Are they being more demanding, though? I mean, we've heard a lot. We've talked to LPs ourselves, and they've talked about this idea of either wanting a quicker return of capital or wanting to see better returns than what was promised when they first entered into those vintages.
Yeah, I mean, I think, and I just got here last night, but apparently everyone's been talking about DPI, which is obviously how much capital you can return to your LPs. I think what the LPs want first and foremost today is more return of capital because they're mismatched in terms of how they want to be able to reallocate within their portfolios.
Yeah.
I don't know. Our LPs are always tough on us to generate good returns. If we don't generate good returns, they'll fire us or they'll hire someone else.
Good stuff.
Well, can I squeeze one in?
Please.
Just about your existing portfolio there. I mean, I know you guys kind of rank those. You have that whole system. I think it was like 1 to 4 or something. Like when you talk about the quality of what you already have, are you comfortable with it?
Yeah, we've said this over and over here and over the last couple of months. Things from an economic perspective are better than we probably would have thought.
Yeah.
Defaults in loan and alternative credit portfolios are still materially below historical averages.
Yeah.
I get the question a lot of, do you expect they'll go up?
Yeah.
And if rates remain higher for longer, the answer is probably yes.
Okay.
But we're not forecasting, anything other than probably a traditional credit cycle. And that should lead to, I think, just dispersion of results. We think the really high quality firms with great origination and great risk management will continue to succeed, and the smaller folks who haven't been in the business quite as long could have a harder time.
All right, Kip, we have to leave it there. We're going to try to get you to bump you to the front of the line for Magic Johnson here. Kip
cool.
over Ares Credit Group here. I want somebody to bump me into the front of the line. I don't know. I mean, it's a big deal. You should get right to the front of the line. All right, I think we got to go back to your colleague, Tim Senator. Is he really a nice guy?
He's a fantastic guy. He's really nice. You're nice and he's really nice. All right, let's head back to New York and get a check on the trade. Tim, over to you.
You can come back, Carol. Stocks were higher across the board earlier, struggling, though, to gain traction as we get later into the session. The S&P 500 did briefly move past 5,200, was up around 0.4% before saw a bit of selling late in the afternoon. Right now, the Dow higher by 0.1%, the S&P 500 higher by about the same, while the NASDAQ is lower by more than 0.1%. Yield on the 10-year, 4.46%. Some breaking news just in the last hour or so. The U.S. has revoked export licenses that allow Intel and Qualcomm to supply Huawei with semiconductors, this according to the FT, citing unidentified people familiar with the matter. The U.S. Commerce Department's move affects the supply of chips for Huawei's laptop. Shares of Qualcomm took a leg lower on the news, down by 0.5% right now. Also weighing on the S&P 500 and NASDAQ 100 today, Tesla shares lower after investors learned that the company is facing increased federal scrutiny of autopilot. The National Highway Traffic Safety Administration is looking for information that will help determine whether the company's biggest ever recall made its driver assistance system safer. NHTSA opened a recall query last month after 20 more crashes occurred in vehicles Tesla tried to fix with an over-the-air software update in December. Shares also did move lower after we got some data from China that showed shipments from its Shanghai factory dropped 18% year on year in April. In other news, Palantir shares having their worst day in nearly 2 years, even after the company boosted its revenue forecast for the year. Expectations were high going into the print. Palantir shares down by close to 15%. We got much more coming up live from the Milken Institute Global Conference out there in Beverly Hills, California. Don't go anywhere, because coming up next, Katie Koch is going to be out there in Beverly Hills. She's the CEO of TCW. She's going to be joining Romaine Bostick and Carol Masser at the Beverly Hilton. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to our live coverage of the Milken Global Investment Conference. I'm Carol Master alongside Romaine Bostic, and we are just watching everybody kind of channeling in to see Magic Johnson. So we'll see what he has to say at the event. We do want to remind you that a recent Bloomberg News morning consult poll of voters in 7 battleground states this month showed that more than half expect the economy to be worse by the end of the year. And at least half of voters say they expect the inflation rate and borrowing costs to rise even higher than they are now. Well, we're going to get another read on inflation next week. High prices are causing some consumers to change their spending habits. For a read on that and more, we caught up with the CEO of Whole Foods, Jason Beekle. We talked with him earlier here at Milken.
For me, one of the most important areas for us to think about is how do we protect our food systems into the future and making sure that our future generations can enjoy the products that we know and love today. And as Whole Foods Market,
That sounds kind of dire. Wow. What do we need to protect? Are you talking supply or quality or both?
Yeah, both. One of the things that we're currently in a situation of is the nutrient density in our soil today is not in a state to sustain itself for future generations. So the products that we know and love are at risk of not being available for future generations. And so for us as Whole Foods Market, one of the things that's been very important since our very first store that we opened in 1980 is helping support the environment and areas like regenerative agriculture, which is something we're really passionate about today. Going back to our very roots, we led the industry in organics, and what we want to do is continue to make sure there's awareness for our consumers that we have to protect our resources to ensure that our food systems are protected for future generations.
Did you know Jason was a farmer at the age of 7, I believe, doing gardens?
Is that right? I started gardening, when I was 7.
So you know a lot about agriculture and regenerative agriculture. You also know that trying to do that on a national scale is hard, right?
Very difficult.
Buy a lot more local, don't you?
Not necessarily just local, but a big part of this is making sure that we're doing the work to protect our soil and ensure that it can support regenerative into the future. And one of the other things that I think is really challenging for customers is understanding the difference of various climate-friendly agricultural practices.
But how are you doing that? Are you working with your suppliers? You're working with the farmers? Or are you going in directly and doing this yourself?
Yeah, so the reality is it takes an entire network of stakeholders in this space to help support this work. First and foremost, we're working with our suppliers who are working with their farmers to help support this work. As we led organics since our very first store, this is something that's really part of our DNA. Being able to work upstream and supporting processes that can help take these practices into fruition.
It's interesting, like organics, they're starting to mark things, right, that are, I think, regenerative farming. They're starting to let consumers know that when they buy something that's the way.
Yeah.
One of the things we have to ask you is, how is the consumer doing? And what is, once again, the consumer of Whole Foods?
Yeah, so I think the consumer right now is wanting a balance of quality and value. And that's something that we've been really focused on as Whole Foods Market. One of the things that we're really proud of is the work we've done investing in our price points so we can be accessible to all customers. Since being part of Amazon, this has been a key initiative for us to help improve our price points. Recently, we've done a lot of work in helping also amp up the number of promotions that we're doing. We know customers right now are looking for value, so we've increased our number of promotions. We made investments in areas like our opening price point and like our 365 items, so customers customers have a great opportunity
Market on
for
close
value and quality at the
imbalance.
same
3
time.
spots, 3 billion to the buy side.
Label, the 365, because that's been a big initiative in bringing kind of that average price point down in the stores.
Yeah, absolutely. So for us, this has been a key way to connect with customers. We've continued to expand the number of items across all different parts of our store, and also providing choice. So we have 365, where you can have conventional product, as well as 365 organic. So giving customers choice and options along the way.
And that was Whole Foods CEO Jason Beekle earlier today. Well, yesterday, a deal between PNC Financial Services Group and the TCW Group on partnering to deliver private credit solutions to middle market companies. Private credit, there's a lot going on, continues to be. Great to be talking again with Katie Koch. She's CEO of the global asset management firm TCW, which manages approximately $200 billion in client assets. You've been busy.
Thanks for having me on. Yes,
nice to have you. Tell us about this deal with PNC.
Yeah, sure. We're just by background, you mentioned TCW as a $200 billion global asset manager. We were an early entrant to private credit. That is led for us by the extraordinarily talented Rick Miller, our CIO of private credit. A 23-year track record in that asset class of conservative lending that's allowed us to outperform with a low loss ratio. And we're really proud to be partnering with PNC, which is, of course, one of the leading U.S. financial institutions. They're ranked 4th in middle market lending. They have an extraordinarily talented and tenured management team, a strong balance sheet, and great client relationships. And this has been a partnership, just to answer a question how it came about. It's actually 15 years in the making. So we've worked together very closely for a long period of time. Over that period, we've done 40 co-financings. And it is also true that they are our #1 fund finance partner, which means that actually PNC had to underwrite TCW and our capabilities in order to provide leverage to our funds. So this is a very, very strong partnership. And I wanted to just end, Carol, by saying that this is different than other partnerships that have been announced. And this strong relationship we have with each other has allowed us to create something really differentiated for 3 quick reasons. The first is that it's very middle market focused. So we're going to target loans to companies with about 15 to 75 billion of EBITDA. The second is that it's a shared investment approach. So we're both putting in investors to this partnership. We're going to work together on the underwriting and the origination. Of course, it will be shared by Rick, and that's because we have a shared credit culture of conservative lending that allows us to share the investment approach. And then finally, it's shared economics. We're targeting $2.5 billion of equity this year, and it will be strong contributions both from PNC and from TCW and our affiliates. So that economic alignment aligns our interests with PNC and also, of course, with our clients.
So, Katie, targeting $2.5 billion, how big could this partnership get, though?
We think this partnership could expand significantly over time, and that's important because private credit managers and banks, we think those partnerships with us and others will continue because banks are under some regulatory pressure, and private credit managers, they have the capital to allocate and to lend, and banks have great origination capabilities, and those two things are going to have to cooperate so we can continue to put credit out into the U.S. market.
What does significantly mean?
I'm not going to give you the exact billions of dollars, but I will say that
double from the initial 2.5 or many times?
Actually, for our credit alternative platform broadly, we've already doubled the AUM of that platform over the next couple of years, and we're expecting it to be many multiples over that. And this is going to play a very important role in the growth of TCW's alternative credit platform.
Carol mentioned at the start that you've been busy. Another, I guess, deal, if you will, was a conversion of 2 mutual funds to ETFs.
Yes.
In the AI space, talk a little bit about why you made that move.
Well, first of all, mutual funds in general, we think that they have a place, will continue to have a place in the market, very important part of our business.
It's still a big part of TCW.
Very big part of TCW, and will continue to be a relevant vehicle. It is also true that clients are looking at the exchange-traded fund vehicle because of the liquidity, the tax efficiency, and the transparency and ease of trading of those vehicles. And so we are going to convert several funds and launch new ETFs. We did one in AI. I do want to emphasize, I am a believer in generative AI. We have been managing AI strategies for 7 years. So this isn't something we just launched because ChatGPT is cool. We saw that transformative technology almost a decade ago and launched a strategy on that. We're investing in the technology enablers of AI, and also the companies that will benefit.
That's what I'm curious is what is a portfolio of AI stocks these days? Because if you ask someone else that question, they would just say, well, NVIDIA, maybe Microsoft, and that's it. I assume this is broader than that.
We have some of those in there. So these companies that are driving the technology of AI, but then also the companies that are the beneficiary. And what it's actively managed, and it's relatively focused. And so what we're going to do is shift the shape of the portfolio as that narrative of AI changes over time. I do just want to say one thing, because I think it's important to be balanced on these issues. I do believe in the transformative potential of AI. But it is a story that's going to play out over the very long term. And so a vehicle like this is appropriate for people who can take that long horizon. And this is said a lot, but I think it's a very good reminder. The internet was also an incredibly transformational technology, but that didn't happen in year 1, in year 2, in year 3. It took 20 years. But if you stuck with that narrative for a couple of decades, and many of our clients have that type of durability of capital, it was one of the greatest wealth creation opportunities in the U.S. economy. And so we are excited about it, but balanced in telling people this is a great vehicle. Be active, be selective, which we are. Be with a manager that can evolve with the narrative, but also be long.
AI is such a part, as you know, of our investment narrative, just generally speaking. Take the big, broad macro, Katie. What are you seeing right now? How would you describe the environment?
I would say that we are long dispersion. The idea of dispersion across all of our portfolios, it's really hard to predict this in short increments, but what I would say to you, whether it's private credit or it's public credit, we think that the spreads, and I'm going to talk about public because it's just a little easier to point to valuations, which are at record tights in credit markets. In their post-global financial crisis history at record tights. That valuation is inconsistent with some of the obvious challenges that we have in this economy, regardless of whether or not we get a recession. Let's take the scenario where we muddle forward and have some type of soft landing, but rates we all believe will stay elevated because inflation's still pressure. That could create a credit event, right, when rates are this high. And these companies, we're already starting to see stress in certain parts of the credit market, not priced into credit spreads. So in our liquid portfolios, where we do take macro views, which is in the core plus space. Remember, that's people's retirement money. So we're managing that for their retirement assets over many decades. We're conservatively positioned. We're overweight agency MBS, which is carrying over the index, and we're being very patient. And eventually this is going to break. And when it does, we'll lean into those specific credit opportunities. If on the other hand, we do get the recession, then we're going to have a credit event anyway in both public or private markets, and that will create dispersion.
Are you suspicious that the default rate isn't something different than what it is today?
So this is a good point. Default rates are actually where we would expect them to be in the traditional levered loan market. They're low and actually went down in the first quarter in the private credit market. And I'm glad you asked that because we think that's really masking some serious liquidity challenges in the private credit market.
Yeah.
And the obvious question is why? Why is this happening? Well, I would ask first, why is there stress? The reason that we think there's actual stress that's not showing in default rates yet is because from 2019 to 22, these capital structures were highly levered with the view that rates would stay zero forever.
Right.
And that didn't happen. And now math's taken over and they're under pressure. Now, why haven't the defaults gone up? My answer to you on that is that if you look at last year, the amendments of loans were 3 to 4 times normal. And we don't generally amend loans when things are going well. So this cannot be extended forever, and eventually those default rates will rise. I'm going to end with bring it back to dispersion. If you look at the last 15 years in the private credit world, the dispersion between the top and bottom quartile manager is about 15 basis points. This is not high dispersion. That number could 10x or more over the next couple of years as these default rates rise. And that's why you obviously want to be with a manager like CW that does conservative lending, diligence, very high levels of diligence, and very significant underwriting. And we feel really great about how we're going to manage this environment for our clients.
All right, Katie, we have to leave here. Great to talk.
Thank you so much.
Taking time for us. Katie, TCW, taking time to talk here on the Milton.
Yeah, looking at the markets bouncing around here. Looks like we're at about 5,200. We're not going to make it here with just a few seconds of trading, but we did have that on the S&P 500 a little bit.
Talk about sustainability of that out here, and I think that's what a lot of folks want to see. Tim Stenevik has been keeping on that. Now, back to New York, Tim, counting us down to the bells.
Yeah, just about 30 seconds to go. We're going to start hearing those bells very soon. But as you mentioned, stocks bounced around a bit on this Tuesday afternoon. We did hit 5,200 on the S&P 500, but we are not looking like to be closing above that on the day today. Also did see later in the NASDAQ move lower from gains to losses just this afternoon. All right, as we get settled on this Wednesday, looks like Dow Jones Industrial Average will be higher by just 1/10 of 1%. We can go and round that up. The S&P 500 higher by just over 1/10 of 1%. While the NASDAQ 100, NASDAQ composite, I should say, was closing down by 1/10 of 1%. Seeing a little bit of outperformance like we did yesterday on the Russell 2000, that higher by close to 2/10 of 1%. Using the IMAP function for the S&P 500, we can see the different areas of the S&P 500 that did move higher lower today, led by materials, utilities, and consumer staples. Materials higher by more than 1% today to consumer discretionary, rounding out bottom lower by a percentage point as information and technology. I do want to talk about a couple of the gainers and decliners on the day today, starting with Apple, among the best performers in the S&P 500 today, higher by more than half a percentage point, 4/10 of 1%. This after the company announced a larger version of the iPad Air, aiming to reinvigorate their iPad lineup. It's been a couple of years since they've gotten an update to the iPad. This is the first design version of the iPad Pro since 2018. The new model, as you may guess, thinner, crisp screen, OLED technology. Also got a faster M4 chip, can handle AI tasks. Also want to check in on shares of Alphabet because they were higher all day today. So they did move higher after Google rolled out a new version of its low-end Pixel smartphone. It's called Pixel 8a. Starts at $499. Comes a year after the 7a model. Funny how that works. Adds a faster processor, a brighter screen, also an option for double storage, and AI features for the camera. Starting to get a theme here when it comes to new hardware from these companies. Everyone's leaning into AI. Alphabet to take on Apple and Samsung. Also, as far as decliners go, Walt Disney falling most in a year and a half after the company reported a not-so-great outlook for growth streaming subscribers in the current quarter. Also said that visits to theme parks are expected to moderate from peak post-COVID levels. A reminder, Bob Iger is back, and he's in the midst right now of a years-long effort to reorganize Disney in the age of streaming, as the company does lose subscribers from its cable programs. He's been under pressure from activist investors. He's aggressively cut costs. He's propped up ESPN and pumped life into Disney Studios after some box office misfires. Also, checking in on shares of Palantir to the downside today by the double digits, having their worst day intraday in nearly 2 years. This after the company boosted its revenue forecast for the year. Expectations were high. The stock did triple in the past year. It was up around 40% going into the report, which came after the close yesterday. Palantir's roots are in government sales, develops software and analysis for companies and government agencies. Company CEO, though, says demand from U.S. companies for AI software now drives most of the business. We do have lots of, coming after the bell, we have some earnings. I'm going to bring those all to you live as they do come across. Carol and Romaine, back to you at Beverly Hilton.
All right, we continue our special coverage here from the Beverly Hilton. It is the titans of private credit circle the hallways here of the Beverly Hilton, the legends of private equity. They want to remind you, they haven't gone anywhere. If anything, they've actually graduated, Carol Masser, to the next phase. At least that's the view of our next guest, who says PE has now evolved into a